companies executing the large BSNL deal. In fact, it appears that this BSNL deal, which has contributed to the company's top line, could have also hurt the company's margins. North America has been under pressure, so that's down 3.5%. So that's disappointing. Though Europe and UK, have showcased growth. The good thing in the numbers is that BFSI continues to show recovery. Remember, last quarter we saw the early signs of a BFSI recovery. It's further strengthened. So quarter on quarter, the financial sector growth has come in at 1.9%. So that is a positive. Deal wins largely steady sequentially. Hiring has continued for the second consecutive quarter, and attrition has been stable at 12.3%. So all in all, good top-line growth driven by the India business, but margins are a bit disappointing and they have missed street expectations.
Reema, thanks a lot for that. Keep an eye out on the reaction on TCS in today's trading session. Time for a short break. Up next, we get your cues from the commodity side. Stay tuned. We'll be right back.
As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Start by talking to you about that. In Mr. Tata's own words, he said he would like to be remembered as someone who made a difference. Nothing more, nothing less. What do you believe has been the impact that Ratan Tata has had on India and on the House of Tatas?
Well, I think, Shirin, to start with, it is a sad moment to lose someone like him. But I think it's also a life to be celebrated. I think that very few people can make the kind of impact that he has made in one lifetime. You know, his footprint, as you know, goes far beyond.
Welcome back. Now, the state of Florida is reeling in the wake of Hurricane Milton. Authorities say that 10 people have been killed while millions remain without power. NBC's Jay Gray reports from one of the areas in Florida that bore the brunt of the storm.
We're getting our first look right now at Fort Myers Beach, an area that really took a hit from Milton, one of the first to see the effects of this storm, and you can see what it did to this resort. Water pushing across the giant beach here into this area, knocking down fences, pulling up trees, tables scattered, chairs scattered. It is a mess here, and it's a mess that continues across this barrier island. We talked with someone who rode out the storm. Here's what they had to say about what it was like at the height of Milton's attack.
Well, it was bad. Once you realized what was happening, it was very scary. It's just, I mean, you know, the wind's violent and the thumping on the roof, the limbs hitting the roof were like boulders.
Yeah, now things have calmed down. Obviously, we've got crews scattered across the strike zone right now. Line crews to reestablish power, crews clearing away debris. In some of the areas, restoring that power is going to take not days, but perhaps a week or more. And then the work begins again. This area hit with so many storms over the last several years. They get back to work recovering after Milton. That's the latest right now. I'm Jay Gray, NBC News, Fort Myers Beach.
And this hurricane has been one of the factors while oil prices have seen a rise overnight. And Manisha Gupta is joining in to tell us more on that and other cues from the commodity space as well. Manisha, good morning.
Normal, thank you for that. Well, yes, 3.5% of gains in the crude oil prices overnight. Well, there are a couple of reasons for that. And as we talk about the Hurricane Milton, 3.4 million houses out of power and 25% gas stations out of gasoline is definitely one of the factors that is keeping the prices on the higher side. And then it also is about the concerns over Middle East supply disruptions. There are statements from Israel saying that any response to Iran would be lethal, precise, and surprising. And then you also are looking at the rising fuel demand in the U.S., and that clearly has been supportive. The U.S. crude inventories, while have gained, and that is the reason markets haven't seen a run up yet to on the higher side towards $80 a barrel. But there has been a gain across metals as a sector as well. The kind of decline that we saw in the last 3 days seems to have paused. We've seen gold prices edge higher from the lows of 2,608. This is because the U.S. inflation has eased, and there has been a surge in unemployment claims in U.S. supporting gold there. Silver also gained 2% overnight. Copper prices gained up by 1.5% overnight as well. There is a lack of any big additional measures in the extraordinary briefing by China Economic Planning Agency, and that seems to have led the gain.
Manisha, thanks a lot for that update. All eyes on oil prices after that overnight surge. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for the final trading day of the week.
I think his legacy as a humanist, as a philanthropist, will probably be remembered even more than his legacy as just being an industrialist. I think that his ambition or his dream of making a difference, he's done more than more than one can imagine to do that, to make a difference. He's made a difference to Indian industry, to society, through all the charitable and philanthropic work that the Tatas do, some of which I know he was very involved with himself. All very quiet, didn't speak about it. You know that he was extremely low profile, shunned any kind of attention. And he was a true son of India.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, good morning.
Hi, good morning. And today is also the last day of Navratri. Tomorrow we celebrate the Sera. So here's wishing all our viewers a lot of health, prosperity, many good starts.
Well, that's right. And I don't know what's more tricky nowadays, right? The markets or the weather.
Yeah.
Last night there was a severe downpour. I was wondering whether or
Lightning, thunder.
It was flooding, in various pockets of Bandra.
I thought the monsoons are back. They thought they would retreat and then they're back.
And mind you, it's not early October, it's October 10th, when we're getting these sort of rains. So quite something last night, but good to see stability and the weather gods are clear.
On the way here, my daughter was with me and I said, well, there's the hurricane in the US has also made landfall. So she with a poker face told me, what do you expect with climate change? Such.
Even I.
So kids nowadays.
Wise words.
Absolutely. And so we'll get to the hurricanes and the lightning and thunder as we go along. Will we see any of that in the market? I don't think so. I think we have a very, very flattish kind of handover from Wall Street last night. But I want to just start with just one line that the domestic equity money, that freight train of money is unstoppable. And we got the number yesterday around the last hour or so, and that continues to come in. The SIP number is 24,500, which means it's basically hit another record high, right? So I think everything you throw at this market, it's held on steady because the local money has been unshaken, right? That crowd, if you could describe the local money as just one large pool of long-only fund, they've been constantly sending checks in. And I think that is the reason why markets have been what they have. So we'll come back to this in greater detail. As I said, from last night, no big overnight cues. US equities mildly lower. S&P was down about 0.21. Yields and dollar are flat, not very much at all. US core CPI came in slightly higher than expectations, but actually there was a whisper number. It was in line with what the whisper number was, 0.3 compared to 0.2, which was expectations. Lots of Fed speakers, many of them were voters on the FOMC, the rate decision. And there was one particular gentleman who said that he's okay if the Fed did not cut in November. He's okay with a pause in November. So, there was a bit of outsized focus on that one statement. But there were others who said, well, they think inflation is coming down. But I think this, because it was out of consensus, is what stood out. Market expectations are still for about a 25 basis point cut in November. Oil prices have jumped. So they were cooling off a little bit, but 3.5% higher. About $79 a barrel is where we are at as far as Brent is concerned. And, markets are watching any escalation from West Asia, from the Middle East. Late last night, there was a meeting in the Israeli Security Cabinet. It's strange, right? Israel is saying, well, we'll escalate, but it won't turn into a war. Iran is saying, well, if you retaliate, we will retaliate, but we don't want war. But I don't know if it's blind leading the blind or, it essentially is going to be as planned and as smooth in terms of, both striking each other in a coordinated set of actions, well expected, well anticipated, and we move on. We'll have to see. You got US third quarter earnings, which kick off on Friday, which is today. So JP Morgan and Wells Fargo, expectations are that they will report good numbers. So these are cues which will be important when we come back on Monday. China, on Saturday morning, we'll have the fiscal announcement, right? 2 trillion, 3 trillion RMB, the size, scale of what they want to do. But one thing is clear. China is once again, after a very long time, being reactionary to a fall in equity markets and generally a fall in risk assets. We've not seen that at least for the last 10 years. So maybe, that's something to watch. Just to circle back the levels, not very much different from where we left off yesterday. The Nifty major hurdle is at still the 40 hourly exponential. For the last 2 days, day before yesterday, we got to it and then sold off. Yesterday, we didn't get to it. But 25,144 is that level now for the Nifty. And further upside, if we cross this and we sustain above this 40 hourly, is the 50 and the 61.8% retracement, which the numbers don't change. We put these out yesterday as well. On the downside, the low from 2 days back, I think has to remain unbroken for any of this to work out. 24,694 is where that number is at. On the Nifty Bank, we closed higher and we did actually end around that 40 hourly exponential, 51,558. So number one agenda, of course, is to build on it and sustain above it. And if we do that, you're essentially looking at the same 50 and 61.8% retracement levels, 52,330 and then 52,835 on the way down. I mean, 50,194 was the low, but that's a range which the market should not break down below. Yesterday, Nifty Bank had it good. Lots to track. TC's reported numbers as well. But overall, looking at the picture and looking at what is lined up ahead of us, maybe a little bit of a quieter session, at least as far as indices are concerned. We'll get to stocks in just a bit. GIFT Nifty on your screen. Rima.
Hi, Prashant. So just to put some numbers on board, first the flows figure for yesterday. So DII's net bought about 3,878 crore in the cash market. The FI sold more than 4,900 crore. But look at the money which has come in and out for the month of October. Now, the FIs have been selling. In the month of October, they've sold 54,000 crore rupees. The DIIs have matched that, almost penny to penny in terms of inflows. But yet, the outflow from the FIs have been so strong that the Nifty is down 3% in the month of October in the first 10 days. The mid-caps are down 2% and the Nifty Bank is down 2.7%. So despite the DII inflows matching the FI outflows, markets are still lower. Now getting back to IT, and the question is, will IT sour the mood today? Because TCS reported a margin miss. Their international revenues declined by 0.4%, and it's the first time since COVID that the international ex-of-India business has seen this kind of a decline. So that's disappointing. Tata Elxsi reported a muted 0.2% constant currency revenue growth on a quarter-on-quarter basis. So is this a TCS-specific issue? Because TCS is more of an industry bellwether compared to Tata Elxsi. But results next week, and most of them will be reporting next week. It starts with HCL Tech on Monday. On Thursday, Infosys, Wipro, LTI Mindtree, the other three, Nifty constituents in the IT pack report numbers. On Friday, you've got Tech Mahindra. So the picture will be clearer. Whether the recovery in IT is delayed because we haven't seen signs of it in TCS, or it's a TCS-specific issue. That said, when it comes to TCS, bear in mind that in the last 1 month, TCS has already underperformed peers by falling nearly 6%. So is part of the muted numbers, bad news that we've got from Q2, priced in already? Also want to put on the table the movement in the individual IT stocks since 1st of June, which is when that mega IT rally began. Well, TCS compared to the others hasn't performed as well. So TCS since 1st June is up 15%, but Infi, HCL Tech and LTI Mindtree have a gain of 35%. So TCS has not just underperformed in the last 1 month, but even in the last 4 months since the IT earnings began. And also just one final word, next week, I think it's going to be earnings full throttle, right? So Prashant spoke about US today. We've got Wells Fargo, JP Morgan. Saturday, we'll watch for, the China-Beijing stimulus. But pull up next week's earnings announcement. We've got Reliance, we've got Bajaj Auto, Axis Bank, Nestle, ICICI Lombard, HDFC, AMC, important mid-caps like Havells, Polycab. So lots to track.
Well, that's right. And this morning, in fact, we are bracing ourselves for a bit of a weakish start because of three big cues. One is the tech stocks. They could be a little bit under the weather post the start that we have seen from TCS. You also have the Fed speak that came in, and that wasn't very, very encouraging because suddenly there are some doubts about the November rate cut. Most, if you look at the tracker, they are still leaning towards a 25 basis point cut, but overnight there were some jitters on that front. And crude oil prices, well, it's back closer to around $80 per barrel. So that's why a bit of a softer start is what we're likely to see. The big question is what's going to happen for tech? Because yesterday there was a sense, if you look at the intraday chart, the index itself ended at the low point of the day. So the street was sniffing that maybe TCS could come out with a bit of a disappointment. And as Srima said, getting into its numbers itself, TCS has been an underperformer. So will this dip that we'll see on TCS as well as on tech get bought into? JP Morgan, well, they came out of the note, and towards the end of the note, they say that in case there's any sharp correction, they'll be buyers on that stock. So I guess the street is buying, tech more for FY26 and post that. If that's the case, this dip gets bought into today. So we'll keep an eye out on that front. The Nifty Bank, that found its form yesterday. It was very, very strong in trade yesterday, and it crossed both the 100 as well as the 50 DMA. the bulls will want to see some follow through. It could start a little bit soft, but then that dip needs to get bought into. And the good news yesterday was private banks came back to the party. HDFC Bank, Kotak Mahindra Bank, and they have been lacking in terms of participation. So both those two perform. This holds the key for even today's trading session. What about positioning on index futures? Both of them are going their own ways. The FIs, they added some shorts in yesterday's trading session. The clients, they added more longs in yesterday's trade. Now, pulling up the options data, we started a new, new contract for the next weekly expiry. And the 25,000 call, 25,000 put. So recall it, if someone is writing both these two strikes, it's a short straddle in place. That is, you pocket the premium of close to around 350 rupees or thereabouts, and you get a broad range, which is closer to the lows that we saw earlier this week, 24,650. While on the upside, around 25,350. Those are the markers on the Nifty in the near term. And I think the markets could spend a few sessions in this band itself. The stocks that I'm focusing on, one is Bandhan Bank. There's an update that's come in there. They have appointed a new MD as well as CEO. And the banker that comes in from the PSU space. He has had stints at SBI as well as IOB, and the street will like that because of a PSU banker coming in with a good amount of experience. That's a positive. The other factor is that they had claimed for a particular amount. They've got close to around 1,300 crores, which is much lower than what they anticipated. But at least there won't be any further provisioning. So Bandhan Bank is the stock that I'll be tracking. The next one I'm looking at is BSE, being the big outperformer this week itself. And yesterday you had news that NSE, they're going to be retaining Nifty as the weekly expiry contract. Well, this could tilt the scales in BSE's favor because most bulls on NSE thought that maybe they'll opt for Nifty Bank. But they've gone with the Nifty. So that's why BSE could accelerate their market share gains. I'll keep an eye out on both these two stocks, Bandhan Bank as well as BSE.
Interesting. Thank you very much for that, Nigel. Let's get to the equity calls then. Chris Wood of Jefferies says, greed and fear continues to believe the biggest near-term risk to markets remains geopolitics. Still, there is no doubt that the main topic of discussion this week in meetings with investors in London has been about China. He says there is no doubt that the Chinese authorities have succeeded in raising expectations, but still, for greed and fear, the key near-term issues are the details of the coming fiscal stimulus and the details of any bank recapitalization. He adds there have been press reports that China is considering injecting up to 1 trillion yuan of capital into its biggest state banks to increase their capacity to support the economy. In the meantime, he says any pullback ahead of these announcements should be viewed as an opportunity for those investors still significantly underweight China, for whom China is a major part of their benchmark.
Okay, we've got a technical view as well. This is Lawrence Belanco of CLSA who weighs in. He says that in India, the BSE PSU sector is broken down from the June-September topping pattern as well as the 2023-2024 uptrend channel. He says as long as price action remains capped by resistance provided by the falling 50-day moving average, currently at 21,422, the risk remains to the downside. Relative to the Nifty, he says the BSE PSU index is broken below its 200-day moving average, implying further relative underperformance. At the stock level, he flags the downside risk in Coal India and Power Finance Corporation, that is PFC. All right, well, let's welcome in Ed Yardeni, president at Yardeni Research, with what he made of things over the last few sessions. Ed, good morning. Great to have you with us here. And thanks for joining us, as always. Should we pay any attention to people like Bostic, etc., last night saying, well, they'd prefer a pause in November? Or you think we should just go with the broad thing that rates are now headed lower? Maybe the first one was the deepest, but we are going to get cuts, over the next many months.
Yeah. Well, I'm kind of biased, quite honestly. I'm predicting none and done. I'm predicting that the Fed is done for the rest of the year, that there will not be a rate cut in November and December. And apparently, from what I understand, that's a fairly contrary position. But I was therefore delighted to hear Bostic realistically state that maybe there won't be a cut in November. Simply put, the economy is doing extremely well. The economy has actually been quite hot. And the risk is that the Fed is heating up, overstimulating an economy that's already doing quite well. And the other area of agreement with this outlook is the bond market. The bond yield has increased from basically 3.6% when the Fed cut by 50 basis points to over 4%. So the bond market too seems to be signaling that maybe the Fed is too far ahead of the easing curve here.
Okay, none and done, at least for this calendar year. Mr. Yardini, morning. So how many next year for calendar year 2025 in terms of rate cuts? And secondly, your expectation from the press briefing tomorrow in China?
Well, look, I think that when it comes to rate cuts, I'm pretty comfortable with the rates are where they are right now. The reason I'm comfortable with that is because the economy seems to be comfortable. It's, as we know, the economy has been growing about 3% at a annual rate over the past few quarters. On a year-over-year basis is up 3%. And that's without any decrease in interest rates whatsoever. So I don't really have a problem with this level of interest rates. But as you pointed out, the Fed does seem to be committed or wants to lower interest rates. They have this idea that there's some sort of neutral interest rate that is lower than where we are today. In their summary of economic projections, they seem to suggest it's 2.9%. There's no way to get an accurate assessment of what the magical neutral rate is, but I would say it's higher than that, maybe 4%.
Hi, Ed. Good morning. Good to see you in. Ed, if you're not going to get any more rate cuts, if you're right and bang on and, what Bostic told us overnight as well comes through, then what about the equity markets? Because the global equity markets are clearly factoring in rate cuts that are coming in there. So how do you expect global equities to react?
Well, remember at the beginning of this year, the markets were expecting 6 to 7 rate cuts. We didn't understand that, and we were talking about maybe 2, maybe at most 3 rate cuts. So far, we've had 1 that was the equivalent of what the market expected would be 2. We had 50 basis points instead of 25 basis points. And the market's at an all-time record high, notwithstanding the fact that, the concern was that the economy might be weak and we would need many more rate cuts. I mean, this is not a bad trade, right? To get better than expected economic growth and sacrifice lower interest rates. The market can live with that. That's better earnings, and valuations are already stretched. I don't think we really need interest rates to come down and push valuation multiples even higher.
No, I mean, Ed, I think you've got it. You've been contrary all year through, and you've been right. I think in this beginning as we came in.
So far, so good.
Absolutely. And as you said, I mean, you are. It's against consensus, not consensus at all. So you're in the non-consensus zone. But you got the bond market which agrees with you. So I think that is what matters.
It does. Yeah.
So we'll see. But thank you very much, Ed. Great to speak with you.
My pleasure.
And appreciate your time here on CNBC-TV18. We've got lots of stocks to discuss, which we will get to in just a bit from now. I just want to quickly put out some of the names you'll hear about. Bandhan Bank, Anand Rathi, Oberoi Realty, Mazgaon Dock, Sincere Engineering, and BSC. There are stocks that are on our radar on the back of positive news flow. IREDA, TCS, Tata Elxsi, and Ola Electric are stocks that are on our radar and are likely to open in the red on the back of news flow at least. But all of that is coming up with our research team.
Okay, let me also tell you the corporate interactions that are lined up on the show. At 8:35, we have Vishal Manchanda of Systematics Pharma to discuss why pharma stocks were under pressure yesterday. At 9 o'clock, we'll be joined by Manik Taneja of Axis Capital to put the spotlight on TCS's Q2 numbers. At 9:20, Mihir Vora of Trust Mutual Fund will be our market master for the day. At 9:30, we'll invite the management of Birla Corp and Mangesh Bhadang of Centrum Broking to put the focus on the cement sector. And following that, we've got Sumit Gupta of Centrum, who will be chatting with us at 9:40 to discuss his expectations from the pharma sector. We'll do a pharma QSQT. A little later, 9:50, Biju Kasim of Shoppers Stop and Mrigank Gudgutia of Redseer Strategy Consultants will join in to discuss the trends in the beauty care segment. And towards the end of the show, as always, it's our special segment. It's the economy. Lata will be in conversation with Piyush Gupta of CRISIL and Suyash Chaudhary of Bandhan Mutual Fund.
Well, we'll slip into a short break. Come back, we'll get into further detail and all the top stocks that we're tracking for you. Don't go anywhere.
Welcome back. It's a Friday morning. The setup seems to be quiet. Yesterday was also a very quiet session for our markets, but the focus is on individual stocks. So this is CNBC-TV18's list of top stocks for the day. And first up, it's going to be about TCS and the IT pack. Now, TCS reported a margin miss. Margins for the company came in at 24.1%, lower than consensus expectation, and that resulted in a profit miss. So profits also declined by over 1% versus expectation of an expansion. So that's on the margins. On the top line, revenues were in line with expectations. They've grown by more than 2%, but this growth was largely driven by India and the BSNL contract that the company is executing. Look at the India revenues. It's about 8.9% of their overall revenues, and those revenues have doubled on a year-on-year basis, 95% up year-on-year, and a quarter-on-quarter basis is up 21%. If you strip that out, the company's, key markets like North America, etc., have been under pressure. The company said in the con call they face client-specific issue in health and life sciences, weak discretionary spending in North America retail, and there were challenges in UK and Europe in the manufacturing sector, which affected the company's revenue growth. The positives, though, in the numbers: one, hiring has picked up, and two, the BFSI recovery is showing traction. So BFSI revenue growth, which was about 0.6% in Q1, has further picked up to 1.9% growth. But still, there is a margin miss, and there is that, revenue growth, which is driven only by BSNL. So brokerages are lowering their estimates. JP Morgan cuts margin estimates by 50 basis points. Target price is at 5,100, but they say we will use any sharp correction to add. Nomura lowers EPS estimates by about 2% and Jefferies too is cutting estimates by 1 to 2%. Only bear in mind that Infy has underperformed peers in the last 1 month, having fallen nearly 6%.
Okay, all right, Rima. Thanks for that. Well, let's hop across to Abhishek. He's tracking IRDA. Morning, Abhishek.
Good morning. So IRDA has come out with their Q2 numbers. The disbursements have grown by 44% YOY but declined by more than 16% sequentially. The spreads have come under pressure on a sequential basis. They are down by 11 basis points. However, the net interest margin has expanded to 3.34% versus 3.29% in the previous quarter. With reference to the P&L, the NII growth is 52% YOY and about 7.7% sequentially. They have made a provision this time around of close to 34 crores versus provision write back that you saw in the same quarter last year and even in the previous quarter. So PAT has come in under pressure with respect to sequential growth being at just 1.1% on account of the provisions that they have made. So that's a weaker number coming in from IRDA. Back to you.
Thank you very much for that. Tata LXC2 reported numbers yesterday post-market hours. It's not an exciting quarter at all, fairly muted, but the company holds on to their FY25 guidance, which means they're penciling in a recovery in the second half. On the top line, it's a revenue growth of 0.2%. The company is doing well in the transportation vertical, courtesy some of its in-house, the Tata Group related auto companies. But the other two verticals, healthcare and media and communication, the company continues to struggle on these two. Margins too disappointed the street. So adjusted margins are down nearly 60 basis points. On a reported basis, you will see a margin expansion, and that's because in the prior quarter, there was a one-off boost to their margins. That said, the company in the conference call yesterday said that they maintain FY25 will be better than FY24, which means they're looking at nearly a double-digit growth because last year they had a 9.6% top-line growth, and they're also looking to maintain their PBT margins in their preferred band of 28 to 29%. But this quarter, not very exciting.
All right, well, let's talk about, thanks for that, Rima, Bandhan Bank, right? They've got new leadership, bombed out name completely. Abhishek, what's the street making of it?
Well, a positive sign for Bandhan Bank that they have got a new management at the helm. So RBI has approved Mr. Partha Sengupta as the MD and CEO of Bandhan Bank for a period of 3 years. He has to join before 10th of November 2024. Bandhan Bank also received claims raised to National Credit Guarantee Trustee Company under CGFMU, that is Credit Guarantee Fund for Micro Units, and ECLGS, that is Emergency Credit Line Guarantee Scheme. So in total, Bandhan Bank has now received up to 1,460 crores from the dues that they had of about 2,213 crores. So about 65-66% recovery is what they had made. In the first tranche, remember, they had received 100%, that is about 900 odd crores. So in the second tranche, the money that they have received is slightly on the lower side, but it's a good factor that they have received money. Analysts were expecting zero recovery in this account. So in totality, about 66% of the dues have come in for Bandhan Bank. Back to you.
Thank you very much for that. Over to Vamakshi now for Anand Rathi and Oberoi Realty. Vamakshi.
Well, absolutely, Rima. Anand Rathi on our radar. The AUM for the company has come in at 75,100 odd crores. This is an uptick of almost 8.8% that we're seeing sequentially, and with that they've managed to surpass the earlier guidance, and thereby the revised guidance now stands at 80,000 crores. Net inflows were down nearly 31% sequentially. That is a bit of a concern. We'll be waiting for comments that come through from the management on this front. But the revenue is seeing a decent uptick of 2% operationally. However, the performance is better, and that is because the PBT margins have improved by around 48 basis points sequentially to 42.1%. The net profit too is seeing an uptick of almost 4% quarter on quarter. So, given those developments, going with a green for Anand Rathi. Overall Realty, on the other hand, also going for a green on this one. Board has approved raising funds up to 6,000 crores. They will be considering various modes, which also includes a QIP route. So, given that development, green for Overall Realty.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vinny. She's here to tell us about Ola Electric and Mazagon Dock. Vinny?
Good morning. So for Ola Electric, we're expecting a bit of a red again. Now, let's not forget two-wheelers have been giving a lot of higher discounts to attract customers, and seems like Ola has announced that Boss 72-hour rush sale, which will be starting from today till over the weekend. Now, this is additional discounts that they will be giving. They've said that there's a benefit that S1 scooter portfolio around 49,999 rupees. This indicates that, they really need to give higher discounts to attract customers. So yes, from the customer point of view, thumbs up, because you're getting it cheaper. But from the company point of view, it will impact their profitability. So we're keeping an eye out on that. Plus, Ola has been a bit subdued in performance and in trade in the last couple of months that we've seen. So keeping an eye out on Ola, because we're expecting a bit of a red. Mazagon Dock, we are expecting positive up move coming in for Mazagon Dock. They've received a 121 crore order from Magenco. That's a Maharashtra State Power Generation. And this is involving supply installation as well as commissioning of AI-based comprehensive infrastructure project. So keep an eye out on that.
Thank you very much for that. Sansera Engineering also has some news flow. Abhishek joins in with that. Abhishek.
Well, Sansera Engineering has launched a QIP as per our sources. Now, they will raise about 1,200 crores. The indicative price is about 1,554 rupees per share, which is at a discount of around 2% to yesterday's closing price and about 5% to SEBI floor price. So, the equity dilution would be around 14.3%. The lockup for promoters is about 180 days, and BRLM to the issue includes ICICI Securities and others. Back to you.
Okay, all right, Abhishek, thank you very much for that. The next one is Bombay Stock Exchange, BSE. Vamakshi is here with details. Vamakshi, over to you.
Well, absolutely. BSE expected to open in the green, and that is because starting November 20th, weekly derivative contracts for Bank Nifty, Nifty Midcap and Fin Nifty will be discontinued, and this is to be compliant with SEBI's direction on rationalization of weekly contracts. Nifty 50, therefore, will be the only index that will be available for the weekly expiry contracts. This, of course, bodes, is negative for NSE. That is because Bank Nifty contributes nearly 50% of NSE's option premium volumes, and in fact is NSE's biggest contract. In fact, IIFL Securities estimates the net impact of NSE's full year volumes to be around 30 to 35% on account of this development. But NSE's loss could turn out to be BSE's gain. Now keep in mind that BSE's option tariffs are nearly 7% lower as compared to NSE, and given the move to only 2 weekly expiries for both of these exchanges, BSE's market share gains could actually accelerate. So given that development, going with the green for BSE.
Vamakshi, has any I found it quite strange last time when the SEBI regulations came, that a lot of brokers wrote notes, but no one talked about this market share business, market share moving. I don't know why, because people that we speak to, like Rajesh Baheti, etc., have been pointing about this quite a bit. We've been and stock reacted, right? That day, but I've not seen any. I think Jeffries wrote a note, and there were a few others who wrote, but nobody addressed the market share issue. I don't know if IIFL has done it in the note that you cited.
Yes, absolutely. It's IIFL that has actually said that the market share could accelerate for BSE. Given that, now, especially for BSE, now there were 2 expiries and now it comes down to just 1. And NSE for 4, it comes down to 1. So for BSE, that may imply some acceleration of market share.
All right, Vamakshi, thank you very much for that. It's interesting because there was some confusion whether exchanges will be allowed to use, whether they had any option it had to be Nifty or it could be had been Bank Nifty as well. And we had checked at that point. They said, well, both are open.
Yeah.
But the person I spoke to also said that ideally it should be Nifty. So I said, why?
Flagship.
No, is that
index.
well? To hedge the Bank Nifty is much more concentrated. So 3 stocks, HDFC Bank, ICICI Bank, Axis Bank, will move things violently around. So it's a more it could. In that sense, it's not desirable. But I don't know if there was a gentle nudge in that sense.
Okay.
Or they really had a choice in the matter, but the impression that we were given was actually it was a choice and then they've picked up the Nifty in this particular case. But, I think we had Rajesh Baheti at that point, right after those SEBI announcements coming, and we were asking him whether the NSE would choose Nifty or the Bank Nifty. He said, well, if they choose the Nifty, the earnings damage is going to be much more as compared to, what they'd see if they'd chosen the Nifty Bank. All right, well, we'll take a quick commercial break here. When we come back with our market sort of guests, but just to recap the stocks on and just to tell you what we put out, Bandhan, Anand Rathi, Oberoi Realty, Mazgaan Docks, Sansera Engineering, and BSE are names which perhaps start in the green. And on the red side, IRDA, TCS, Tata Elxsi, Ola Electric are some of the names which start in the negative. Manisha is now joining in with a roundup of all what is making news as far as commodities are concerned, and it's got to be oil once again. Manisha, morning.
Morning. Well, absolutely, Prashant. With 3.5% of gains overnight, the Brent crude prices are back above $78 a barrel. And this is going to be a second weekly gain for the crude oil prices. Well, a couple of things. One is the Hurricane Milton, which has struck Florida, and you have 3.4 million houses out of power and 25% gas stations out of gasoline. So there is going to be a rising fuel demand from these areas. The second is the Israel statement suggesting that any response to Iran would be lethal, precise, and surprising. So that also seems to be adding some premium. But apart from that, the metals also have come back quite strongly in the overnight markets. We've seen 1 to 3% of gains come in for aluminum, zinc, and copper. The gold price has also gained up by nearly $40 in the overnight markets. Well, the U.S. inflation did ease, and there is a surge in unemployment claims there. So that also seems to be supportive.
Thank you very much for that. We will slip into a short break. We'll come back and connect with Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock talk.
Welcome back. Well, let's get some fundamental analysis going on all the stocks we just listed out for you. Siddhartha Khemka, the head of research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Good to see you. When? What about TCS's numbers? The stock yesterday came off the highs of the day. The tech index itself was lower. What is your reading of these numbers? And if the stock starts off in the red, will you be a buyer given the recent underperformance?
Yeah, morning, Nigel. Glad to be on the show, and the festive greetings to all of you and the panel as well as all the viewers. So I think if you look at the numbers, the top line was clearly driven by the India business and the sharp ramp up in the BSNL numbers. Bearing that, if you look at North America was down 1.7% on a Q-on-Q basis, which was a surprise. EBITDA margins were 40 basis points below our expectations, and PAT consequently was down 1.2%. So what we see is that growth was primarily driven by the BSNL ramp up, and if you exclude India growth, the overall growth was just 0.7% in USD terms. So that's a kind of a bit disappointing and mainly attributed to client-specific issues in the healthcare and some weakness in the communication verticals. What we have seen is that last quarter we witnessed significant shift in the client behavior, and especially in the US banking sector, the recovery has started taking shape, which is a trend that we expect it to continue. We expect Q3 could be again becoming a weak quarter. Q1, which is your Jan to March quarter, would be a very significant quarter for the tech companies, because that is a time when the budgets for the new year calendar would be decided in the key markets of US, Europe. And that is where I think a good sharp recovery could be seen because the interest rate cut would have had already taken place, and the budgets for new year, given the newer environment, that could take place. So what we are expecting is that in the near term, there could be weakness, and hence any weakness could be taken as an opportunity to buy stocks like TCS, which we believe is a market leader, having a diversified presence, exposure to long duration orders, and its best-in-class execution give it a market leadership as well as the market premium that it justifies. So we continue to maintain our positive stance on TCS. We have a buy rating and a target price of 5,400, which is a very decent 28% upside. Nonetheless, as I said, near term, there could be weakness, and that would be an opportunity for investors to lock into the stock.
Siddharth, hi, morning. Would you go out and buy Bandhan Bank today? Considering the stock has been an underperformer, this year itself is down 22-23%. Valuations relative to the rest of the pack are fairly okay at 1.1 times forward price to book. And now that key overhang of the MD CEO announcement is out of the way, and the street seems to like the new guy at the top. So would you go out and buy Bandhan Bank today?
Yeah, Rima, good morning. So yes, definitely. I think the news that has come in is very positive. Few days back, the company had also announced the Q2 business updates, which was pretty strong. And I think if you look at the business updates, Bandhan clearly stands out among the MFI companies where they are still reeling under the asset quality pressure, and Bandhan has clearly come out with strong numbers for the quarter. And with the new CEO being approved by RBI, that definitely removes a key overhang. Currently, we have a neutral rating, given that the overall asset quality is to improve. The business growth is yet to pick up. But I think today, with post the Q2 business update and this key overhang going away, view is definitely turning positive on Bandhan. They have been reporting good quarterly numbers for the last 2 quarters. Even Q1, we saw very strong numbers, and overall our earning estimates with a ROA of 2.2%, ROEs of almost 19%, and a valuation which is comfortable, much below some of its peers. It definitely makes sense to have a positive view on Bandhan.
Right. What about BSC? Good morning, Sid. What's the sense there? I mean, stocks moved up, but from what, 3,800 to 4,200 now. What's the sense?
Yeah, Prashant, good morning. So I think BSE continues to positively surprise us with the expected growth in market share. I was listening to your conversation. So yes, I think market share is something that people have not yet factored in, and it's difficult to say how traders' behavior will move, and hence that there is a reluctance from analysts to give out a number to that market share. But we have seen that with the Sensex and Bankex, they had gained a significant market share in excess of 20% in the derivatives. Now, with just two indices, the Nifty and Sensex being there, I think the market share for BSE in the derivatives will see a significant up move. Even from here, it could go up to in the range of 35-40% at least, and on a conservative basis, if not higher. And if you look at that, would be a big significant leg up for the overall growth for BSE. Overall, otherwise, also you look at the capital market data, things are looking up for BSE across its segments. The latest regulations are also supportive of that. The Star MF platform for BSE continues to report healthy numbers. And as I said, the key driver for BSE would be the derivative segment, where it continues to gain market share. And hence, I think the stock should do well.
Okay, all right. Sid, just request you to stay with us. Pharma stocks, they were under pressure yesterday. To discuss what's ailing the pharma stocks, we have Vishal Manchanda, the pharma analyst at Systematics, who joins us on the show. Well, Vishal, good morning and thanks a lot for joining in. Yesterday, I reached out a lot of sell-side analysts and asked them what's going on with pharma. Everyone had a question mark on mind. And then there was this Reuters article that did the rounds that said that, that could be a possible $2, for a generic drug that could come out. That's what, post that US election. And it appears that's what made the street very, very nervous. But feedback late in the evening said that that could not have had such a big impact. So do you think that was a knee-jerk reaction and you think normalcy will resume from today onwards?
Yeah, I think I did go through that news article. So I think this really does not have any impact on the generic manufacturers. My sense is the larger impact will be on either the insurer or the retail channel there. So what's happening is the copay on certain generic drugs is being cut down to $2 per patient. So what the copay is essentially what patients pay as part of the total prescription bill that is generated. So their portion of expenses towards the prescription bill. So that is reduced. It was higher earlier and that is being reduced. So either the insurers will pay a larger amount as reimbursement of the prescription bill, or they'll cut down the list price. So I think if the list price is cut down, then probably the retailers will have to bear the burden. If I don't think there is a scope for the channel to squeeze in the manufacturers further. So if I look at the generic value chain, almost only 20% of the value is getting captured by the manufacturers and 80% is being captured by the channel. So roughly that number, 20-80, it could also be 25-75, but it's more in favor of the supply chain though. They make most of the money on the generic drugs.
Vishal, but did you have a chat with any of the companies? Are they worried or are they also not worried like you?
So I didn't get a chance to speak to the companies on this, but I think I won't believe the stocks. There's going to be an impact here.
So should we brace ourselves for a bit of a bounce back in the pharma names, considering yesterday's news is not material to cause the decline that we had, and pharma has been doing well. In the last 3 months, the Nifty Pharma Index has moved up nearly 15%. What's the view on pharma from here on at a broader level, and then if you could get to the various categories?
Right. So I think a bounce back should be expected because the news is not material, is not going to impact earnings of companies. So Cipla and Lupin were primarily more impacted because there was one drug called albuterol inhaler in that list, which was going to cost $2 or less for the patient as copay. So that hit the two companies more, and we could see a bounce back in those two names today. Overall, I think on the pharma sector, what I think is further run up from where the stocks are today largely depends on how they redeploy the large cash pools that these companies have generated over the last 3-4 years. All of these companies have a very healthy balance sheet. They just need to figure out on what is the best way to kind of put this money to use. So which one does the best in terms of I think which one does the best in terms of inorganic route play would probably do the best among the pharma names. I think Sun Pharma is best poised in terms of leveraging capabilities for acquisitions.
By the way, Divi's had a massive move day before yesterday. Just your thoughts, Vishal? What's going on there?
So I think a great company. Divi's is a great company. Everything is going right. So what's expected is they're going to grow mid-teens, high teens kind of growth rates. But I think valuations is something we need to really look at. They seem to be very expensive. So that's a call I think investors would rather take on valuations. It's a matter how do they look at things relatively is also important. But I think valuations, I find them very steep on Divi's.
Market cap of Divi's Laboratory has now crossed 1.5 lakh crore. And I think it's become the second, largest in terms of market cap in the pharmaceutical space in India. So big move.
So almost trading at 20 times revenue.
Go ahead.
20 times revenue.
20 times revenue.
Yeah.
And in terms of PE?
So I think forward should be around 60, 70 times sort of those numbers.
And what would the 3-year or 5-year average be in terms of valuations?
I think the long-term average is around 30. The long-term average is around 30.
The stock's not returned anything. Actually, that's not correct. I mean, the stock was $4,000 in 2020. Okay. It's at 5,900, so 20% in 4 years, which is the kind of market we've been. But yeah, you've got to look at valuations, as Vishal is saying. Lots of fans.
In fact, in the last 6 months, it's done quite well, Divi's. And some of these stocks, when they're part of the Nifty and they're going to move out, then you see that kind of selling that comes in. Yeah. And then, in fact, it recovers post that. So that's a technical factor as well at play.
Okay, all right, Vishal, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC-TV18. We'll take a break. We're back. Some technical ideas coming your way. Mitesh and Sudarshan will be with us this morning. Okay, welcome back. We got Siddharth Khemka, of course, still with us, and we'll have the technical experts also joining us in just a bit from now. But maybe just sort of address a few other things before we move forward. I think we discussed BSC, we discussed, of course, Divi's with a pharma analyst. Bandhan Bank was another one. I just wanted your thoughts on 2 or 3 names, Sid, if you have coverage, if you look at it closely. Yesterday, you had these shipbuilders, Mazgaon, Garden Reach, going up 8-10%. They'd come off their recent highs by 30-40. So that is one. Then the Tata Group companies, Tata Investment Corporation went up sharply. It's like a amalgamation of basically holding. It's like a, for the lack of a better analogy, like a mutual fund, but of course differently structured, with Tata Sons owning about 73% in the company. And Tata Chemicals went up sharply as well. So yeah, I mean, 4 names your way. Go on.
Yeah, Prashant. So I think within the PSU defense names, it's more of a recovery trade that is happening after the sharp correction in some of these names over the past couple of weeks, about 30-40% correction. There seems to be some interest coming back, and some of these players have been consistently winning new orders. Now, the only challenge with these names like Mazgaon or GRSE is the valuation, which continues to remain at a very premium level. And it's just that market interest after the correction. So while the long-term structural story for the India defense continues, I think in the near term, these stocks would oscillate or could remain volatile based on how investors treat them. So at this juncture, I think a lot of these PSU names, including the railways, the defense, and a lot of other public sector enterprises after the correction definitely looks attractive, and hence that buying interest coming up. Tata Group, I think the market paid a homage to Mr. Ratan Tata's departure, and stocks definitely yesterday, a lot of Tata Group stocks did well, and the resultant improvement in Tata holding company. Tata Chemicals, I think the news flows of some of these companies putting up a request with the government for anti-dumping in the soda ash, which the government has taken up. So that news has driven stocks in the soda ash space, especially if you look at Tata Chemicals. So I think overall, PSUs looks good after the correction, but nonetheless, it could remain a volatile journey from here. Tata Group continues to remain the bellwether in the Indian markets, consistently creating wealth across sectors. And we have been positive in a lot of Tata names. TCS came out with results yesterday, a bit miss, but I would still say that market leader in its space, the best in class execution, and we would be buyers at any dip.
Okay, all right. Before we let you go, Sid, wanted to ask you about IRDA. That's the other name that came out with its set of numbers. The stock was more than 300 rupees. It's seen a bit of a correction. How do you read the numbers? And at 230 rupees, what's your view?
So we don't have coverage on IRDA, unfortunately, but results were very strong, and I think the approval from the insurance regulator for IRDA to get into the B2C segment as well, that would be a key driver for the stock in the near term.
All right, we'll take a quick commercial break here. Sid, stay with us. We're going to come back and we'll get those technical ideas for you on the other side. Stay with us.
बहुत ही संवेदनशील व्यक्तित्व थे। जीवन भर उन्होंने टाटा ग्रुप को तो बड़ा बनाया ही, टाटा ग्रुप को अंतर्राष्ट्रीय पटल पर एक अलग ही पहचान बनाई, भारत की पहचान बनाई विश्व में, अपने ग्रुप को विश्व भर में बढ़ाकर। लेकिन साथ ही साथ उनके जो दानवीर चरित्र था, हर प्रकार से, हर किस्म से, हर अच्छे काम के लिए वो तत्पर रहते थे। कभी ऐसा कोई व्यक्ति नहीं होगा जिसने कोई उनसे अच्छे काम के लिए मदद मांगी हो और उन्होंने ना किया हो।
भारत का कोहिनूर रहा नहीं, हमसे बिछड़ गया है, ऐसा मैं कहूँगा। और रतन टाटा जी हमारे में नहीं रहे, ये बहुत ही वेदनादायी दुखद घटना है हमारे लिए, पूरे देश के लिए। पूरे देश का एक अभिमान था, हमारे महाराष्ट्र का भी अभिमान था। लाखों लोगों को उन्होंने उद्योजक बनाया, उनकी इंडस्ट्री बहुत पुरानी है और ऐसे टाटा कंपनी के वो सर्वे सर्वा थे। और आज मैं यही कहूँगा कि उनको देखकर लोगों में ऊर्जा आती थी, प्रेरणा आती थी और वो हमारे महाराष्ट्र और हमारे भारत देश का अभिमान है, स्वाभिमान है। उन्हें हमारे सरकार ने उद्योग रत्न पुरस्कार, उनको कई पुरस्कार मिले, पद्मश्री, पद्म विभूषण, और जो भी पुरस्कार उन्हें मिले उनको देने से उस पुरस्कार की ऊंचाई बढ़ गई। ऐसे उनका कर्तृत्व था। मैं उनको महाराष्ट्र सरकार की ओर से और महाराष्ट्र की तमाम 12.5 करोड़ जनता की ओर से भावभीनी श्रद्धांजलि अर्पित करता हूँ। उनका आदर्श लेकर आगे बढ़ना, उनके आदर्शों पे चलना, यही उनके लिए सच्ची श्रद्धांजलि साबित हो सकती है।
रतन टाटा
Welcome back. We're going to get the pre-open rates in just a bit and the market opening in the next 15 minutes or so. But how do you position yourself? The last couple of sessions, the bulls have been given hope only to get sold into. So at around this 25,000 mark, what's the call? Mitesh Thakkar joins us to help us out with exactly that. Hi Mitesh, good morning. Good to see you win. It's Friday. What's the trade on the Nifty? At around this 25,000 odd mark, it appears, at higher levels, we're seeing some bit of supply, but your take.
Yeah. Morning, Najib. No, I've been suggesting that this market texture in the short term has changed from buy on declines to sell on rallies. And I think you are seeing a lot of supply emerge whenever the market tries an intraday move or rebound on the upside. So I think that's going to be the kind of phase. The good thing is that we made a low of around 750 on the 9th of September, and we are broadly, hanging on to those levels. We bounced back from those levels, so that should not be broken. If a few days of volatility can be absorbed and the market manages to stay above the support, then I think we might look at a reversal on the upside. But for the timing, I think I would be a seller on rallies close to about 25, 200, 250 zone, and then if we get to 25, 350, I think even an aggressive seller. Only about 25, 400 would have turned my view on the positive side. Or, if we can do some base building here and then reverse. So the market is slightly on the weaker side, but yeah, you can keep getting those intraday bounces.
Okay, you'll get confident once we get past the 25,400 mark. We noted that, Mitesh. Mitesh, what about the Nifty Bank? That move yesterday was quite heartening. Took out, I think, the 50 DMA as well as the 100 DMA. But is this the real deal?
I still don't believe so. So I think, again, the Nifty Bank also made the low around the same 9th of September's low, which is around 50,500 on the bar basis. And it needs to get past, 52,500 to show some kind of trend reversal on the upside. And I think we are still far away from there, about 1,000 points away. So again, the Nifty Bank was equally oversold, and therefore you're getting these bounces, but not sure of the market turning on the positive side yet.
Okay, in pre-open, TCS is down nearly 3%. HCL Infosys also down in sympathy with a cut of about 1 to 2%. Mitesh, what would your stock calls be for this morning? And any thoughts on IT large caps?
Yeah. So I'll start with the IT large cap. It was doing very well, and we were seeing good outperformance in the IT large cap stocks. But what has happened is that it's kind of reversed from the a lot of these stocks have reversed from the earlier highs. For example, Infosys made a high of around 1965 closing on the 2nd of September, and we got a closing of 1962 on the 9th of October, and we've kind of seen the markets reverse from that. So I think the strength on the upside is gone. we don't have a sign of a big downside reversal as yet. So I think they might just, go into sideways consolidation with mild pressure on the higher side or around the previous stops. Coming to my stock calls, I have a mix of buys and sells. I have a buy on Maruti, which I would recommend buying with a stop just below levels of 12,750 for targets of 13,500. ITC has been a sell call for last few days. So again, now can be taken a fresh short. I mean, now fresh shorts can be taken with a stop at 498.5 for targets of 480. Kotak Bank is a buy on mild declines. If you get it around 1865, buy with a stop at 1844 for targets of 1910.15, and L&T is a sell with a stop about 3500 for targets of 3385.
Let's thank you, Mitesh, for that. Let's also invite Sneha Seth, derivatives research analyst at Angel One. She joins us on the show. Sneha, morning. Happy Friday to you. First, if you could tell us the setup and then the calls.
Good morning. If you look at market, broadly it is in a range wherein 24,700, 800 is acting as a support on the higher side. Any sustainable move above 25, 200, 300 would be interesting. So at this point in time, this is the range. Unless and until we don't see a directional move, decisive move beyond this range, we would avoid any directional bets and index. Individual counters, we have a mixed trade. The first one is on M&M, wherein this counter has shown decent outperformance, continuously trading above 20 DEMA on the daily chart and trading near the all-time high. So I believe looking at the overall chart structure and options activity, we expect this counter to head at least towards 3,320 levels. So for the target of 3,320, it's a buy. Stop loss can be maintained around 3,107. Apart from this, we have a sell call on Federal Bank. This counter has been in a pressure and now it's trading around the 89 EMA. Looking at the overall positions in the future segment, I believe we may see further correction in this counter. For the target of 179, it's a sell, and the target and the stop loss can be maintained around 189.
Thank you for that. Let's talk about TCS and Tata Elxsi. Now, TCS was a miss. The company missed street expectation on the margin front. The top line growth was driven largely by the India BSNL revenues. If you strip that out, in fact, BSNL contributed 72% of the incremental revenues. But the other key markets, like North America, for instance, was down 3.5% on a quarter-on-quarter basis. So it's caused some disappointment, amongst market participants. Many analysts have gone ahead and lowered EPS estimates by about, 1 to 2%. Also, the thing is that Q3 is unlikely to be any different compared to Q2 because, one, the BSNL contribution will stay in Q3, and two, Q3 has furloughs. So Q2 has been subdued and Q3 is also likely to remain subdued on account of these two factors. The question is the recovery from here on, Q4, once the BSNL contract, contribution wears off and BFSI, etc. in North America starts showing more traction. We're already seeing green shoots in BFSI. BFSI revenues went up by 1.9%. The fact that the company hired employees for the second straight quarter is also fairly encouraging. Manik Taneja, Executive Director, IT Services and Internet at Axis Capital, is with us on this show. Manik, thank you very much for joining in. First, wanting to ask you that, the street is a bit disappointed with TCS's numbers, but most brokerages are bullish. But you have a sell call on TCS. So first, why the sell? And then we'll get to the Q2 numbers.
Good morning, Rima. So we've had a negative stance across most of the tier 1 IT services pack, and the sector excitement through the course of calendar 24 has basically been hinged on macro recovery, and the rate of change excitement continues to disappoint people. So if you recall, in January, February also, people are very excited about an improvement. Some of those expectations got dashed with the way companies guided in April. And with the way things have been progressing, I think the direction of improvement continues to disappoint the street, and that's where we have a negative view across most of the names.
Okay, so you're not convinced about the recovery. The recovery is likely to fade. We've had these promising starts in the past, but they haven't sustained. So now let's talk about TCS. What were the key highlights for you, and what is the takeaway for the rest of the large cap pack as it reports numbers next week?
So I think you summarized it quite well when you said that bulk of the incremental revenues have been supported by India/the BSNL deal, and which is where you've seen margins also come off on a sequential basis, which is contrary to the usual trend that you witness in September. And this is the first time since Q2 of FY20 wherein margins in the second quarter are lower than first quarter. Going into next year, while there is certainly hope about BFSI recovering, there is also hope around, given the kind of data points that keep on emerging from the US, that retail industry segment should also pick up. But TCS in particular has to also contend with the drag from BSNL going into next year. So thereby, with the way street expectations are possibly of about between 8 to 9% growth for TCS in FY26, I think those estimates need to possibly come down to closer to about 6 to 7%, and that's where those estimates should settle. Finally, I would just remark that Indian IT companies continue to see this round of excitement build into the stock prices. Or if you look at any of these names, they are up between 15 to 25% on a calendar year 24 year-to-date basis. But none of the global IT services stocks are reflecting any excitement about macro pickup. So that's how I would leave it.
Just to get the numbers right, next year consensus is expecting 8 to 9% top line growth. You think it should be closer to 6 to 7%. What about on margins? Because if this BSNL contract is hurting margins, will it not impact next year's margins? And what is consensus EBIT margin expectation from next year, your own, and therefore EPS numbers too?
Sure. So from a margin standpoint, I'll just step back and first of all talk about the fact that TCS did extremely well on margins in FY24, and that was supported by significant rationalization on subcontracting. And some of these costs essentially are reversing in FY25. And given the headwinds from the BSNL contribution, margins in FY25 are now going to be flat on a year-on-year basis at best. Certainly, with the way BSNL contribution will reduce next year, margin expectation going into FY25 should be expecting there should be some improvement built into the estimates, and which is what Street and us are already factoring in. This extent could be anywhere between about 50 to 70 bips, depending on different market participants.
Tata Elxsi, Manik?
Yeah.
Is Tata Elxsi a stock that you track?
Yes, we've had a sell on that stock for the longest amount of time. And if you see, this company has been struggling outside of the transportation segment for the last couple of years. And with the news flow that one is picking up from global auto OEMs, I will not be surprised that you see some moderation in growth in the transportation vertical in FY25. And even within the transportation segment, this company's fortunes are significantly dependent on group companies, which is JLR in their case. And thereby, I am not too excited with the multiples that this company enjoys, and we've had a sell rating for the longest amount of time.
And what about Infosys? Is the street's optimism going into Infosys earnings also going to be unfounded by the end? Because the stock since early June, has rallied about 35%. And numbers are expected to be pretty robust in Q2.
Sure. So I would say Infosys's valuation discount to TCS has narrowed significantly compared to historical averages. I think for that valuation sustained at current levels, Infosys should not be disappointing either on second quarter numbers or the upgrade in guidance that the street believes Infosys should be doing. The arithmetic certainly is in their favor, but we'll see as to how things play out, because in the past also, there have been occasions when, despite very modest arithmetic, Infosys has desisted from increasing the outlook after second quarter numbers. But I would say an inline to a better performance in second quarter, as well as an upgrade in guidance, will be required for the excitement in Infosys to sustain.
Okay, Manik, appreciate you joining in, giving us your take, sounding more or less cautious on the tech space, as you've been for the recent past. Thanks a lot for joining in and giving us your take. Let's get Mitesh back in for our 9:10 call. Mitesh, go for it.
Yeah, for the 9:10 call, Nigel, I would suggest a sell on ITC for targets of around 480.
Okay, thanks a lot for that, Mitesh. Well, let's talk about one of the biggest movers in pre-open. That's Bandhan Bank. It's up close to around 8%. couple of factors going for them. One is on the recovery side and the other is on the new appointment. Abhishek joins us to fill us in with all of those details. Abhishek, take it away.
Well, Nigel, to begin with, Bandhan Bank has got RBI's approval of Mr. Partha Singh Gupta as the MD and CEO of the bank for a period of 3 years, and he has to join before 10th of November 2024. Bandhan Bank has also received claims that they have raised to National Credit Guarantee Trustee Company under CGFMU and CLGS. So, in totality, Bandhan Bank has received about 1,460 crores, while the claim was about 2,213 crores, so about 66% of the recovery that they have got. So CLSA has written on Bandhan Bank, they have an outperformance rating with a target price of 240 per share. They say that key overhangs are gone. With these two key overhangs now behind, the focus will turn on to fundamentals for the investors. While near term they expect pain in the MFI sector, however, they believe that this is already in the estimates for Bandhan Bank and in the stock price as well. Jefferies has written on Bandhan Bank buy with a target price of 240 per share. They say that RBI has appointed new MD and CEO for a period of 3 years. This is positive as he was earlier the Deputy MD and Chief Credit Officer at SBI and then MD and CEO at IOB, that is Indian Overseas Bank as well. And he has also worked in West Bengal, which is a key area for Bandhan Bank business as well. With past stresses getting cleared and valuations being very attractive, they remain buyer on the stock. Back to you.
All right, Abhishek, thanks very much for that. So that's basically Bandhan, which is up about 7.5%. I think it's one of the near stocks, large stocks, well-tracked names, which is still around about near its COVID lows. I think the COVID low was about 150. Stocks at 200. So that's quite incredible. So there's a big lift coming through on that one. Let's look at BSE as well, which is the other one, and maybe look at TCS as well. So these are all sort of news-related reactions. BSE is starting about 1.25% higher. That's $50, and TCS will also come up on your screen. That's, I think, about 2% lower in the pre-open session. So first trades coming up. We'll do indices and get into stocks. It's a slightly lower start, but flat actually for all practical purposes. 24,984. Now flipping into the green, red again. So flattish. Bank Nifty is down about 0.15, so 51,462. That index had about 1% by close on it yesterday. Sensex is absolutely flat, 81,550 is where the Sensex is at. Mid cap index is actually quiet, almost unchanged. You'd almost miss that the market's open. It's that flat in some cases. We'll have the Nifty heat map coming up on our screens as well in just a bit. But yeah, there you go. So it's more down than up. I think almost about 38, 40 names are down. About 35 maybe, but the rest are higher. But more down than up. That's essentially the Nifty heat map. 36 lower now in the Nifty, 24,961.
Well, Cipla is the top Nifty loser, so that's down 2.5%, so extending the fall from yesterday. TCS opens in the red. It's a minor cut of about 0.6% post the Q2 numbers and the margin miss. Remember, JP Morgan and most brokerages are bullish because they're still talking about a recovery which will take place in FY26. So TCS is opening now down close to about 1%, and plus TCS had already fallen 5-6% in the last 1 month. The losers are in the banking pack. You've got an ICICI Bank and an Axis Bank. So these are stocks under pressure. Adani Enterprises is also, I think, slightly lower in today's trading session. There was that, QIP, very strong kind of a demand coming through. Adani Enterprises is down nearly about 0.7%. But the other IT names are bouncing back. So HCL Tech, Wipro, Infosys. So it appears the street is differentiating between TCS, saying the issues were company-specific because the company did talk about client-specific issues in UK manufacturing, North America retail, and life sciences and healthcare. And it's not an industry-wide problem. HCL Tech is now the top Nifty gainer. Wipro is up nearly 0.5%. Infosys opens up in the green. Other gainers include that in the metals pack. I think as an index per se, it's the Nifty Metal Index where you are seeing a little bit of green. Hindalco, JSW Steel, higher in trade. Bajaj Auto is looking quite smart. But on the whole, very, very, quiet. Outside the index, I think it's Bandhan Bank, right?
Well, that's right, Rima. And the metal index is expecting something from the Chinese authorities tomorrow. They started the week with some hope, then they got a little bit disappointed, And now they're back up. Maybe over the weekend, the Chinese authorities can fire a bit of a bazooka. That's the hope looking at the screen. What about stocks moving around? Sterling and Wilson, that stock's up close to around 3%. So good move is what we're seeing on that one for starters. IRIDA, in reaction to its numbers, the stock was up close to around 2.5%. So an uptick is what we've seen on that counter as well. Sterling and Wilson is the one that we're talking about. Yes, 3% up. IRIDA, let's pull that one up as well. ABFRL has valuation comfort as being a bit of an underperformer. They seem to be getting their act together though. And that's why I think that stock is up close to around 1% or thereabouts, one of the top volume movers. TRIL, that's Transformers and Rectifiers, came out with its set of numbers, stock up close to around 5%. I think it's in that 5% circuit band. Vocart as well, that as well is up in that circuit band, up close to around 5%. What's not doing well then? Cummins, that stock is down close to around 3.5%. I don't know what's gone on there, but that stock is seeing some selling. Credit Axis Grameen as well. Yesterday, the operational update came in. It wasn't looking too good, and that stock as well is down close to around 2%. So it was down close to around 2%. Today, it's down another 2.5%. Couple of big movers in trade for this week itself. Dhani Services, the stock has seen a big run of more than 20% in this week. Not sure what's the news flow. Big volumes out there as well. For the time being, the stock is down. So Dhani Services is a stock we're talking about. And Jyoti Structures, another big mover this week. That one as well is cooling off a little bit. So both these two are up 25 to 30% in a single week. Both of them have come in for some profit taking. In fact, Jyoti Structures has turned around now in the green.
Absolutely. Was a mover yesterday as well. 50 points lower in the Nifty, 24,944. Nifty Bank is down about 1/3%. 51,350 is where we are at. The IT services index is up about 1/3% for now. So that's the sort of, TCS. I think there was, of course, there was an 80-odd basis point margin miss. And that is down about 1%. It's come off the day's low. Look at Infosys as well, if you can, quickly. Because that's the other one we should watch out for. It's about 1/3% higher, 1925.
The street is taking heart from the fact that US BFS is actually recovering. So banking and financial services approximately is 30 to 35% of the industry revenues. For TCS, it grew by 0.6% in Q1, and this quarter it grew by 1.9%. And the management commentary was also that the recovery continues. So I think it's, there is a lot of heart, which is comfort, which is being drawn from the banking and financial services performance for TCS. So names like Mphasis have opened up well because they get a majority of their revenues from that sector.
But it's someone said slim pickings, right, in the sector. In that, I mean, there's a fresh opportunities on the back of where the numbers, etc., are coming through.
And the screen actually is telling you a picture, right? Because as Jim has been saying, valuation-wise, they're trading at a premium in comparison to its multiples. They've already seen a big run. TCS's numbers, well, they're not very inspiring, but the street is choosing to take the positives. Gives you the kind of, positioning that we're seeing in this one. All the tech stocks are already in the green, and TCS is on the verge as well of breaking into the green. So it tells you about, the market psyche, so to call it, and the approach to the tech space. They believe FY26 onwards, things will be much better.
Absolutely. So we'll see whether that holds. But Mihir Vora is with us now, Chief Investment Officer at a Trust Mutual Fund. He's with us in our studios. Mihir, good to have you with us here, as always. Thanks very much for your time.
Always a pleasure.
There's a new fund offering which Trust is coming up. We'll talk about that. It's on the small cap side. But since we have you, just thoughts on markets, Mihir. Is this just a bit of a pause that we're seeing as far as large caps are concerned in India? And generally, the outlook looks pretty positive. US is making new highs. Incrementally, if anything, there is positivity in China, which is used to be the other big growth driver. So global is holding up better than usual. What's your sense?
Absolutely. The domestic situation is fine. We're talking about 6.5 to 7.2%. RBI says 7.2. Consensus is 6.5 to 7% GDP growth. So that's I think holding up. The US domestic economy also has been quite resilient, so to say. But in general, if you see the pressures in the last few weeks have been on the debate in the West, between inflation and growth. And inflation has been creeping up from time to time. So you see these bouts where there is some fear of tightening. But my broad picture, or big picture, is that they have no choice but to keep interest rates low and keep printing away. Because the way the refinancing is coming up in the next 2.5 years for the US debt maturities, they have no chance of refinancing it if they don't keep liquidity easy and interest rates low. So I think structurally we will see higher inflation because of printing, but that will lead to higher asset prices. That's the big call.
So it's a positive environment. It's a risk-on environment.
It's a risky risk-on environment, so to say, because you are actually depending, and it's going to happen on a lot of money printing happening. It's a bad time to be poor because inflation hits the poor the most, and that's the situation globally. But that's the way things are. So assets will go up, whether it's stocks or real estate or gold, because of money printing.
Okay, risky, risk-on environment for the globe. What about India per se? And it's a tough time to be poor, right? Inflation hurts. So what about consumer durable names? Talk about the sector outlook from here.
See, India is different, right? For us, the situation is very different. Our demographics are far different from the rest of the world, even from compared to China, etc. So I don't think for us a 5% inflation is something new. We are used to it, and there is a difference between a 4% inflation with a 2% GDP growth, which is probably the case in the US, and 0% in Europe, and 7% GDP growth and 5% inflation. You can absorb that, because income levels keep rising, etc. So for India, things are different. We are not going to see downgrades in GDP growth.
Okay, and what's the overall call for Indian equities from here on over the next 3 to 6 months? Because earnings hasn't been very exciting.
I think it's going to be a stock pickers market. The global backdrop, as I told you, is going to be easy liquidity. So I don't think there's a risk of that. So FII flows as well as domestic flows should continue to hold up the market. The results season will be, sector specific, stock specific. I don't think people are expecting big numbers from the large caps in terms of, probably we are talking about single digit earnings growth. But in the bigger universe, there are lots of exciting stock picks. So India, I think, is becoming a broader market than what it was before. So to that extent, the sentiment should continue to hold tight.
Well, the sentiment is telling you it, right? Mihir, we had $5 billion of selling from the FIs in 5 sessions. We're talking about earnings growth for this quarter of 2 to 3%, and then a pickup in the second half of the year. And the market refuses to correct 5-6% as well. That's telling you the kind of money that's waiting in the sidelines domestically. But you tell us, y'all are looking to tap the small cap space. You'll have an NFO that's opening up. One would, people argue small caps are expensive. We say that Nifty is trading at X and small cap is trading at 25-30% premium. But you're still coming out with an NFO. Tell us how you're positioning this and few more details.
Absolutely. So part of the answer is in your question itself. When you said the earnings are likely to be, say, single digit, that's probably for the large companies at an aggregate level.
Yes.
But if I just do a cutoff of 2,000 crores, there are 1,100 companies of a market cap of more than 2,000 crores. The market's very wide now.
Yes.
India is a stock picker's paradise, I would say. So even if you remove the top 250, which is large and mid, 100 large, 150 mid, there are still 850 companies to choose from with a market cap of more than 2,000. And of course, we can go below 2,000 also. So when you are saying expensive, small caps are expensive, I don't think it means that 1,000 companies are expensive. Probably
a part of the market.
A part of the market is expensive, frothy, and probably the extremely micro caps, SME segment. But if you look at the structural change in the market, 10 years, 15 years ago, the top 100 companies used to comprise of about 80% of the market cap. Today, it's about 60%, right? So it's no longer a concentrated market as it was before. It's broadened a lot. 4 years ago, there were 200 small caps or 220 small caps with a market cap of more than 2,000 crores, the way I use the cutoff. Today, there are more than 800 such stocks, right? The largest small cap used to be about 7,000 crores. Today, it's about 30,000 crores. The 251st stock, as we say, it's about around 30,000 crores. So, number of stocks wise, size of the small cap universe, you talk about market, broadly speaking, we are about 450 lakh crores market cap, right? 90 lakh crore out of that, so more than $1 trillion is small caps. And another 90 lakh is approximately, I'm just rounding off the numbers, mid caps. Right? When we talk about that 40% being mid and small, it's 90 lakh crores each. The size of the universe itself is quite large. So when we are talking about the small cap space, it's a wide canvas.
It's a stock pickers, this thing. But as Nigel was asking, the question is about timing. There are periods when, for example, 2018, right? I mean, we only found out in hindsight that, it just topped out. Markets didn't go anywhere.
Absolutely.
I don't know why, but it happened. It happened. Maybe excesses or whatever. You think you don't think there's a timing issue here at all, or you think it's okay?
My comfort comes from the fact that the markets have not been completely irrational. So, for example, we still like chemical sector, right? But if you see chemical stocks, they have corrected quite a lot in the last 1.5 years. I'm not talking about just 2 months. I'm talking about 1.5 years of corrections in chemical stocks, 1.5 years of correction in banking stocks. A lot of correction in defense has happened in the last couple of months. So it's not like everything is trading at all-time highs, right? And if we still believe in the structural stories in some of these segments, then valuations can make sense. So as I said, the canvas is so large. We are talking about 800 stocks, 1,000 stocks, that there will be stock picks available, which we are confident of. And the good thing about small caps is that it fits in perfectly with our investment philosophy of terminal value investing. Because all the things that we talked about, remember during the NFO time, the previous NFOs, about physical asset creation, about financialization of savings, about premium consumption, etc. A lot of these themes, frankly, are available only in small caps. So if you want to participate in so many of these high growth themes in India, you have no choice. 90% of the choice, 80% of the choices in terms of number of stocks are in small caps only. For example, if you want to buy a hotel stock, it's doing so well, right? The sector is doing so well. There's no large cap. Well, you get at least 10, 20 options in mid cap. Consumer durables you talked about, right? There is no large cap consumer durable. The only options are mid and small cap. So exposure to high growth sectors can only be there in some cases through or predominantly through small cap.
And also there are so many niche sectors, industries which feed into bigger industries where the exposure you can only get through some of those.
The other thing that has changed structurally is that earlier mostly small caps were ancillaries to large caps. Now small caps have their own segments. For example, wealth managers. I don't think they are ancillary to anything, right? Asset AMCs or broking companies, they're not ancillary to any large cap. They are standalone segments in themselves. So all these themes can be accessed only through mid or small caps.
Should we assume these are sectors you like?
Absolutely. we have laid it out in our presentation.
So tell us the sectors that you like, right? List them out, the top 5 sectors that you like right now.
We talked about the broad themes. So first is premium consumption. So in all segments of consumption, the premium segments are doing very well. So whether it's in real estate, whether it's in consumer durables, whether it's in, for example, gems and jewelry, those kind of segments will cars, two-wheelers, in all those cases, the higher end consumption is growing at a faster rate. The size may be small, but the growth rates are higher in that. Financialization savings, right? So we are talking about all the non-lenders. Lenders are usual stuff, but non-lenders are where the higher growth rates are, for example. When you talk about insurance, asset management, wealth management, broking, capital markets, the depositories, etc. So those segments will grow faster. Physical asset creation, we all talked about manufacturing, real estate, construction, infrastructure, those segments. So those are the themes which we really will drive the economy if we are to grow at 7% or more than 7%. And of course, our favorite segment, which is the new age companies using new business models.
Okay, all right. Quick word on cement before we let you go, because that's the sector that does well in the second half of the year, and the first half has been a washout. Whether you talk about elections, you talk about the monsoon, seasonally weak, but the first half has been a washout. So just leading into the next discussion, your view on the cement stocks?
See, I'm a real, what do you say, structural bear on commodities, because our investment philosophy is long-term growth and visibility of growth. And commodities like cement, etc., are too cyclical in nature. While there may be supply, demand, and seasonal opportunities available, structurally, they are commodities, and beyond a point, wealth creation it can happen only, through some barriers, entry barriers, etc. So, in my view, cement is more of a trading segment, and we don't consider it as a long-term structural play.
Okay, all right, got that, Mir. And I think with regard to this commodity segment, you rather play segments like, I think, pipes or something like that is what you'll have been bullish on in the past. So you don't play the commodity, but maybe where it gets used and where there is an end use of it, like I think the water theme and various other oil and gas themes. Thanks a lot, Mir, for joining in.
Always
and
a pleasure.
All the best for the NFO. We look forward to chatting up with you post the closure as well.
Thank you so much.
Okay, all right. Well, since we just got a take on cement, let's turn the spotlight on the cement space. The first half of the year has been a washout. However, the hope is the second half of the year will be good. So we'll, in a short while from now, we'll have Mr. Sandeep, the MD and CEO of Birla Corp, who joins us, as well as Mangesh Badang, the Senior Vice President at Centrum, who joins us. Mangesh, let's come across to you first. Tell us, what kind of recovery are you anticipating and what are the initial feelers? You know, from September onwards, we've been hearing about this price increases. Has it happened? Has it got absorbed? If yes, quantum, and where did it get absorbed? Which geography?
Hi, good morning, Nigel, and thanks for having me. So yes, there have been some price hikes in the region. So for the past couple of months, we have seen marginal upticks. But I have to say that, you know, the attempts are there from the companies to increase the pricing. And we might see even in the month of October, there would be at least a couple of rounds of increases. Till now, on an all India or the pan India average basis, I think 10 to 15 rupees kind of a price hike has already been absorbed. And we have seen announcements in the month of October of similar quantum of say 15 to 20 rupees per bag. We'll have to wait and see for some time whether these gets absorbed or no. But at least in terms of growth, there have been signs that pricing has actually improved. If you ask me about the regions, I think East is the region which has at least till now seen highest increase, but that is also because that region had seen a substantial drop. The prices had reached a level of almost 4 to 5 years low, and from there has been some increase. And that should be followed by South and then West. In terms of pricing, till now, I think Central is the region which still remains a bit weaker, but I think it will also catch up. For demand, I think is expected in the second half. It has still early days, to be honest, but at least, you know, we feel that post this festive season, I think that should start substantial.
Okay, all right. Got that, Mangesh. So at least there is a hope. I think, you know, what the companies are trying to do, and this is the feedback that I've broadly got, is try to push a price increase, but also you're assuring yourself that at least you're forming a base for pricing. As you said, in certain regions, it's 3 to 4 year lows. So may not get the entire price increase, but you're creating a base, which will be good news. Let's talk about a couple of other aspects then. Demand as well has been weak. And I think in your note, you're noting that, you know, in the last quarter, we could possibly have a degrowth as well. For the year, what kind of industry demand growth you're factoring in? And is there a downside risk to that?
Yeah, so we, in fact, were on the lower side while assuming FY25 demand growth. So we are at around 5%. And I think the industry will have to grow at around 10 to 11% to reach those levels, which is basically possible. But I think, 4 to 5% is the range that I would see for FY25 now. But definitely, second half would be much better because we've had good monsoons. And we have started hearing that at least, the government spending should start and, the money has reached the panchayat levels and, on the groundwork should really start on various infra activities, which should be good for the overall cement demand.
Okay, so got that. Now for EBITDA per ton, because of weak pricing, weak demand, you're saying that, the ballpark number for the industry, I think you're working with is around 700 rupees. Now, given that pricing will improve, volumes will improve as well, this EBITDA per ton from round about the 700 rupees, what does it improve to in the second half of the year for the industry at large?
Yeah, so for second quarter, we are estimating close to 700 rupees EBITDA per ton. And what we feel is that if you extrapolate the current prices to most of the cement companies' earnings, I think they are at around 950 right now. So I think, that four-figure mark that is above 1,000 can be reached in third quarter itself with relatively better pricing and good demand as well.
Okay, got that. So, we are already likely to be at around 950, and for the third quarter on an average, it could be around 1,000 rupees. So that'll be good, right, Mangesh? From 700 odd, it improves to around 1,000 rupees. Let's talk about some inorganic growth, Mangesh. And we have been in touch, I think, for 10, 12 years odd. We have heard so many rumors about this asset getting sold, that one getting bought out as well. The problem is in the last 2 years, actually, many of these assets and many of these deals have actually taken place. Now we are hearing about Heidelberg Cement. But I think most of those reports are indicating a valuation of 10,000 crores odd. I think they're also including the Zuari asset. So according to your estimates, what should this asset ideally be priced at? It's got a good, a good exposure in the central part of the country. But what kind of an EV per ton would you think this asset gets sold at, if at all it does get sold?
So if I have to do reverse calculation at 10,000 crores, if I include both the assets, that is Zuari as well as Heidelberg,
the value comes to around $82.5 EV per ton. And I think it's a fair value for the assets given the size as well as, so somewhere between 80 to 90 is the one wherein the companies, if you purchase at this price, they can generate 12 to 13% kind of ROCs. At current prices, in fact, ROCs could be lower, but assuming that some efficiencies get built in, some pricing premium gets captured, some synergies get developed, and then, your return ratios improve. So I think that is the range one should be looking at. Anything higher than that, then probably, the acquirer has paid probably higher. Anything lower than that, then you can assume that, basically that company has not got fair value for the same.
Okay, and just to, help our viewers with the capacity, the total capacity of the group is how much in India? Heidelberg as well as...
in my opinion, it's 14.5, wherein close to 7 million tons is in Heidelberg and 7.5 is in Zuari.
Profitability of Zuari has been lagging Heidelberg?
Zuari is higher than Heidelberg.
Got it. All right. And who would be best placed, Mangesh, to pick up this asset? It's a decent asset, I believe, in the central part of the country. Who do you think will be gunning for it? Will it be a strategic fit for...
All the large companies should ideally vie for the assets. Where it will go is very difficult. It's, your guess is as good as mine. But very difficult to pinpoint one. But as I said, the larger ones are the ones who are in the forefront, who have been the consolidators in the industry. I think those are the ones who would be vying for the same.
Okay, all right. Tell us which are the companies now that you're positive on. You've given us a good idea about how things should shape up. Pricing will improve, demand will improve, 5% on an average growth for the industry. EBITDA per ton improves as well to around 1,000 rupees per ton. Your top buys, top two top buys and your top sells.
So I think one should go for the consolidators right now because, we feel that another 20 to 30 million tons of capacity at the minimum is up for grabs. And the larger ones are in best shape in terms of their balance sheet as well as size to capture and, the kind of synergies they can drive from those acquisitions. So I would still go with Ultratech and Ambuja as top picks in large caps. And within the smaller ones, I think, JK Lakshmi is the one which is looking relatively well placed right now. I would, in terms of basically, I would not be net short or net sell on any of the cement. But I can say I can neutral on, say, the likes of Ramco, Shree, and the rest, Sagar and others.
Okay. All right, Mangesh, appreciate you joining in and filling us in with your analysis about how the last quarter was and how the coming quarters as well will shape up. We look forward to chatting up with you, and in case there's a deal in the next couple of weeks, well, we look forward to having you on the channel and we'll analyze that deal as well. Well, let's get back to the markets then. The Nifty is sitting with a bit of a cut. The good news is that the breadth of the market is more or less even Stevens, and the metal index is the one that's outperforming today. It's up close to around 1.5% to around 2%. You have Hindalco, Tata Steel, both of them are up in trade. And I think TCS, Rima, as we are having that cement discussion, briefly I think it went into the green. It's still sitting with a cut of around 0.5%.
Indeed. So TCS is down 0.5%, but HCL Tech and Wipro is where this, the stock where we are seeing some buying. So these stocks are higher by 1%. Infy is largely flat, but with a positive bias. We'll get into a break on that note. We'll come back and talk pharma once again. It's a special segment, Quarter Se Quarter Tak. We'll focus on Q2 pharma earnings. Sumit Gupta of Centrum will also join in.
ये एक बहुत ही सफल उद्योगपति तो थे ही, लेकिन उससे भी बड़े व्यक्ति के रूप में हम उनको देखते हैं, क्योंकि जिस प्रकार से उन्होंने देश के लिए और समाज के लिए काम किया है, उन्होंने केवल सफल उद्योग नहीं खड़े किए, एक विश्वासार्हता खड़ी की, एक ऐसा ब्रांड खड़ा किया जिसने हमारे देश को एक ग्लोबल इमेज दी और उसके साथ साथ अपनी संपत्ति को टाटा ट्रस्ट में विलीन करते हुए उन्होंने इस विश्वस्त व्यवस्था से, ट्रस्ट से जिस प्रकार के फिलैंथ्रोपिक काम उन्होंने किए हैं, चाहे वो शिक्षा के क्षेत्र में हो, चिकित्सा के क्षेत्र में हो, रिसर्च के क्षेत्र में हो, बुनियादी क्षेत्र में हो, समाज और देश के उपयोगी
Okay, welcome back. So you've got the market which is flattish, not very much going on, at least as far as indices are concerned. But it's earnings season. At least we're getting into it in the right earners. And it's our segment, Quarter Se Quarter Tak, where we get you earnings expectations from various sectors. Today it's Pharma we're going to talk about. Ekta is here to take us through what we can expect overall. Ekta, over to you.
Thanks for that. Well, for Q2 of FY24, analysts are expecting pharma companies' sales and EBITDA to grow around 8 to 10%. Profit growth could be as much as 11%, led by lower interest expenses. The growth for pharma companies this quarter is expected to be led by domestic formulations, which is the India business, growing around 10 to 11%. Company-wise, the likes of JB Chemicals could see a strong growth of over 20% due to the traction in ophthalmology. Torrent Pharma could grow 12 to 13%, led by better market rep productivity. Watch for Dr. Reddy's, which could see a good growth of over 10% due to the JV with Nestle as well. Coming closely to the US markets, companies could grow as much as 11%. Due to the strong growth in Sun Pharma specialty sales, expect continued traction in niche launches such as Revlimid generic as well as Dr. Reddy's and Natco and Spiriva generic and Suprep for lupin, and easing price pressure supported by drug shortages to drive the overall growth.
All right, Ekta, thanks very much for that. You know, we'll sort of get to some of the other names as well in a bit from now. Ekta will have that glass of water. All right, Sumit Gupta is with us, AVP Research at Centrum. Sumit, good to have you with us here. Thank you very much for your time. So just the sort of big points to note here as far as when we navigate through this earnings season. Are there some common themes or factors which affect everybody? And then we'll get into specifics.
Yeah, hi. Thanks, Prashant, for having me. Good morning, everyone. So the common themes are like basically the pricing pressure has kind of like it is in the mid-single digits, 4 to 5%. However, there has been drug shortages which are supporting the overall prices. And moreover, if you see the niche launches, company-specific niche launches, just like Revlimid for some 4 to 5 companies, it remains a good opportunity for this quarter. So we see from company point of view also, these are like just like for let's say for Sun Pharma, there's a specialty portfolio which is leading the growth on a quarter-on-quarter basis. So this is likely to drive the growth overall on the US part. And on the domestic part, if I come to, so basically we expect the domestic formulations market to do good for this quarter also.
So, Sumit, hi, morning. So, amongst the companies that you track, which is the company which is likely to report the highest growth? And secondly, which is the company where there is the risk reward is still favorable?
So we expect Sun Pharma to report a good growth. So basically, majorly led by the specialty segment and less dependence on the Revlimid part portfolio. So we are positive on Sun Pharma. Apart from that, Dr. Reddy's for this quarter can report a good growth in the domestic market led by Sanofi and the Nestle portfolio integration. Apart from that, so it will be specific segments, let's say in domestic market only, just like JB Chemicals, due to the ophthalm integration, it might show a 22% kind of growth, but however, on the base portfolio, it will be around 20 to 30% kind of growth, which will be much higher, basically 150 to 200 base kind of outperformance through the IPM.
All right, Subhath, hi, good morning. Good to see you. When you track the hospital space as well?
Yes.
You know, there's been this hope with regard to, you know, Healthcare Global, that deal effectively getting closed out finally. But we've heard that before. What kind of a valuation multiple does it trade at in comparison to the other hospital stocks? Because that's always been the cushion point, right? At around 250, 300 rupees. But now I think the stock is close to around 450 rupees. So what multiple does it get? And if there is a change of hands, what should it deserve?
Sorry, we don't track HCG as of now, but I think overall on sector basis, like we see good traction in the hospital space also. In the near term, there might be some concerns regarding the volume pressure, but however, we are positive on the hospital space.
What about a stock like Divi's Laboratory, Sumit? There is increasing optimism going into Divi's Laboratory. The stock is down well. There is a GLP opportunity. In the last 3 years, I was just seeing the stock price return. The CAGR has been a muted 4%. So it's been a bit of an underperformer, but now it appears to be playing catch up. So thoughts on Divi's Laboratory from here?
Yeah, so Divi is also not under coverage, but still overall, like you mentioned, just like the GLP opportunity is there, and moreover, the China Plus One opportunity that is going on. So these are kind of sentiments that is playing over the whole sector as a whole, be it in the all the CDMO players. So Divi is, I think it's one of the beneficiaries there.
Got that. I just wanted a quick word, Sumit. It's a sector where I'm assuming you will agree, a lot of investors are bullish, right? Especially with the basic underlying driver is the first point you made, that pricing pressure has been dropping in the US for the last year and a half now, actually, right?
Right.
But stocks have done well. 2023, for example, many stocks doubled. This year, many stocks have gone up 40-50%. So where is the highest risk reward in that sense now, Sumit? Which stocks, in your opinion?
So in my opinion, companies like Sun Pharma, they will likely to continue to do well considering their portfolio. In the value chain, it is higher up the curve with respect to the pharma companies. So the specialty portfolio is doing good. The drugs such as Ilumya, Winlevi, Sequoia, Odomzo, all these are gaining market share on a month-on-month basis. So overall, I think it's a good portfolio, and Sun Pharma is quite comfortably placed there. Apart from that, Cipla is a second topic. So within the pharma, large cap pharma basically. If I come to the mid cap pharma also, so JB Chemicals and Torrent, we are positive on both.
JB and Torrent, got it. In terms of capacities, I think Aurobindo's got the highest capacities, right? When we talk about US.
Right, but won't be able to comment on Aurobindo, but yeah, Aurobindo seems quite well placed.
Aurobindo also is pretty well placed. Got that. We'll leave it there, Sumit. Thank you very much for joining us. Good speaking with you, and we'll touch base through the course of the earnings season as we start to get some of these numbers in. We'll need your expertise as we analyze those numbers. Bandhan, by the way, is up 8.5%. And that is, I think, one of the strongest names which is coming up on your screens. With TCS, I think there was one surge which happened after the gap down, but I think there perhaps may have been some little bit of pre-positioning, etc. All that got cleaned out, and now I think for the rest of the day you perhaps will see a more X the positioning from yesterday, kind of a reaction. We'll see which way that is. Infi should come up, and HCL Tech and a few others, as Rima and Nigel were mentioning as well. Look at what's happening on Credit Suisse at the bottom of the screen. That one is down about
Credit Access.
Credit Access. What did I say? Credit Suisse.
Yeah.
It's a Friday. So, but yeah, Credit Access, right? I mean, down 3%. Stock's done poorly. And it's interesting. Bandhan is doing well, of course, for stock-specific reasons, company-specific reasons at a time when microfinance is a space. I mean, the downgrade, for example, for Credit Access has happened because of the cycle and the states that they operate in and the elections and all that. We put that note out earlier. So, I mean, MFI, the cycle is turning bad. You heard from the RBI. They've also kind of highlighted some of these high growth areas as risky aspects, but you got a bit of a counter move going on in Bandhan because it never really went anywhere for the last 4.5 years or so. So that is a bit on Bandhan as well. Should we take a quick commercial break here? I think we will. We'll just sort of look at some more markets. There is, I think I saw some an order, guys.
Yeah.
Was it?
Yes.
Bondada.
Yeah.
I don't know where that came from, but yeah.
Bondada Engineering, they have won an order. I think it's a decently large size order, and it's one of those stocks I think that has been moving from strength to strength. I think in the last 5 days or so, the stock is already up 10%. Today, it's up another 5%. But in the last 6 months, the stock is up 170 points, 170%. They have won a large order. 1,100 crores is what they have won. But Rima, let's, since we're talking about various stocks, let's revisit some of those tech numbers. You can go for either or both. Tata Elxsi and TCS.
Well, Tata Elxsi is higher by 1.5% because at the bottom line, there is a jump of nearly 25% in the company's profitability on a quarter-on-quarter basis. So that's the reason why the stock is higher. But if you look at the core business, the revenues for the company are only up close to about 0.2%. Reported margins have gone up, but adjusted margins are lower for the second consecutive quarter. So that's what's disappointed the street. The reason why profits are up 25% is one, because reported margins are higher. In Q1, the company had a one-off boost to their margins. So reported margins are higher. And secondly, even the other income is on the higher side. So that's the 25% jump in the company's profitability, which has pushed up the stock price higher. Now, the company operates in three large segments. Transportation, where they get a lot of revenue from JLR, etc. They have communication and healthcare. Transportation for the company has been doing very well. It contributes about 45-50% to the overall revenues. But the other two sectors, media and healthcare, have been, the company's been struggling on these two fronts for the last couple of quarters. So that's the backdrop. Tata Elxsi also trades at higher margins, but that said, it's underperformed its nearest peer, something like a KPIT Technology. We should pull up KPIT Tech because transportation continues to do well. And while Tata Elxsi gets about 45-50% of the revenues from transportation, KPIT Tech is a 100% auto ER&D player, so where the business outlook is strong. But Tata Elxsi is also pricing in or expecting that things will recover for the full year. They are saying that FY25 growth to be better than FY24, which is 9.6%. But Mitesh is now with us for a quick tech check. Mitesh?
Yeah. Hi. So on the index, it's been a very quiet day, just kind of ambling around these levels. I've maintained that, this will be a market which is a sell and rally. So now the resistance is around 25,250 and then 25,400 levels. So around maybe 25,250, you would want to short it out. But till then, it's not giving you any kind of expansion. In fact, the market is showing signs of contraction. So it might just be choppy within a narrow range.
Any stocks that you would recommend for trade?
So on the stock, I think Divi's Lab is showing good continuation. So keep a stop below 59.50 here to look for targets of around 62.50, and it's been making new highs. So I think the good thing is that there is no historical supply pivot at higher levels. So could be a good trade. And that apart, I think Glenmark is also a trade on the long side with a stop below 17.60 for targets of 18.45.
Yeah, all right. Mitesh, the other part of the index which has been struggling to find its form, it's Reliance Industries. Now, that was a leader, all the way till I think 21,000 odd. And from there, it's been a relative underperformer. Where does support come in for Reliance Industries? And do you think the stock is seeking lower levels or it's forming some kind of a base to bounce back up?
See, Reliance, in fact, is at the support level. The monthly averages kick in around 27.30.40, and we've had a low of 27.22 for the month. And also, I think, we got a closing low of 27.40 on the 7th of October, and yesterday was 27.42. So kind of, trying to make some kind of support around this 27.40-30 zone. I think, this is long-term bottom as well. I think long-term support area as well. I think it's very important that the stock holds on to these levels. In case we see some reversal about 27.70, then I think, 75, I would even want to venture along with a very tight stop of about 30-40 points and a bounce back to about 28.40 levels.
Thank you, Mitesh, for joining in. Now, moving on to another big theme in the Indian market, and that is the rise of Indian beauty and personal care market, known as BPC. Now, according to Redseer, the BPC market, which stood at $21 billion of size as of 2023, is likely to increase to $34 billion by 2028. So we are talking about a growth of about 10 to 11% from 2023 to 2028, a 5-year period, with the online channel likely to grow even faster. This is driven by a surge in online penetration and a growing preference for high-quality premium beauty products. Even Trent, remember, announced its foray into beauty and personal care. They said that they will be selling these products at accessible price point. So the street is very excited. We have with us Biju Kasim, the CEO of the beauty business at Shoppers Stop, joining in, and Mrugang Gudgutia, the partner at Redseer Strategy Consultants, also with us on the show. Thank you, gentlemen, for joining in. Biju, let me start with you. Now, for Shoppers Stop per se, the beauty segment contributes about 5%. Can you tell us, have you seen a seminal material pickup in the kind of sales for beauty sales? Because last quarter we have the numbers and that was still about a 5%. But are we seeing an increased growth in the BPC market? Can it hit double digit for the next 2 or 3 years?
Absolutely. I think from a context of Indian market per se, there's been a lot of adoption to BPC overall. So, but particularly coming to the prestige segment, I think it's growing quite strongly. More so, we have seen a lot of slowdown in China, and there's also a lot of expectation. So it's also built up on the fact that brands are putting a lot of investment, and they expect to see very, very strong numbers coming from India.
So for you, it's about 17% of your overall revenues. BPC as a percentage of Shoppers Stop's revenue. How much can it go up?
Well, there are two situations here. One, for us as Shoppers Stop, definitely the ambition is to go beyond 20 and even further. But the opportunity that we see for India, because, BPC, particularly at the prestige level, is still at a very nascent stage. The penetration is still very low. I think all retailers, for that matter, all beauty players have got a very important role to play. This is about the education and to bring consumption to a next good level. So I foresee for the next 5 to 10 years, very, very robust growth coming in this segment.
All right. Hi, Biju. Good morning. Good to see you. And you're sounding rather confident about growth from here on. So a couple of questions then. If it has to go past the 20% as a contribution, then by when does that happen? What are the kind of investments you're making in this beauty segment? And what about the margin difference between beauty and the, extra beauty business?
So, well, at Shoppers Stop, we particularly believe in 3 philosophies. One is the expression, because I think today beauty needs to be represented in the best and the most glorious form that it deserves. Our Western counterparts or the American counterparts have really presented it well. And I think at Shoppers, one of the key desire is to bring to life the exact capturing of the beauty of the brands. Second is about engagement, which is about getting the Indian consumers to engage, to touch, to feel, and to really have the pleasure of using the products. And the most critical element is the education, because beauty, especially at the prestige level, is not so much of a habit. So it's about educating consumers as to what is critical about using them, how to use them when it comes to skincare, makeup, etc. And these are the 3 core pillars that we really work around.
Oh, but to scale up the business, you'll be investing money as well. Do you have a number in mind? And also, what is the margin difference between beauty and the other part of the business?
Well, infrastructure, particularly in terms of investment on capex and things, definitely is very, very important. When we talk about expression, obviously it comes with a lot of investment. In case of margins, I would not really want to go into the details of it, but largely beauty is not as margin efficient like other categories. But I think the SPSF, the sales per square foot, is what we actually work around.
Gentlemen, morning. Biju, just one question. I mean, it's also, of course, a sector where there is intense competition, right? So brands like you have your products. You, of course, also retail other products. You got celebrity products. Influencers in the market with their, at least a few now. I mean, of course, larger groups all getting into the space in an aggressive way. Foreign products also. I mean, is this going to remain disaggregated, or you think like some of the other categories, this will coalesce around, say, 3, 4, 5 larger brands or categories? Your thoughts?
So basically, there are 2 elements to it. Look, as I mentioned at the beginning, India for every brand is super important. So definitely everybody wants to get that pie. Secondly, and I'm talking from an international perspective, whether it is the P&Gs of the world, or the Cotis of the world, or the Shiseidos of the world, or the L'Oreals of the world, or the Estee Lauders of the world. So that's something that you will see more and more active involvement coming from international brands. Secondly, there are many active retail partners. For example, when we talk about the recent past, it is really, really heated up. Obviously, we have the D2C brands, you have celebrity brands, and so on and so forth. My take on it is India still is at a very, very nascent stage. And it is a responsibility of all stakeholders to really grow the market. And there is so much in it for everybody to feel very comfortable and confident and continue to keep investing.
Mrugang Gudgutia, partner at Red Seer Strategy Consultants, is also joining us on the show. Thank you very much, Mrugang, for joining in. Can you break up the Indian BBC market into mass, mid-value products and the prestige segment? There's $21 billion of size. If you could break it up in terms of revenue contribution and also the growth that we're seeing in these individual three categories.
Sure. I think the mass and mid value, as you would imagine in the Indian context, that still accounts for a pretty sizable chunk of the market. You could, as per our estimates, it's probably together closer to 3/4 or even 80% of the market. But if you talk about the premium part of the market, right, anywhere between 15 to 20% share coming from that, and that is a segment that is growing a bit faster than the total pie. So the total pie is growing at about 10-11%, as we saw earlier in this on the screen, and the premium part of the market is actually growing about significantly faster than that number. So that's a segment where there is a premiumization taking hold, and customers are getting aspirational, experimenting with ingredients, and obviously getting access to the right kind of global selection, which is kind of motivating them to obviously spend more on the premium part of the market.
So the premium market is growing at what percentage? If the overall market is likely to see a 10-11% kind of growth, premium would be 15%, 20%?
Yeah, I think it's in excess of 15%, in fact, in the premium segment. So that's a very attractive segment. And of course, even on the mass and the mid market, there are pretty good growth rates. But premium is where, in fact, a lot of action is happening from a brand lens as well as adoption lens. So yeah, plus 15%.
And how have platform companies performed? So say something like a Tira. They have an online and an offline presence. How has the performance been? Are they getting market share from, say, the likes of Shoppers Stop, for instance?
While I wouldn't like to comment on individual companies, but I would definitely like to say that given the very, very early stage at which the market is operating, right, in terms of the beauty consumption, it's only just coming through in smaller cities, in the tier 1 cities, and so on. So there is definitely a need for some kind of an omni-channel play, so that you cannot just do well only with online or only with offline, perhaps, or at least offline component is important. So we see these brands and platforms launching the offline experience centers, educating customers about brands, skin type, ingredients. And in our minds, all this competition is healthy and will play a role in educating and scaling up the market. I mean, the per capita beauty consumption in India is still super low compared to all international benchmarks. And especially in smaller cities of India, it's extremely low, right? So the catch-up potential is huge. And all these suppliers need to come in from various formats, products, price points to build this market.
Per capita spending in India on beauty products compared to, say, rest of the markets?
Yes, absolutely. It's very, very low. So out of a 1.4 billion population, obviously, we have just about a $20 billion of beauty consumption, right? So that practically translates to about $15 a year, right, per capita. Let's say if you take China's numbers, the figure would be at least 3 to 4 times higher in developed world. Obviously, I'm not even getting into the comparison. So that delta is huge. And then if you look at the big city and small cities, the non-metros are consuming 1/5 beauty per capita, right? So 20% of the big city consumption, 1/5 of that is, happening in the smaller cities. So not only is it catch up possible with global benchmarks, but even within India, there is huge disparity in the amount of beauty that is getting consumed. So a huge catch up potential domestically, across the cities as well.
All right. Thank you very much, both of you, for joining us. Good speaking with you, and it's a discussion which we will pick up as this market continues to develop and more products, more and more players continue to enter. We'll take a break. Commodities in focus. Manisha will be with us on the other side. Stay tuned.
कार्य उन्होंने टाटा ट्रस्ट के माध्यम से किए हैं। मैं ऐसा मानता हूं कि जितने महत्वपूर्ण उनके उद्योग है, उतने महत्वपूर्ण ये कार्य भी है। इसीलिए एक बहुत बड़े मन का व्यक्ति आज हमारे बीच से चला गया है। देश के लिए ये बहुत बड़ा नुकसान है।
ग्लोबल इकोनॉमी का फ्यूचर भारत से जुड़ा हुआ है। भारत की ये आर्थिक प्रगति नए अवसरों को लेकर आ रही है। आज महाराष्ट्र को 10 मेडिकल कॉलेज की सौगात मिल रही है। नागपुर एयरपोर्ट के आधुनिकीकरण और विस्तार का काम, शिरडी एयरपोर्ट के लिए एक टर्मिनल बिल्डिंग का निर्माण, आज इंफ्रास्ट्रक्चर से जुड़े इन 2 अहम प्रोजेक्ट्स का शिलान्यास भी हुआ है।
Okay, welcome back. We've got the market, which at least on the indices are not doing very much. But let's focus on the commodity markets. Manisha is standing by with what's top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices, which have seen gain of almost 10% over the week now. We're looking at 3.5% to 4% of a jump up in both the crude varieties overnight. And with that, the crude oil prices are headed for a second weekly gain herein. We are holding around $78, $79 per barrel for the Brent prices at this point in time. Well, there are 3 major factors which really seem to be supportive of the prices. One is the increasing risks for supply disruptions, and most of it comes in between from Middle East there. Now, Israel is saying that they are looking at a very precise, timely and retaliation against Iran. The Israel Security Cabinet has met and it will be discussing time and response to Iran attacks. I mean, this always comes in as we are heading into the weekend, and you will always see that in last 2 or 3 weeks, we have seen buying positions accumulate on every Friday there. The second disruption comes in from Hurricane Milton in Florida, where 3.4 million houses are out of power and almost 25% gas stations are out of gasoline. So there is going to be a lot of demand in this region as and when we see the supplies come back there. That's the second reason that you have seen supporting the prices there. And then it also is about China measures, where there is an expectation that China will unveil draft laws to promote private sector growth. There also is an expectation, there's a time set as well, by the way, for this Saturday, where the Chinese finance minister will do a press briefing laying out the details of all of those policies that the street is awaiting. It is also about the IEA, which says that the supply has continued to decline in the global markets there. Well, the OPEC in any case is cutting supplies, and when you look at the US markets there, from 1.8 million barrels per day of production in December 2023, by the time it was September 2024, it's less than half at 0.7. So the production there as well seems to be declining. So whether it is about war premium, China coming out with more stimulus, or the production that continues to decline, all of these factors are quite supportive. A very interesting report that I was reading from Bernstein overnight, which says that if there is escalation in war in West Asia, then you are looking at the crude oil prices going to $100 a barrel. I mean, that's a scenario that they're not ruling out. But if there is a case that you see much of this tensions come down, then $70 is where they're looking at the crude oil prices. They do not believe that the prices can go to mid-60s or such, which many of the other banks and brokerages, by the way, seem to be talking about. A final chart will tell you on what we've done in sense of prices. So week on week, we are up by 2%. And in last 1 month, the crude oil prices have gained up by 10%, with uncertainties just continuing.
All right, Manisha, thank you very much for that. So that's commodities in focus. Well, let's take a quick commercial break here. On the other side, it's our discussion on It's the Economy. My colleague Lata will get chatting with Piyush Gupta of CRISIL and Suyash Chaudhary of Bandhan Mutual Fund to discuss if India Inc.'s cost of capital is heading lower. Stay tuned, that's coming up.
मैं इन सभी विकास कार्यों के लिए महाराष्ट्र के लोगों को बहुत बहुत बधाई देता हूं।
हर उस लड़की की, हर उस महिला की लड़ाई है जो संघर्ष के रास्ते को हमेशा चुनती है। आज संघर्ष की जीत हुई है, सच्चाई की जीत हुई है, और मैं चाहती हूँ कि हमारे लोगों ने जो प्यार प्रेम दिया है, जो इस देश ने मेरे को प्यार प्रेम दिया है, उसको मैं हमेशा बना के रखूँ, उनके विश्वास को हमेशा बना के रखूँ। अभी वेट कीजिए थोड़ा सा, अभी सारे रिजल्ट नहीं निकल के आए हैं, एक एक सीट निकल के आ रही है। पहले हमारा भी पीछे चल रहा था, लेकिन हम भी लीड में आए हैं, तो अभी रिजल्ट चल रहे हैं, अभी क्लियर नहीं हुआ। जब सर्टिफिकेट हाथ में आएगा तो कांग्रेस पार्टी की सरकार बनेगी।
Indians are celebrating the equity rally, but in this noise, people aren't noticing that there is a continuing bond rally. A bond rally means government and companies are borrowing at far cheaper rates. Today, I have with me two experts, Suyash Chaudhary from Bandhan AMC, who is arguing that government is going to borrow cheaper and cheaper structurally. There is a bond rally. And Piyush Gupta from CRISIL, who says that India Inc., that is corporate India, has also been borrowing much more cheaply than 2 or 5 years ago. Both are saying government and companies will continue to borrow even more cheaply. That is, the bond rally is set to continue. Now, why? That's what we are discussing today. And let me welcome Suyash, and Piyush will be joining us in just a minute. Suyash, good morning. Thank you very much for joining us. Well, make your case first. Why do you think the rally is set to continue? We understood you could make a case why it has rallied, but why is it set to continue?
So, Lata, for any asset class to expand valuation, there are two conditions that need to be met. One, a solid narrative that supports incremental capital allocation into that asset class. And second, unlocking of more pools of capital that can be allocated to that asset class. So both need to be met, because you can have a very strong narrative, but if the same amount of money goes into that asset class, then everyone would like to be invested, but additional demand is not coming. And second, if you don't have the narrative, then you won't be able to unlock fresh capital classes. For India fixed income, our argument is that both conditions are being met now. So if you look at the macro narrative, it is well discovered. So I needn't get too into detail, but quickly, not all of that is cyclical. There are structural elements to our current account deficit compression owing to a higher run rate on services trade surplus. There are longer term triggers for fiscal consolidation, including greater formalization. And there is an RBI who is now well regarded as a macro stability and financial market stability targeter. So that's the narrative which both markets understand and respect, which is equity and bonds. Now for the additional pools of capital that probably are getting unlocked for the first time in a very long time for fixed income markets. Now, traditionally, retail savings into fixed income used to be intermediated by banks, which is, you put deposits in banks and banks will go out and make investments, including in SLR bonds. More and more over the last 4 or 5 years, this role is being taken up more meaningfully by pension and insurance companies, which means that local savers saving pools are now more and more allocated into long-term government bonds. And it's a very powerful effect that we are now seeing over the last 5 years, where long-term money's allocation to outstanding government bonds has increased by a full 5 percentage point. The other very large pool of capital that is in the process of getting unlocked for India fixed income is global institutional investors. Our argument there is you are just scratching the surface at the $18-19 billion or $20 billion that you have received so far. If you see India's outstanding FPI participation as proportion of total government bond outstanding, it is just a shade higher than 3%. You will find hardly any other market at a similar scale where it is so low. Just for context, Indonesia, if I recall correctly, is somewhere around 15%. Pre-pandemic, Indonesia used to be 38% owned by FPIs. Now, I'm not arguing that we'll go to Indonesia levels, but at 3.5%, we are truly very, very, very low on FPI ownership. And it's bound to increase given that India is the 5th largest market GDP now and a growing economy and a solid macro narrative. So bonds are fulfilling both these criteria of a solid macro narrative and incremental capital pools being unlocked. And we think that journey is very, very long and will continue over the next 3-5 years at least.
Okay. But Suyash, I'll tell you, there is one counter argument, or maybe a couple of them. One that, how much will Indian bonds fall from here? The expectation is that the RBI will maximum cut bond yields, cut interest rates, to 6%. There are not too many people expecting 5.75 and 5.5. Now, if it's only going down to 6%, if overnight rate is going to be 6%, then you don't see a 10-year going below 6.5, isn't it?
So Lata, we are also in the phase of asset market discovery as far as bonds are concerned, and this is not just a rate cut cycle alone. So we respect the fact that RBI will cut modestly. Our own view is 5.75, but give or take, we are in the ballpark. However, the way valuation expansion will happen for bonds in our view is twofold. One is, as rates get cut, even though there may be minor steepening of the yield curve incrementally, it won't steepen very much because you don't want higher risk premium for investing for longer. In fact, that trade is actually working in reverse, where you want to lock in for higher maturities given the India macro story. So that's one. We don't think the curve will steepen much as yields fall. And second way, valuation expansion can happen is today India bonds offer the so-called real positive yields of roughly around 260, 270 basis point versus forward forecasted inflation. Let's say RBI is at 410 for next financial year. And long-term credibility of RBI, the way it is, you won't expect inflation expectations from a market standpoint to be greater than 4.5. This real positive yield will also compress, but both are relatively slow moving and will happen over a period of time. So there could be a cyclical stop to the fall in bond yields.
So you're expecting what, 6% on repo?
Look, we don't have a number to that, but if 5.75 on repo rate gets achieved, then yes, 10-year bond could easily be in the early 6s. And we are still, reasonably, away from that. And bear in mind also that, market has still not made up its mind what kind of landing the West is going to have. That expectation turns on a dime. So we have gone from US, no landing to soft landing to hard landing back to no landing currently. And if, you eventually get a more than soft landing, then RBI will probably also cut to 5.5. So the way we look at the bond market is the current cyclical narrative also is for repo rate to fall to at least 6%. The structural narrative for asset discovery for bonds is powerful. And therefore, the investment decision is only one way for us, which is to be long bonds, especially long government bonds.
Okay. Got that, Suyash. Now, let me turn to the corporate bond market. Piyush Gupta, welcome to the discussion. Well, what we didn't know is that corporate bond yields have been falling and even people are buying a lower variety of bonds. That is, AA minus. Can you take us through this rally in corporate bond market, which seems to have gone unnoticed?
Yeah, I think what has happened in the corporate bond market, one is the spreads have shrunk. If you go back 5 years, the spreads were in the range of 90 to 100 basis points. If we look at current spreads, it's in the range of 35 to 45 basis points. I'm talking about AAA corporate bond benchmark securities. Even in the lower rated paper, if we see, there is a similar trend we observe in terms of narrowing of spreads. There's also another trend that we are observing is in the segment which is rated A and below, there's a good amount of supply which has come in the recent period. This supply has been sort of lapped up by segments like alternate investment funds, where there is a significant growth in terms of commitments being raised over the last few years.
Okay, but Piyush, there is also another problem coming. I mean, it's an eye-opener what you have just told us, that there is also greater issuance and purchase of lower than AA rated paper. This comes as a complete surprise that there is the share of unrated paper has gone up to 15%, your paper says. That's definitely an eye-opener. But what may be a dampener is that debt mutual funds are not getting as much money. See, up until 2 years ago, debt mutual funds had the tax advantage. But after that, they're not much better than FD, bank FD. So do you think that corporate bonds can suffer because of that? Mutual funds were the biggest buyers of corporate bonds.
Yes, I think apart from mutual funds, of course, there are segments like pension and provident funds and insurance companies. Of course, the demand for corporate bond in that space is towards the longer end. And that's where typically there is a challenge as far as provident and pension funds are concerned. Mutual fund, we have seen decline in terms of flows, but the recent trend shows that there is some uptick with respect to flows coming into longer term debt funds, especially in the last month that we saw. The expectation of rate cut, decline in yields can possibly spur some growth in the longer term corporate bonds in the that, of course, there is also there are a number of launches that are happening in the target maturity funds. It was something which had seen a bit of slowdown post the tax changes, but there is some uptick that we are seeing at least in that space also.
Oh, you're seeing some uptick. Suyash, a similar question to you. You would know even better since you are managing the CIO of a mutual fund. Do you see this as a major dampener that debt funds are not getting as much money and so, corporate bonds will not be purchased? How do you see the future trajectory of corporate bond yields, not just government yields?
So, Lata, first on debt funds, I agree with Piyush. There is some expansion of footprint that is now happening. So, year one after tax change, it was also volatile fixed income markets. And therefore, a lot of allocations were happening only to the very short end, which is overnight liquid at best money market funds. We are now beginning to see, more allocations also into short, medium duration products, as well as active duration, also long duration products. Although, like you observe, the quantum of flows would have been much better had the tax change not happened. Secondly, debt mutual funds themselves are innovating new products helped by incremental, leeway being given by the regulator on new asset classes and such forth. So basically, you have to solve for around 100-150 basis point loss on taxes, which you have new product categories to probably cater to. And third is, new and other investor classes are also emerging. So private credit in India is now coming up. FPIs, as they get more comfortable with the bond market, will also want to look at more high yielders. Some sense there is already some demand there. And therefore, the rub-off of the sovereign rally will, of course, happen on corporate bonds, although we would expect corporate bond spreads to widen somewhat, but that won't come in the way of corporate cost of borrowing falling. So we expect sovereign bond yields to fall faster than corporate bond yields, but that doesn't mean corporate bond yields won't fall. It's just that spread would widen somewhat. So the discovery process for India assets is not just restricted to sovereign, although the bulk of the benefit will happen to sovereign. It would also percolate to other fixed income sub-asset classes.
So what is your expectation in terms of corporate bond yield? How much is it falling over the next 2-3 years, and by how much?
So the one challenge with the corporate bond curve is that it's inverted. Right, so the front end up to 2 years is higher than 5, 10, 15 years on account of the credit to deposit ratio challenge that banks have faced, which is leading to higher, rates for deposits and therefore CDs as well. We expect over the next few months, as the CD ratio stabilizes and RBI wants to ensure transmission of its rate cuts, this issue will get solved and the corporate bond curve will become flat to steep. However, that limits to some extent the long corporate bond rally, because the first move will be the curve flattens and steepens and then a rally starts. So our sense is at the long end of the corporate bond curve, the spread would widen, but absolute yields will still fall by, whatever 25, 40 basis points over the next 1 year or so would be my guess.
Okay. Well, we have to wind up on that note, out of time. But Piyush and Suyash, thank you very much. That's a very important trend that you are pointing out to even the equity investors, that there is a downswing in the cost of borrowing of India Inc. and of Government of India. That's a lot of positive. It could mean a rating upgrade. It could mean a structural fall in the cost of capital for Indian governments and corporates. We'll wrap up on that positive note on Bazaar. Chartpast is coming up.
We have never seen Jamshedji Tata, Dorab Tata. People say, people...
TCS ticks lower after profit and margin miss estimates in the second quarter. Brokerages Jefferies, HSBC and JP Morgan remain bullish on the stock, while Nomura issues a neutral rating.
Oil exploration companies ONGC and HCL gain as crude oil prices gain overnight to nearly $80 per barrel.
Nifty Metal is the top gaining sector on hopes of an aggressive stimulus in China. Gains are led by Hindalco, NMDC and SAIL.
It's a double positive for Bandhan Bank. The stock surges after the bank gets RBI approval for the appointment of Padra Sen Gupta as the MD and CEO of the bank. The bank also receives claims of over 1,450 crore rupees for total dues of around 2,200 crore rupees from the NCGTC. The good news is there's unlikely to be further provisions post this settlement.
Cummins corrects in trade as Goldman Sachs downgrades the stock to a sell rating with a target price of 2,900 rupees a share, citing concerns over growth and margins.
Hello and welcome to Chartbusters. I'm Nigel. With me is Vivek today on a Friday. Vivek, well, it's as quiet as can be, right? The Nifty is more or less holding its ground. We are flattish. The good news is portfolios are feeling good because the mid-cap index is doing better and the Nifty Bank is stabilizing. But yesterday it had a bit of a breakout day. So you'll want it to build on from here on. And the Nifty IT index, one would have said TCS numbers were disappointing. Parts of the commentary were disappointing as well. But the dip has got bought into. The tech index is in the green, telling you the kind of frame of mind that the street is in. You have the tech index that's sitting with a gain of around 0.3%, and maybe that bit of a whisper that we heard yesterday that the numbers could be disappointing, that helped in pre-positioning, which in the end gives rise to some short covering.
Good morning, Nigel. You're absolutely right. In fact, despite the fact that quite a few EPS downgrades as far as TCS is concerned, the Nifty Tech Index actually managed to pull back. Yesterday, like you mentioned, the Bank Nifty did very well. In fact, names like Kotak Mahindra Bank were amongst the top gainers yesterday. The Bank Nifty seems to have cooled off a little bit, especially after yesterday's very strong rally. So it'll be important to see how that particular index does going forward. In terms of individual stocks and individual sectors, keep an eye out on the pharma space. Yesterday, you saw significant price correction as far as some of the pharma names are concerned. So look at names like Lupin, Cipla, Dr. Reddy. All of these stocks actually saw quite a bit of fall yesterday. Today, they've seen to have come back quite strongly. There have been quite a few notes coming in terms of some clarification regarding the news flow yesterday.
Well, that's right. Let's focus on a couple of stocks then. We have Feroz who joins us to help us detail Anand Rathi Wealth numbers. Hi, Feroz. Good morning and good to see you as always. Feroz, the numbers look quite good. The guidance you've laid out, well, you've smacked it in the first half of the year itself. So you put out a revised guidance. Give us a few details. What were the primary as well as the secondary issuances of structured products in this quarter? And also, if you could tell us, have the spreads moved?
Yes, Nigel. Firstly, yes, we've revised our guidance from 280 crores to 295 crores for PAT. And we have increased our guidance of the AUM number from 7,200. 72,000 is what we had said, but we are already at 75,000. So we have revised that AUM number to 80,000, and the revenue numbers have moved up from 910 to 980. That's our current guidance. Point one. Point two, I don't think we look at issuances on structured products so microscopically because these are all bottom-up numbers. If anyone is a shareholder, the way he has to look at it is these are portfolios created for 10,990 families. The culmination of the portfolio rebalancing and balancing activity results in whatever is my issuance. So we don't go what revenue I want to do and what structured product will I sell. I go bottom up because clients have earned money 20, 30, 40 years of hard-earned savings. So whatever is their return risk objective, that culminates to whatever is the allocation between the 3 products only which we do out of the 16 wealth management outfits can sell, which is debt mutual funds, equity mutual funds, and structured products. Now, if I have to give you some color in terms of the potential, ideally on April 1st, 2023, our structured product allocation as a percentage of the total assets was 29%. Now it has come down to 23, 24%, which implies that 5% realignment opportunity exists because of higher mark to market in the equity side. So 5% of 7,000 crores, 75,000 crores is the potential of structured product net sale over the next few months when we try and realign people's portfolio back to where it started from.
Feroz, thanks for that. So what you've essentially done at the end of H1 is that you've revised upwards your AUM guidance, your top line guidance, as well as PAT guidance. And we believe as far as the top line and PAT is concerned, you've already met close to 50% of your revised guidance that you have for the entire year. Now, number one, the main question here is net inflows, have actually gone and seen quite a bit of a dip on a sequential basis. Is this a one-off phenomenon according to you? And which asset class actually saw the dip? Is it on the back of the fact that there are actually a few open-ended schemes that were launched in the quarter gone by? Is it because of that? And how are inflows expected to pan out for the rest of FY25? What's the ground level feedback?
So firstly, the net, you're absolutely right. Sequentially, between the last quarter, same year, equity mutual funds have had a lesser net flow. See, what the problem is, since I'm not in the business of selling a product, I'm in the business of managing people's portfolios. What happens is, if I have to realign money from equity mutual funds, structure products to equity mutual funds, the flows could be larger there. So I'm not just a provider wherever there is be at the right time at the right place is not the strategy of Anand Rathi Wealth. So what's going to happen is, if I tomorrow reallocate money from structure product to equity mutual funds to structure products, which is what realigning the portfolio is all about. When markets give you a lot of return, you'll have to realign. So you might see an outflow from equity mutual fund into structure product. That doesn't imply that my clients have stopped buying equity mutual funds. It's a realignment. Point one. Point two, 5,700 crores. We had an aspiration 5 years back. Our total net flow was just 400 crores for the full year. We had this aspiration of getting to 1,000 crores per month, which we are almost close to. Unfortunately, we have not got to 6,000. 6,000 is what we had an internal target of. We got to 5,700. Some God's help, some markets help, the positive sentiment. But what I think your viewers should notice, which I'm sure will get unnoticed, is how does Anand Rathi Wealth Limited perform in the bad sentiment of the market? The worst quarter from a market standpoint after we've got listed 12 quarters back was the first quarter of FY23, where Nifty fell 10%. That quarter, sequentially, we grew 33% year on year.
Interesting. You made this point before as well, Feroz. So, it appears you're reassuring your investors out there that even in a bad market, you can continue to outperform. We get that. Give us a few details then. What's the blended yield in the past quarter? How do you see this number pan out going ahead?
See, now if you have 75,000 crores, if we are looking at 980, the yield is 1.2, 1.3 on the current assets. Yields are on weighted average assets, and AUM is measured as a picture, and yield is measured as a movie. So 75,000 crore AUM is the 30th September number. So if you look at the yields which we make on the three products which we sell for the last 12 years, we have not launched anything new. And the same boring things HNI buy, unlike the popular belief that HNI needs more interesting, innovative products, which is not the case. He needs a better Sharpe ratio. That's what we try to deliver. So coming back to your point, if you look at the yield, long-term yield, you will get 1.2, 1.3. What we make on our mutual fund model portfolio is 1.09% post-GST. The yield of structured products calculated backwards at maturity is 1.17 for the 3,000 odd structured products which we have done, and out of which 1,500 have matured, which is one of the largest maturities of our sister company, which is Anand Rathi Global Finance. I don't think most of the NBFCs wouldn't have had that kind of maturities paid on time every single time.
Feroz, on the front foot today, smacking it out of the park. Feroz, I can feel the confidence in your tone as well. Since you spoke about the three categories, the breakup of your AUM, debt MF as a percentage of the total mix, that was 9%, it's come down to around 6%. How do you see this number panning out?
There are two parts to it. We generally don't like to take assets. We try and keep a very strong bouncer at the gate itself. We don't bring short-term assets at all. If a person has intergenerational wealth, which is what most ultra HNIs and HNIs have, if somebody's got 20 crores, in the next 20 years, if he grew at 15%, 14%, he can have 150 crores. So he's not going to be, or she's not going to be able to spend it. So the reason why our debt proportions are small is because we believe that if the money is intergenerational, debt is almost like poison to the portfolio because it will not beat inflation. And this whole market timing of interest rates coming down, we don't buy that theory because the long end of the yield curve has not gone up. So if RBI reduces interest rates, it doesn't imply that the long end of the yield curve will also come down because it's not gone up. So yesterday 6.89 is the 10-year paper and 6.56 is the 3-month paper. This is the flattest yield curve India has ever seen, at least after I've started working in 2004. So I don't think this whole argument that debt will make huge capital gains if interest rates are reduced by RBI, because RBI tinkers with the short end of the yield curve. And so we are not bullish on any opportunity on the debt side either. And anyways, for long-term monies, debt will not be able to beat, especially given the post-tax returns, will not be able to beat inflation. And anybody who's got monies for the next 3 generations should not be wasting time in debt.
Feroz, another question, and slightly more from a regulatory point of view, and we want your view on that. There have been significant clampdowns as far as F&O trading is concerned, and there have also been a reduction in the number of expiries that each exchange is allowed to have. Do you see any second derivative impact, number one, on your business, number two, any impact on the structured products, and what is the kind of feedback that you're getting in from customers, especially given the fact that they will now face fewer products to trade in terms of expiries?
Yes, thank you for that question, but you've opened a little larger canvas, so let me try and explain that. Point one, I think that's the best thing regulator could have done. Because just go in weekly expiries in India started in February 19. That's close to 5 years plus. Just a year back, we had very few expiries. Now, because of the exchanges wanting expiries on every day, a person could have quit his job and had with the same 4 lakh margin could have done 1, 2, 3. Monday ko ek kaam hai, usko Friday tak kaam hai, and weekend he chills. So he was gambling with his hard-earned monies, and it could have become a full-time job because every day he had an expiry, and the same amount could have been used 5 times in the same week. So expiries converging or elimination is the greatest thing. Most retail participants or most even HNI participants don't even understand option Greeks, let alone Black-Scholes pricing model. They don't know what's delta, gamma, vega, theta, rho. The second order derivative of is also something which a treasury guy will know, which is Vera and Veta. These 7 items, without knowing this, if somebody is trading, he's only speculating, and and institutions have done 3-year courses. My colleague who has been at IIT Cambridge, who has done a derivative course and then sits on the terminal, he will definitely have an advantage over 99% of the retail traders. So as a parent, a regulator has to protect the interest, and I think this will be very good. From a structure product, collateral damage or collateral benefit, I think it will have a huge collateral benefit because futures volumes don't get impacted.
Thank you so much, Feroz. Out of time, for this short interview, we'll get you once again to discuss this particular development in detail. Let's now slip into a short break. After the break, we have Sandeep Bose, the MD and CEO of Birla Corp, to discuss the cement sector outlook. Stay tuned.
About them, they were very simple men of integrity, but in my life I met him, this man of integrity, simplicity, care for others, compassionate, always care for others. I don't think in my experience I met anyone like him, and it's hard to get someone like him. May I only pray, may his soul rest in peace. He was a legend. There was an era. It was the end of an era for me.
बहुत ही संवेदनशील व्यक्तित्व थे। जीवन भर उन्होंने टाटा ग्रुप को तो बड़ा बनाया ही, टाटा ग्रुप को अंतर्राष्ट्रीय पटल पर एक अलग ही पहचान बनाई, भारत की पहचान बनाई विश्व में, अपने ग्रुप को विश्व भर में बढ़ाकर। लेकिन साथ ही साथ उनके जो दानवीर चरित्र था, हर प्रकार से, हर किस्म से, हर अच्छे काम के लिए वो तत्पर रहते थे। कभी ऐसा कोई व्यक्ति नहीं होगा जिसने कोई उनसे अच्छे काम के लिए मदद मांगी हो और उन्होंने ना किया हो।
भारत का कोहिनूर रहा नहीं, हमसे बिछड़ गया है, ऐसा मैं कहूँगा। और रतन टाटा जी हमारे में नहीं रहे, ये बहुत ही वेदनादायी दुखद घटना है हमारे लिए, पूरे देश के लिए। पूरे देश का एक अभिमान था, हमारे महाराष्ट्र का भी अभिमान था। लाखों लोगों को उन्होंने उद्योजक बनाया, उनकी इंडस्ट्री बहुत पुरानी है और ऐसे टाटा कंपनी के वो सर्वे सर्वा थे और आज मैं यही कहूँगा कि उनको देखकर लोगों में ऊर्जा आती थी, प्रेरणा आती थी और वो
As promised, let's turn the spotlight on the cement sector. The first half of the year was a bit of a washout. The street is optimistic. The second half will be far better. To discuss this and more, we have Mr. Sandeep Ghosh, the MD and CEO of Birla Corp. Hi, Mr. Ghosh. Thanks a lot for joining in. Well, tell us, how are you reading the situation? The fear is that the first half of the year was a washout. Are you seeing signs of recovery now on the demand front? And what about pricing? Pricing is at the lowest we've seen in 3 to 4 years at various pockets of the country. Will price increases come about now? Are you seeing that sort of acceptance?
See, contrary to some of my industry peers of very larger concerns, I am still, I would be very cautious in my projections for the second half. And, some of them, the kind of growth they're projecting for the annual, the whole year, if you were to see that, the kind of hockey stick effect you need to have in the second half, to me seems very, very, bullish. But at the same time, if you were to ask me this question last week and today, I am personally, I think my optimism levels have risen slightly, and I'll explain that to you. And it is not so much for industry factors, but it is a larger socio-political, environment situations. Because this month, as far as demand goes, it is a festive month. You're right now into the midst of the Dussehra, when a lot of North India is affected. By the time you finish, you'll come into close to Diwali, and then today in November you'll have Chhat, which is today. It affects cement construction activities across the country, because you have construction workers from North India today traveling all over India, and they tend to go home. And so I would be, cautious about immediate organic demand growth just now. That's my overall feel. See, whatever people talk about the market, until your organic demand picks up, any kind of wishful thinking on prices, etc., to me has to be taken with a load of salt. So you saw some amount of...
So Sandeep ji, if you could give us a few numbers. You're sounding far more realistic and far more cautious than most voices on the street. Maybe with good reason as well. You'd rather project when you have enough evidence on ground. But as per you, at current reckoning, what are the industry estimates? For this year, what kind of a growth should we be looking at? And do you believe prices have bottomed out?
Prices may have bottomed out. That's correct. But in terms of how, I'll give you two scenarios: optimistic scenario and a cautious scenario, conservative scenario, as I'm saying. If it's a conservative scenario, I see the year ending between 5 to 7% industry growth. That is how I see it. The delta, instead of being over, if today, assuming your GDP growth is how people are projecting, even if that comes through, I don't see this time the delta being positive. Delta, there would be minus a percentage or 1.5% over the GDP growth. Therefore, between 5 to 7 is what I think is a reasonable estimate for the year's growth. But if what people are talking about, if in the second half, you see I've heard terms like pent-up demand, if pent-up demand releases, but that pent-up demand can release only in the individual home builder segment, and that too in the rural economy, because crops would be nice, a good set of crop, but you've had unseasonal rains. Even now you're having rains in many parts of the country. But given all that, if there are good crops, good returns, you could be having a growth there. But the biggest dampener so far is the government spending on development expenditure. Mind you, make a distinction between infrastructure and development. By development, I mean monies to be released in the rural sector, whether it is in developmental schemes of state governments or state government and central government combined, but central government releases the funds only if the state government puts in their part of it. And that's where I think has been the biggest bottleneck so far. So if those monies come forward, if people start releasing that, instead of diverting it to other welfare schemes, which are, pre-elections and the rest of it, then that traction you will see. Otherwise, you've seen today a shift towards institutional sales. That is the large infrastructure, because that is what has really kept the demand going so far. So overall, at a macro level in the industry,
Mr. Ghosh, we understand that and that will be an important shift if it does happen. A couple of key takeaways for us. Number one, you mentioned that pricing has probably made its bottom. You have a very moderate demand growth expectation of 5 to 7%. And now, what is positive for the industry is the fact that there are cost, tailwinds that are pushing in terms of petcoke prices, which have cooled off. So second half of the year, what is the kind of EBITDA per ton realization improvement you can see? And also in terms of your own incentives, have some of the incentives that you were expecting, has it come through from the government?
I am not going to talk about my company at all because we are in the silent period. And also, in terms of EBITDA improvement,
for the industry, given the fact that there has been moderation.
So moderation, you've had an EBITDA drop by all estimates, which I'm reading. People are expecting an EBITDA drop in the second quarter. I would, if that gets, if there is recovery from that, then one would look at the last quarter, Q4, optimistically, because that's traditionally a quarter where, you have the demand surge, you have the pricing surge, which didn't happen last year for a variety of reasons, elections, etc. This year, if this quarter sort of normalizes, both in terms of you recover the losses in prices, which has happened over the last 3-4 months, as well as the EBITDA drop, which people are putting at an industrial level by what I'm seeing, the analyst estimates all across, they're talking about 150 rupee kind of drop has happened in Q2. If there is, that has made up with some increment of maybe around the 100 rupees, then you're there. But again, word of caution, one doesn't know how the Middle East is playing out. So what you were seeing in petcoke, etc., we'll have to hold our horses there.
Right, got it. All right, very quickly, are you interested in Heidelberg Cement?
we are too small people. Today is a situation when every morning you wake up, you keep hearing about some acquisition happening, but that's more of your market-led, I think. People that you find some companies' prices, share prices shooting up, and the next day, a new candidate, your favorite emerges. We are not into.
I would,
that's very
Sandeep ji, appreciate your comment on that. That I think I'll take that as a negative. We're not interested in Heidelberg Cement, but I just want to show you that we are in CNBC-TV18.
I'm not saying interested, disinterested. I'm not in a position to comment. But what I'm saying, I don't get excited personally by every morning there is some new rumor, a new headlines coming. That's today the order of the day in the markets.
Got that, Mr. Sandeep. But I'll tell you what, we are at CNBC-TV18, we only put out verified information. And I think, since you'll be tracking the channel as well, rest assured, when we put out something, we're sure. Till then, in fact, we leave it to reports. Appreciate you joining in. All the best for the second half of the year. And we look forward to having a chat with you at the end of the quarterly results, because then you'll not be in silent period. For the time being, slip in a short break. Come back. We continue to focus on markets.
और हमारे भारत देश का अभिमान है, स्वाभिमान है। उन्हें हमारे सरकार ने उद्योग रत्न पुरस्कार, उनको कई पुरस्कार मिले, पद्मश्री, पद्म विभूषण, और जो भी पुरस्कार उन्हें मिले, उनको देने से उस पुरस्कार की ऊंचाई बढ़ गई। ऐसे उनका कर्तृत्व था। मैं उनको महाराष्ट्र सरकार की ओर से और महाराष्ट्र की तमाम 12.5 करोड़ जनता की ओर से भावभीनी श्रद्धांजलि अर्पित करता हूं। उनका आदर्श लेकर आगे बढ़ना, उनके आदर्शों पे चलना, यही उनके लिए सच्ची श्रद्धांजलि साबित हो सकती है।
रतन टाटा जी ये एक बहुत ही सफल उद्योगपति तो थे ही, लेकिन उससे भी बड़े व्यक्ति के रूप में हम उनको देखते हैं, क्योंकि जिस प्रकार से उन्होंने देश के लिए और समाज के लिए काम किया है, उन्होंने केवल सफल उद्योग नहीं खड़े किए, एक विश्वासार्हता खड़ी की, एक ऐसा ब्रांड खड़ा किया जिसने हमारे देश को एक ग्लोबल इमेज दी, और उसके साथ साथ अपनी संपत्ति को टाटा ट्रस्ट में विलीन करते हुए उन्होंने इस विश्वस्त व्यवस्था से, ट्रस्ट से जिस प्रकार के फिलेंथ्रोपिक काम उन्होंने किए हैं, चाहे वो शिक्षा के क्षेत्र में हो, चिकित्सा के क्षेत्र में हो, रिसर्च के क्षेत्र में हो, बुनियादी क्षेत्र में हो, समाज और देश के उपयोगी जो कार्य उन्होंने टाटा ट्रस्ट के माध्यम से किए हैं, मैं ऐसा मानता हूं कि जितने महत्वपूर्ण उनके उद्योग हैं उतने महत्वपूर्ण ये कार्य भी है। इसीलिए एक बहुत बड़े मन का व्यक्ति आज हमारे बीच से चला गया है, देश के लिए ये बहुत बड़ा नुकसान है।
Welcome back to Chartbusters. As you can see on the top of your screen, it continues to remain a largely lackluster trading session. But the good part of the session is the fact that the broader end of the market, so it's the mid cap and the small cap index, that continues to remain in the green. So that's the good part of today's Chartbusters, that the broader end of the markets are doing quite well. But with that, it's a wrap on Chartbusters. Stay tuned. Trading Hour comes up next.
अब ग्लोबल इकोनॉमी का फ्यूचर भारत से जुड़ा हुआ है। भारत की ये आर्थिक प्रगति नए अवसरों को लेकर आ रही है। आज महाराष्ट्र को 10 मेडिकल कॉलेज की सौगात मिल रही है। नागपुर एयरपोर्ट के आधुनिकीकरण और विस्तार का काम, शिरडी एयरपोर्ट के लिए एक टर्मिनल बिल्डिंग का निर्माण, आज इंफ्रास्ट्रक्चर से जुड़े इन 2 अहम प्रोजेक्ट्स का शिलान्यास भी हुआ है। मैं इन सभी विकास कार्यों के लिए महाराष्ट्र के लोगों को बहुत बहुत बधाई देता हूं।
हर उस लड़की की, हर उस महिला की लड़ाई है जो संघर्ष के रास्ते को हमेशा चुनती है। आज संघर्ष की जीत हुई है, सच्चाई की जीत हुई है, और मैं चाहती हूँ कि हमारे लोगों ने जो प्यार प्रेम दिया है, जो इस देश ने मेरे को प्यार प्रेम दिया है, उसको मैं हमेशा बना के रखूँ, उनके विश्वास को हमेशा बना के रखूँ।
Good morning, hello and welcome. You're with us on Trading Hour. It is 11 a.m. I'm Surabhi Upadhyay. With me is Hormaz Fatakia, and what we have is a slightly quiet session. But let's see how quiet, because the problem is that while the Nifty and I think the mid-cap index are along the flat line, watch for the banks. The Bank Nifty, and you can see the indices above us. The Bank Nifty is already down 0.5%. So that's the one to watch. Hormaz, hi.
Hi, Surabhi, and it's been a while, right? And the Nifty Bank, you know, it's very difficult to comprehend an index like that, because from within 8 trading sessions it moved from 51,000 to 54,500, and then in double quick time it came back down to 50,000. It's back now at 51,000. The problem with the Nifty Bank is every time it has a good day, it never sees follow-up buying after that. It had a very good day yesterday. It was an outperformer, ended at that 51,500 mark, and yet again today. Now it went up to 51,550, did not sustain above those levels, and it's back down to 51,250. What's dragging? HDFC Bank and ICICI Bank, just a one-off yesterday for HDFC Bank. Kotak Mahindra Bank had a very good day, so that played a part in the Nifty Bank's outperformance yesterday. But yes, it's the Nifty Bank is the underperformer today. What is having a good day though are the metal names, and they are eyeing that Chinese stimulus tomorrow. Some big announcements that are likely to be announced by the Chinese finance minister tomorrow morning. So the metals index, in anticipation of that, are doing very well in today's trading session. But the broader markets too are very quiet.
Broad markets are very, very quiet. There are a few bright sparks here and there. For instance, Bandhan Bank, and you'll hear more about this as we go along, where there's a change of guard. Plus, it seems that, you know, some of the regulatory issues that surrounding it have been now put to rest. So that stock on 10%. It's a big rocket, that one. There are other names. Look at 361. So there's some buying over here, 4% higher. Triveni Turbine, 6% higher. Wockhardt, by the way, is having a good day as well. Almost 5% up on Wockhardt as well. So these are some bright sparks you're finding here and there. BSE would be another one to watch, because now it's finally official. The National Stock Exchange has decided that the one contract that it intends to keep in terms of weekly expiries, the one product is going to be the Nifty. So everything else, Bank Nifty, etc., all of those other products, weekly products, they will get phased out. And BSE, I mean, that's a large part of, you know, the BSE rally. It explains the BSE rally. The news is finally official now. But even then, I mean, it's no sell-on news for a change. BSE is managing to put on another 2%.
Almost 95% now for the year is BSE. It's had a stellar year, and 50% in just 1 month. It shows you the kind of moves that BSE has. In fact, BSE was an underperformer for a better part of the year. And the last 2 or 3 months, that stock has just had an absolutely stellar move from levels of just under 2,000 and now nearing record high levels of 4,500 as well is BSE. But one of the big movers that Surabhi just highlighted is Bandhan Bank, and that is at a 10% now, at almost 10% gain. The appointment of its new MD and CEO. Brokerages are coming in with their views as well. Abhishek is joining in with all of that. Abhishek.
Well, the change of guard or new management in place for Bandhan Bank has spiked, the stock price by 10% and got the investor interest as well. So RBI has approved Mr. Partha Sen Gupta as the new MD and CEO of Bandhan Bank, and he has to take the charge before 10th of November 2024 for a period of 3 years. So Bandhan Bank has also received claims that they had raised to National Credit Guarantee Trustee Company under CGFMU, that is Credit Guarantee Fund for Micro Units, as well as ECLGS, that is Extended Credit Loss Guarantee Scheme. In totality, Bandhan Bank has received about 1,460 crores from the dues that they have of about 2,213 crores. So about 65-66% of these claims is what they have made a recovery or received money. In terms of brokerages, they remain upbeat on Bandhan Bank. CLSA has an outperformance rating with a target price of 240 per share. They say that the key overhangs are gone with respect to CGFMU audit being complete and new MD and CEO that has been announced by the bank. So with these two key overhangs now behind, focus will be on the fundamentals of the bank. However, in the near term, delinquencies outlook outlook for MFI is benign, believe that this is already in the estimates of many analysts and in the stock price as well. We also have Jefferies who have written on Bandhan Bank. They have a buy rating with a target price of 240 per share. They say that RBI has appointed Partha Sengupta as the MD and CEO for a period of 3 years. This should be taken positive, by the street, given the fact that he was earlier Deputy MD and Chief Credit Officer at SBI, as well as MD and CEO at IOB, that is Indian Overseas Bank. So he has also worked in West Bengal, which is a key area of operation for Bandhan Bank as well. So with past stresses clear, valuations look very attractive at price to adjusted book value of just 1.1 time FY26. They believe that they remain buyer for the stock. Back to you.
Okay, all right, got it. So multiple positives coming through for Bandhan Bank, and they've received a pretty tidy sum of money, 1,460 crores, as Abhishek explained, and that sort of tells us why the stock is so excited today. Thank you for that, Abhishek. Let's move on. The next stock on the radar is Cummins. Now, this stock is under pressure. There is a note coming through from Goldman Sachs. Let's find out what Goldman is saying, because the street is not too happy. 5% down right now on the stock. Vamakshi, tell us more.
Well, it's a thumbs down from Goldman Sachs on Cummins. They see three concerns on the horizon. The first one being with respect to the transition to the new stricter norms. Now, CBCP4 transition has made diesel gensets nearly 15 to 25% more expensive. Competitors too are introducing more SKUs in the high kVA gensets, and therefore they believe that the incremental market share gains could only come at the cost of profitability. The second concern is around the availability of lower cost alternatives. They say that they expect BESS, that is battery energy storage systems, and other alternatives to reduce overall demand for diesel gensets in medium to long term as the battery cost continues to decline. And the third is concerns around the growth rate in exports. They say that weak macro environment and stringent emission norms could keep export growth rates lower than the previous upcycle. So these are the three concerns that Goldman Sachs has highlighted, but they've gone ahead and downgraded their rating on this counter. They highlight that near-term margins could come under pressure and the medium-term growth is moderating in their opinion. They do highlight that the thesis may take 1 to 2 quarters to play out entirely as pricing discovery in the new engines takes place and genset demands kicks in after pre-buying up till July 2024. So given those factors, Goldman Sachs not really happy with Cummins. They've downgraded their rating to sell, target price of 2,900 per share.
That's a significant downside from current levels. Vamakshi, thanks a lot for that. 5% lower on Cummins India, near the lowest point of the day. By the way, pull up the rupee, and that is heading for a new all-time low now, nearing those levels of 84 against the US dollar. 83.995 was the day's low for the rupee, and that, I guess, explains the slight bit of up move that you're seeing in the IT stocks, despite the disappointment from TCS in yesterday's earnings that it reported. So the rupee, keep an eye out on that, now nearing a new all-time low at 84 against the dollar. But time for a short break. Up next, we discuss what's happening in the commodity space. Manisha Gupta joins us on the other side. Stay tuned.
अभी वेट कीजिए थोड़ा सा, अभी सारे रिजल्ट नहीं निकल के आए हैं, एक सीट निकल के आ रही है। पहले हमारा भी पीछे चल रहा था, लेकिन हम भी लीड में आए हैं, तो अभी रिजल्ट चल रहे हैं, अभी क्लियर नहीं हुआ। जब सर्टिफिकेट हाथ में आएगा तो कांग्रेस पार्टी की सरकार बनेगी।
carefully.
Back with us here on Trading Hour. On to commodities now. Manisha Gupta is joining in, focusing on metals now. Manisha, good morning. They say ummeed pe dunya kaayam hai. I guess ummeed pe metals are kaayam too on the China stimulus.
Oh, well, absolutely. That's quite poetic. But yes, the last 24 hours especially have seen a rebound come back. You know, we didn't start this week on a very positive note, and there was some profit taking after the previous 3 or 4 weeks of constant gains that we have seen in case of metal prices. But when you look at on a week-on-week basis, we still are headed for a weekly decline on this one. So when you look at the gold prices, after hitting an all-time high of 2680 and a low of 2600, we are holding at around 2660 at this point in time. So some rebound here. Silver prices also gained up by 2% in the overnight markets. Copper gained up by 1.5%. Aluminum was up 1%. Zinc 1.5% as well. So the markets seem to be really stabilizing after 3 days of decline onto this one. The one factor that is ensuring that the markets do not go out with short positions over this week is that we already have seen a China unveil a draft policy measure, and there is a China finance minister press briefing on Saturday where they would lay out a detail in sense of these policy measures on what it really means for infrastructure, for economy and for property sector as well. So that really seems to be supporting the markets. But as I said, the last 24 hours have been great. But on the weekly basis, we still are headed for a negative one onto this one. So gold is down 1.5%, silver down 5% as well. And 3 to 3.5% of a decline is what we are working with copper, aluminum and zinc. But as I said, going into this week, not too many people would want to hold short positions with expectations that China could be finally coming out with something very strong.
Oh yes, absolutely. It's China and we have to be completely prepared for all possibilities, right? The last one disappointed, but let's see if this is the real deal. Manisha, thank you very much for that. Let's take a break. When we come back, we'll discuss market technicals. We'll have Mitesh Thakkar joining in with some trading ideas.
So definitely we need more investment in healthcare. And I keep saying that over and over again. The reason is that, we know the size of our population. The disease burden could be up to $3 trillion by 2035 if we don't do it now. So there is a huge urgency in building out infrastructure. Second, access through insurance, which is happening, but so much more that can be done. The third is to look at the quality of life, because while we have mental health on one side, you have aging people on the other side. So the quality of life is very important, not just life expectancy. And as we look at this, preventive healthcare will play a huge role in keeping people healthy. In 1970, people, life expectancy was at 58. Today it is at 68. In 25 years later, you can expect it to be 87. So we have a huge job ahead of us keeping people healthy.
The aspiration that you have for the next 25 years as far as Apollo Hospitals is concerned, given the kind of opportunities that you see not just in India, but to service the world, I mean, what should we expect from you, for instance?
I think a lot of innovation. And innovation is key. India invests 0.7% of GDP in research. But at Apollo, we're continuously investing in research. And what we've seen is that, we're able to deliver healthcare, great quality healthcare at 1/10 of the cost. We are now working with IIT to see that if we could do the same thing to medical manufacturing, to make sure that, Tier 2 and Tier 3 can have the type of equipment that is life-saving and, gives you the right diagnosis. But most important, it's the networks of care that we're building, which is changing formats. We have big investments required in infrastructure, but we're looking at primary healthcare, secondary, tertiary, building networks of care and connecting it to the digital. And that gives access to a larger population. And once you're digital, you can take it across Southeast Asia. So my aspiration, and I think Apollo's aspiration, is to be relevant at least in Southeast Asia where healthcare is concerned. We're already seeing patients from the West fly down to India because of shorter waiting times. So to be globally relevant, I think that we have everything that in our favor. And with the right amount of skilling and the use of AI, we should be able to really make sure that we do this at large scale.
So an expanded global footprint by when?
It's always changing, but like I said, with with digital, it's about the number of people. We're treating 200 million. Our goal is treat 400, 500 million people.
Carefully.
Welcome back. It's a quiet session so far, but we have to watch out for the bank Nifty, as we've been pointing out. Mitesh Thakur is with us for a quick technical check and some trading ideas as well. Mitesh, hi. Speaking to you a little later in the day today. But what's the sense? I mean, the Nifty bank is right now, as we speak, it started collapsing. It's the big worry point. What's your reading?
Yeah. So I think, I've been maintaining that it will be a market which will see a lot of supply emerge at higher levels. And I think that is what is happening. I would still look for lower levels. The Nifty index per se could retest the lows of 24,750 and the Bank Nifty could get back to about 50,500. So the idea is that don't attempt longs because the market has come down and only stock-specific longs should be taken. And the financial pack does not inspire confidence to me. So for me, it's a weaker kind of a segment. It's also getting into an underperformance mode. So avoid the banking and the financial names.
Longs, Mitesh, but would you attempt shorts at these levels? Because considering the fall that you have already seen on the Nifty Bank from levels of 54,500 now to where they are, would you attempt shorts and couple that up with your stock recommendations as well?
So we have taken some short by the put options route, and that apart on the stock side, I have a sell on Grasim. That's turning negative. So keep a stop just above levels of 27.18 and targets of around 26.20. Maybe in the worst case scenario, even lower. 26.20 is where the stock made the recent low. So that's the first target. But I'm looking at levels below 2600 as well. So Grasim is on the negative side, while metals, I think, are the only shining spot in this week market. So Hindalco is a buy with a stop below 738 on targets of 760.
All right, Mitesh, thanks a lot for joining in with your views on the index and on specific stocks as well. Time for a short break. Up next, we discuss the way forward for the market with Anirudh Garg of Invest at PMS. Stay tuned, back on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century.
Welcome back, and the market's continuing to show some signs of weakness now. The Nifty has now slipped below the 24,950 mark, and leading the fall is the banking names. The Nifty Bank now down 0.8%, nearing the lowest point of the day. Below that mark of 51,100 now is the Nifty Bank. The other sector that is seeing a lot of pain in today's session is the real estate space. That index is down 0.7%. The PSU Bank index is seeing a bit of a decline, as is autos. But the metals are holding on to gains, as are some pharma names, Ravi.
No, absolutely. I'm looking at the slide coming through. So some of the big heavyweights like TCS, ICICI Bank, they are bearing the brunt because they're the weakest stocks on the index. So ICICI Bank is down 1.5%. TCS is down about 2.5%. Yeah, Pharma is the only little green, but look at the selling pressure on TCS. It is intensifying now. Beyond that, you have the likes of HDFC Bank. I'm just picking up the heavyweights, which are exerting so much pressure now on the Nifty. So there would be an HDFC Bank, which is weaker. Speaking of banks, even Axis Bank has taken a bit of a knock. So these are some of the big ones on the way down. The upside, literally, I mean, the only stocks that are really trying to fight for the bulls, like Horma said, is Pharma and IT. So you're seeing some names like HCL Tech, Mahindra, and of course, metals, of course. Tata Steel, JSW Steel, most of them are still retaining a little bit of their gain. Let's move on and get the conversation going with Anirudh Garg, who's partner and fund manager. Okay, I don't think we have Anirudh Garg just yet with us on the show. But in any case, a couple of the heavyweights like Lever and HUL, they are right now sitting absolutely at the flat line. So let's see which way this goes, because otherwise the weakness, courtesy the banks, is now beginning to really show up. So TCS, and the other part is of course banking, which is quite weak.
Pressure coming in from the banking names. Looks like it's going to be a weak close to the week. But we'll take a short break here on Trading Hour. Back with more on the other side. Stay tuned.
Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Start by talking to you about that. In Mr. Tata's own words, he said he would like to be remembered as someone who made a difference. Nothing more, nothing less. What do you believe has been the impact that Ratan Tata has had on India and on the House of Tatas?
Well, I think, Shirin, to start with, it is a sad moment to lose someone like him. But I think it's also a life to be celebrated. I think that very few people can make the kind of impact that he has made in one lifetime. You know, his footprint, as you know, goes far beyond just industry. I think his legacy as a humanist, as a philanthropist, will probably be remembered even more than his legacy as just being an industrialist. I think that his ambition or his dream of making a difference, he's done more than, more than one can imagine. To do that, to make a difference, he's made a difference to Indian, industry, to society, through all the charitable and philanthropic work that the Tatas do, some of which I know he was.
Welcome back. Well, 2 years after Britannia Industries signed a joint venture with the BEL Group, the JV has inaugurated its cheese factory in India in Ranjangaon, Maharashtra. This factory, which has seen an investment of 220 crore rupees from the joint venture, will produce Britannia, the Laughing Cow products. From the sidelines of the inauguration of the factory, Shilpa Ranipeta caught up with Varun Berry, MD of Britannia Industries, and Cecile Belliot, CEO of Bell Group, to discuss the company's product range, expansion plans, and, of course, the way ahead.
It's a modular capacity, right? So it's a fully backward integrated. We are tied up with 3,000 plus farmers from whom we collect milk. We add value. We teach them how to get better productivity from their cows. We collect the milk, we process it, and we make cheddar cheese, which is natural cheddar cheese. So our capacity is 6,000 tons of natural cheddar cheese currently, and 10,000 tons of processed cheese, right? Now this is modular. It's not that for every 6,000 tons and 10,000 tons we'll require the same capex. We can increase this with a small spend, right? So this can be expanded almost double to where it is today. We are currently making all the products that we are selling. So first we said that we must start making all the products that we sell in the market. So we make the slices, we make cubes, we make blocks, we make spreads. All of those products are being made in this factory, and you'll see it yourself. But we have the capability, because it's our own raw cheese, which is cheddar cheese. We can use that to produce whatever that we think is necessary from an Indian consumer standpoint. And with Bell's experience in product development and our understanding of the consumer in India, I think we are in a great place to take this train forward.
Right. And how's the performance been of Britannia Bell in the 2 years since the partnership was forged?
So the performance is basically nothing had changed, because we've just started producing in our factory, and as we start to get efficiencies, its performance has been as it was. We've been growing, but it's not been like 25-30% kind of growth. But now that we've got a back end, now that we've got the factory, we've got efficiencies, We are, by the way, we've always been selling at 25 to 30% premium to Amul. Now we are in a position with our own factory to start to see how we can reduce that premium and maybe, hopefully, one day bring it to zero, right? And if we were to do that with a product which is, extremely good, I think we'll be in a great place to create a solid momentum for our products in the market.
Right. In the last earnings call, you said 250 crore is what the cheese business is for you. But now with this factory and increased efficiency that you're talking about, how big do you see this then in the next year or two? How soon can we expect it to be probably a 1,000 crore business or a 500 crore business?
No, so I was just talking to someone. Our vision really is to grow this 3 times in 5 years, right? Which I think is extremely doable, and I think Cecil shares that vision. I think 750 is I would say, a par target, right? In 5 years, hopefully we can be better than par, and hopefully we can get closer to 1,000 crores in 5 years.
Right.
Yeah. And we start to have first successes. For instance, as I was sharing, the Laughing Co brand, so Laughing Co Britannia, before the GV, the Laughing Co was distributed in 2 cities only, Mumbai and Bangalore. Now we are in every city, in every city in India, big city.
Right.
The brand is here, which means 37,000 stores compared with less than 5,000, 2 years ago. And we have started to bring some true innovation on the market, like the soft cheese in a triangular portion. And this is a triple-digit growth for that kind of innovation. So
the round.
Exactly. So this one is a triple-digit growth. In terms of
That's
volume.
a 171% growth that you mentioned.
So it's just the beginning, it's a nascent category, it's a new brand, it's a new usage, so it takes time, but it gives a lot of confidence on the full potential for the brand when you bring true innovation to the market.
New innovations coming in from Britannia. By the way, Divi's Laboratories is the one that is going from strength to strength after that report that came in from Citi. That stock is now 2.5% higher, above the mark of 6,000. And Divi and Citi had projected a price target of around 6,500, if I'm correct. But taking a short break here on Trading Hour. More news and updates continue on the other side. Stay tuned.
All very quiet, didn't speak about it. You know that he was extremely low profile, shunned any kind of attention. And he was a true son of India.
Welcome back. You're with us on Trading Hour. Well, the next company in focus is BLS International. Now, BLS International has completed the acquisition of a 100% equity stake in Citizenship Invest, which is a Dubai-based company that specializes in, and I quote, fast-track investor programs for residency and citizenship across more than 50 countries. This is, of course, what we got from their press release. We have with us Shikhar Agrawal, Joint Managing Director at BLS International, to try and understand some of the rationale behind it and what it means for the company. Shikhar, great to have you on. Thanks for joining in. So what I understand is that I think you are in total going to pay around 260 crores for this acquisition, right? The company's current sales are about 81 odd crores. So you're paying almost 3 times sales. Tell us the rationale. How does it fit in with your portfolio and what does it bring to the table?
So basically, Citizenship Invest is a company that was established in the year 2009. So it has a 15-year track record, and currently they do, citizenship by investment and residency programs, and they, last year in calendar year 2023, they did a turnover of 81 crores and an EBITDA of 40 crores. So 45% margin, EBITDA margin, and we have paid 260 crores, which is around a 6-time or 7-time multiple. Normally we typically buy companies around that level. So this company is performing phenomenally well. It is one of the market leaders in this industry. With our network in 70 plus countries, we feel the market opportunity is very big for this kind of industry, wherein there are HNIs, who are investing in second passports, residency across different parts of the world. So we definitely feel that we can value and grow this company in the coming years.
So basically, you're saying that this company, which is Citizenship Invest, it looks at, helping the entire documentation process specifically from an investment perspective for anyone who's looking to take on a dual citizenship purely because of investment. Can you just elaborate on this? How does the model work?
So basically, in this industry, this company is authorized by 15 countries. They are one of the authorized service providers for these 15 countries in Caribbean island, in European countries, etc. So they help, individuals obtain passports by investments or donations. Different schemes of different governments are there, and they also help in obtaining residencies of different governments of different countries. So as you see, globally, there's a big demand for these kind of services. The market size is it's a multi-billion-dollar market. Every year around 30 to 40,000 applications are processed. And this company does only around 300 to 400 applications every year. So the market potential is huge. There's a huge growth potential. They are currently headquartered in Dubai. With our reach of 70 plus countries and millions of customers, we will definitely try to upsell these services. So we see major growth in the coming years. And also, this company grew 43% last year. So this year also, we expect good growth coming in this company.
So basically, you're saying that all of your customers using the services of this Dubai-based company will be able to get citizenship of these, key jurisdictions. You said they're in the Caribbean islands. And can you just name the jurisdictions, please?
So basically, we are currently present in 70 plus countries. So
no, not you. I'm talking about the jurisdictions for which this company has authorization that it can get you citizenship in these 15 odd countries. Which are these countries?
So there are multiple countries in Caribbean islands, multiple countries in Europe. So every year, new countries introduce different schemes. So there are multiple countries.
Shikhar, good morning. Thank you for joining in. How you've mentioned you've paid almost 3 times sales for this. Now, what are your plans to grow this company once it comes into your stable, and does that ensure that your growth also accelerates from what you are currently growing at already?
Yes. See, last year, if you see first quarter, we did 120 crores of EBITDA. That was a 70% growth compared to similar quarter last year. This does not have the numbers of either Citizenship Invest that we acquired in the last few weeks, and also iData that we acquired on 10th of July. So definitely, this company will add on to the margins and revenue and profitability from third quarter itself. And also we see a major growth coming in that will add in turn to BLS International growth. As I spoke, we have only touched the tip of the iceberg. This company is expert in this industry with very good credentials, very good relationship with the client governments, very big customer base. Now, using our network of our presence in 70 plus countries, we can do their growth multifold in the coming years.
You know, your digital business, Shikhar, was growing at around in single digits. Does this acquisition help you go back to double digits for this business, for the digital business?
This business is under BLS International, which is our visa consular services business, and we grew 70% in the first quarter in this business. And this Citizenship Invest also grew more than 40% last year. So definitely, this will go. I think we expect the growth to maintain in the coming years.
Shikhar, would it be, sort of correct to interpret this in a way that a lot of, say, HNI, ultra HNIs, who are looking for smart tax planning and all legal ways of, better structures in tax planning and looking for overseas destinations, this would be a valuable service to that target category of your customers?
See, definitely, this will be a valuable service to all HNI individuals across the world, from different territories, not only India, but also from a lot of developing countries in the Middle East, in African countries, in America. And people are now looking for second citizenship passports for multiple reasons, So that is why we feel the target market is quite big. It is growing year on year, and we expect major growth coming in this business in the coming years.
Okay, all right. We will leave it on that note for now. Shikhar, thank you very much for joining in. There's very important news on our screens right now with respect to the succession at Tata Trust, and sources are indicating to us that it would be indeed Noel Tata. The confirmation is still awaited. This is, of course, source-based information that we're picking up. In fact, we'll take a break and come back with more details on the story in a bit. Okay, I think, in fact, we have Vivek joining in right now. Vivek, even as we await confirmation and see what is the final outcome, if it indeed is Mr. Noel Tata or not. I mean, just tell us the contours, the holding company Tata Sons, why it really matters, and how the different trusts actually own and operate Tata Sons itself.
Well, you're absolutely right, and this is going to be a very, very important development to take note on. You can also see the flashes on the screen as to what exactly sources are indicating to us. What we're trying to do is we're trying to give a context as to what exactly does this mean and what is the implication as far as the listed companies are concerned, given the fact that, the next chairperson of the Tata Trust will have a significant say in quite a lot of the listed companies of the Tata Group. Now, first up, what we need to understand is what is Tata Sons? Remember, Tata Sons is the principal investment holding company as well as the promoter of the Tata companies. Now, in Tata Sons, 66% of the equity share capital of Tata Sons is actually held by philanthropic trusts, and Ratan Tata was the chairman of the Tata Trust. Tata Trust comprised mainly of two large trusts, which is Sir Ratan Tata Trust as well as Sir Dorabji Tata Trust, and together they own a little over 51.5% stake in Tata Sons. So now what next? Like we mentioned, 13 trustees in total across two trusts. 5 individuals amongst the two trusts are actually common trustees, of which the main ones are former Defence Secretary Vijay Singh, automobile industrial Venu Srinivasan, Ratan Tata's half-brother and Trent chairman Noel Tata, businessman Maili Mistry, as well as lawyer Darius Kambata. Now, way forward, clarity needs to emerge on the next chairperson of Tata Trust. And remember, the chairperson and the chairman is elected through the majority consent amongst the trustees. What is at stake? Remember, Tata Sons holdings spreads across quite a lot of the listed companies, across all of the Tata Group companies. The key amongst them, given the fact that the market capitalization of these companies are quite high. In TCS, remember, they hold over 71.5% stake, Tata Motors over 40% stake, Trent over 32% stake, Tata Power, Titan, Tata Steel, all of these names are large cap companies where they have well over 30% stake. So in all, Tata Sons controls over 16 lakh crore as far as the listed Tata Group companies are concerned, and the next chairperson, in effect, will have a significant say in quite a lot of the listed entities of the Tata Group.
Oh, absolutely, Vivek. Thank you very much for that context. In fact, let's get to Shireen straight away, because she's picking up from sources that the next chairman indeed could be Noel Tata. Shireen.
Well, with the caveat that this is the likely plan, this is the likely outcome of a meeting that will take place in Mumbai today. But as Vivek was also pointing out, that there are 13 members who will finally decide the course and the fate of the chairmanship of Tata Trust. But Noel Tata is likely to be appointed the successor, is what we're given to understand. But no final decision has been taken, and we're also awaiting a statement from the Tatas, no comment coming in at this point in time. What is interesting, Survi, is that, this goes back to that bitter boardroom battle that ensued between Ratan Tata and Cyrus Mistry, and then the change in the Articles of Association that took place, which essentially changed the course of the governance structure, where the same individual could no longer hold both positions, the chairmanship of the Tata Trust as well as the chairmanship of Tata Sons. And that is why you saw, post that bitter boardroom battle, which went all the way to the Supreme Court, that this change was made to the Articles of Association and N. Chandrasekharan was brought in. Now, what is widely been speculated is that there would be a comfort with the Tata family continuing to retain the top position as far as the trusts are concerned. But I also want to go back to what Ratan Tata had said to the Supreme Court in a filing, saying that it should not be assumed, and I'm paraphrasing, but broadly it should not be assumed that it could only be a Tata that would be at the helm of the trust. But that being said, at this point in time, what we are given to understand is that Noel Tata is likely to be the successor, and Melly Mistry is likely to be appointed a permanent trustee to the Tata Trust. Now, Mr. Noel Tata has already been part of both the trusts, the Ramji Tata Trust as well as the Ratan Tata Trust, as was being pointed out there by Vivek. And it's been a significant rise, even as far as Noel Tata is concerned, specifically to as far as the businesses that he has been stewarding and steering forward. He has had a significant rise across those businesses, and he's also been associated with many other Tata Group companies like Voltas, etc. So let's wait for the final decision to be made official. But Mr. Tata had not appointed a successor, and this was a decision perhaps in his wisdom best left to the members of the trust to take forward in light of his passing. And with that eventuality now, the reality, the trusts are moving quickly to take forward the succession plan, and Noel Tata may be the successor to Ratan Tata, but again with the caveat that it is no final decision has been taken yet, and we are awaiting a confirmation.
All right, Shireen, thank you very much for bringing us the latest on that developing story. This is, of course, source-based information as of now that Noel Tata could be the next chairman of Tata Trusts. We do have some experts with us to take the conversation forward. Mr. H.P. Ranina, Senior Advocate at Supreme Court, and Amit Tandon, Founder and MD at IIAS. Thank you, gentlemen, for joining in. So, like we've been saying, the caveats are in place. This is a developing story. It could be Noel Tata, but I think the purpose of this discussion is to have sort of a larger, clearer view in terms of, when we're looking at trusts, Tata Trust or any other trust, and it comes to succession planning, the rules which are at play. So, Mr. Ranina, if you could come in on this, like Shireen also pointed out, that the feeling seems to be that it would be, preferable to have someone from within the family to continue to be at the helm of the trust. But there are sort of a lot of non-Tata members as well who are trustees, who are part of, who are part of the trustee group. For instance, there is Darius Kambata, there is Mr. Venu Srinivasan of the TVS group. So just tell us that is it a given that the trustee, the chairman, would be from the family itself, or can a non-family member also get the chairmanship position?
Surbi, thank you for having me. I think a non-family member can also have that position, but you're right, and Shireen is equally right when she says that generally, to keep the Tata tradition, the family name, a Tata family member may be made the chairman of the Tata Trust. Now, Noel Tata seems to be the right person because he's already involved in several major companies like Tata International, Trent, Voltas Limited, and he has a complete grip over the activities. At the same time, I would like to point out that Tata Trust has now become a fairly large organization, both in India and abroad. And you need a full-time person or a person who can devote a lot of time to the activities of Tata Trusts. And it is for this reason that somebody like Melly Mistry seems to be a good person to fit in the sense that not as chairman, but maybe as a full-time trustee or a permanent trustee, which is now going to be made, because he has been looking after the affairs of Tata Trust in the last few years, and in full, in conformity with what Mr. Ratan Tata has been telling him. So they have both worked together in tandem in the last few years, and the Tata Trusts are now well positioned to achieve their objectives. But I must emphasize, Tata Trust is a big organization. It's not just a small trust. And they have to manage several projects and properties. And you need a person who has the time to devote to the activities of Tata Trust. So with Melanie Mistry being brought in, Noel Tata would be the chairman, and the activities of the trust would now go on in full swing.
Right. Mr. Tandon, good morning. Thank you for joining in as well. And as Mr. Ranina was pointing out, right, you would need somebody who would have this full-time devotion to this post as well as the chairman of the trust. Now, as a proxy advisory firm, what would you be looking for in an ideal candidate as the chairperson of an organization as large as the Tata Trust is?
Thank you very much for calling me for your show today. I'd first like to begin by saying that let me express my sadness at the passing away of Mr. Tata. One of the things, we've all been reading about what his contributions are, but one of the things I'd like to emphasize is the fact that his enduring legacy, if I may say, is the fact that in telling Indian businesses that they can compete globally and they can compete with the best. And that's a lesson which, when he began on internationalizing the Tata Group, very few businesses had an offshore presence. But today, when you look at it, Indian companies have a sizable presence overseas. So let me say that. Coming to the person itself, I think what is important at this time is the process which they're following. And there needs to be a general awareness in terms of what is it that the role requires. As Mr. Ranina pointed out, the Tata Trusts are a large organization, and therefore they have a great deal of responsibility towards the philanthropic activities which they are undertaking. But equally important is the fact that what you want is you need that alignment between the trusts, Tata Sons, and the operating companies. When a few years ago, there was this whole turbulence which happened with regard to Cyrus Mistry and with regard to the various businesses. It was because at one level, this alignment was broken, and it seemed, and of course, we have no way of knowing, it's the insiders who will tell us, but for a moment it seemed that the trusts were expectations from Tata Sons were completely different, and Tata Sons expectations from the companies were completely different. So if you have a person who understands both what is happening in the operating companies, which is of interest to all the investors and all your viewers, and what is happening at the trust level and what the expectations are, and is able to balance these two, is what is critical. I will just want to add one thing that, when we think about it, the structure which the Tatas have is phenomenal. You've got the profit-making companies and you have the trusts. But what they've done very cleverly, if I may say, and this was done almost a century ago, was put in Tata Sons in between. If in today's day and time you look at what has happened, and a recent example is OpenAI, which has kind of run into rough weather, it is because you've got a business which is a not-for-profit and a business which is making profit, and the same company within itself is trying to balance the two. So Tatas have done a phenomenal role. The person who's there would need to understand the legacy and how to take this forward, balancing between the two.
No, fair point, and we've seen that, and I think Mr. N. Chandrasekharan has sort of donned that mantle with so much of grace, right? Bringing all the group companies together and working with, of course, members of the family to keep the overall ethos intact as well. And we've seen the absolute wide acceptance of the role that he's played. Mr. Ranina, to come back to the chairmanship of the trusts, both the trusts, Sir Ratan Tata and Sir Dorabji Tata Trust. Now, would this have to be a majority sort of decision? What if there is some dissent among the trustees, on the nomination, on the name? what are the options perhaps on the table? Just from a legal standpoint, it might be absolutely unanimous, and we'll know in the next couple of hours. But typically, when we're talking about succession planning in a family trust, what are the different options on the table? Mr. Ranina? Okay, I think we've lost that line with Mr. Ranina. We'll come back to him for that. But Mr. Tata, if I could put that question to you, that this could be an absolutely unanimous call. But otherwise, I mean, what do we see? What is the practice that you've seen? And is it enough for the majority to sort of rally around or rally behind one name?
Look, it's very difficult to say what is. I'm not a legal expert, and therefore I won't comment in terms of what will happen on the trust. But ideally, you do want to see a broad consensus. Now, if someone is putting forward, let's say there are two candidates, and there is a majority in favor of one, it's not unusual for the remaining candidates to say that, look, in the interest of having consensus and in the interest of having a cohesive group, we'll all back up one person. So even if my personal preference is for A and not B, but the majority are in favor of B, it's quite likely that I say, okay, this is what will keep the harmony of the trust. These are the priorities. As long as the candidate is agreeable to these priorities, let's go ahead. Ideally, if you see a consensus, that's, of course, the optimum solution.
A consensus is always the best way forward. I think we have Shireen back with us on the line, and she has some questions for the panelists as well. Shireen, back to you.
No, I was just coming back to that point that you were asking Mr. Ranina, and, this again goes back to the changes that were brought in post the mystery battle when the Articles of Association were unanimously passed at the AGM of Tata Sons, which essentially, had to deal with the appointment of the chairman of Tata Sons as well as the relationship with the trust. So following that amendment and that resolution, it was made very clear that the chairman of either the Sir Dorabji Tata Trust or the Sir Ratan Tata Trust or of both would not be eligible to be the chairman of Tata Sons. So this split, was put in place post that bitter battle that we saw playing out at the Tatas. And even as part of that, the process of selection, the selection committee, etc., was also put in place. So I don't think that there is any confusion on the way forward on the selection process itself. I think it will now boil down to just ensuring that you have the right person at the helm of affairs, given the many considerations as well as the unique structure of the Tata Trust, as well as how they control the listed entities as well, with Tata Sons, as Amit pointed out, being in the middle. But when we were speaking yesterday to the former Tata Sons board member, R. Gopalakrishnan, as well as my conversation with Kumaramanglam Birla, and perhaps we could play those bites out for you. But, Mr. Gopalakrishnan said that when he, essentially he was a Unilever guy, when he joined Tata Sons, he said that I was also mystified as to how this works, how this operates. But on being part of the organization, he understood that this unique sort of structure, which has worked for over 150 years plus, is something that has, held the group in good stead and has allowed the group to do what it believes is best, both as far as its philanthropic aspiration and ambition is concerned, but as well as its wealth and value creation as far as its listed entities are concerned. So I think a lot of refinement took place post the boardroom battle, and I think there is clarity, as I pointed out, on the process, and a decision will be now taken to finally officially appoint the successor to Ratan Tata.
All right. Thank you for that context, Shireen. Let's see if we have Mr. Ranina back with us for a final comment. Mr. Ranina, can you hear me?
Yes, I can hear you.
So we were just discussing, as Shireen also pointed out, that the process is very, very clear, and obviously there's a complete disconnect between Tata Sons and the Tata Trusts now. So in terms of the selection process and, finally getting the successor to Mr. Ratan Tata, consensus would be the best way and the most graceful way forward. We all know that. Is that what you would expect?
This is what will happen. I'm sure about this. I agree with Mr. Tandon that everything will be done in a consensual manner. There will be no conflict, I can assure you that. They would have decided informally amongst themselves, and the person will be appointed as the chairman straight away. There'll be no discussion on this subject at all at a trust meeting. I'm very confident of that.
All right. So, gentlemen, thank you very much for joining in. And we look forward to connecting again with you once the official announcement is made. As we're picking up from sources, as Shireen has just told us, that in all likelihood, the expectation is that indeed it will be Mr. Noel Tata who will succeed Mr. Ratan Tata as the chairman of the Tata Trusts. Well, as we take your leave, I think we're getting some visuals, and that is the first landing of an aircraft at the Navi Mumbai airport. It's supposed to be an Air Force aircraft. I think one of the carriers over there. There was supposed to be a Sukhoi as well.
It's an Airbus C295 transport aircraft.
That's a transport aircraft. And a Sukhoi. I think we're expecting a Sukhoi to make a landing as well. And this will be historic for a lot of us who've been here in the city of Mumbai. And we have been, of course, waiting for the Navi Mumbai airport to take off. This could be the first step towards getting something tangible on ground.
Indeed, and it is part of the trial run, right, by the Indian Air Force. As you can see on your screens there, the Airbus C295 transport aircraft and the Sukhoi fighter jet expected to make an inaugural landing at the southern runway of the airport. Remember, this has been in the works for possibly decades now, the Navi Mumbai airport, and finally we are getting to see some action on the ground. Visuals coming in there, the Maharashtra Chief Minister present, Eknath Shinde, there at the Navi Mumbai airport. Live visuals coming in of the aircraft making its inaugural landing at the southern runway of the Navi Mumbai airport. We'll be waiting for more details on that. But with that, it's a wrap on this edition of Trading Hour. From Surbhi, me and the team that put this show together, thank you so much for watching. Halftime report comes up next.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Nigel D'Souza. Well, it's turning out to be a day where we are not seeing that much of movement except for what is taking place in terms of the Nifty Bank at this point in time. So that seems to stand out at this point. Let's see whether there's any kind of recovery which takes place. But currently we have the Nifty which is under 25,000. Let's see whether there's any kind of recovery which takes place on an intraday basis there as well. Hi, Nigel.
Well, that's right, Ekta. You know, in the last few minutes, actually, the Nifty Bank has come off and the IT index that was actually looking resilient, it's got sold into. That early morning bounce got sold into. The Nifty Bank, yesterday it rallied. Today it's back to square one. You know, it's given up all those 500 points that it put on. And the IT index, actually, that was up 0.5%. That's got sold into. And TCS, you know, TCS is now down 2.5%, Ekta. Earlier today, the stock was more or less flattish, but now some kind of selling is creeping into TCS.
Yes, absolutely. And at least there's some kind of, you know, you're talking about selling, and we saw sharp selling which took place in a lot of these pharmaceutical stocks yesterday. So that seems to have stabilized today. We have Divi's Labs, which is up around 2.5% at this point in time. Cipla, which is still under pressure, is down around 1.6%. But nonetheless, there's some amount of stability which has come into a couple of these stocks. But nonetheless, let's kick off the show by talking about pharmaceutical companies. Wockhardt is the first management that we have. The company presented its phase 3 clinical trial for the antibiotic niftromycin 400 mg, which is a drug used for pneumonia, before the CDSCO committee, which is the Indian regulator. And an approval is probably expected in the next couple of weeks and could be introduced into the Indian market in the next couple of months itself. We have with us Sahabil Kharakiwala, who's the chairman of Wockhardt, joining in to discuss this. Mr. Kharakiwala, welcome to the show and thank you for joining in again, because the last time you were on the show, we did discuss how one of your molecules did show a lot of efficacy in terms of meningitis. But today we are discussing, you know, how niftromycin was presented in front of the CDSCO. Phase 3 data, I understand. Give us a sense in terms of what was the outcome of that meeting.
We presented this data. We completed clinical trial phase 3 sometime in April. And it was earlier phase 1 and phase 2 trial was done in US and Europe. And the phase 3 we did it in India, and New Drugs Subject Expert Committee of CDSU has recommended the niftromycin, that is McNaF, for pneumonia. And pneumonia is one of the big problems in India worldwide. Normally, globally, about 2.3 million people die every year because of pneumonia. And 23% of that is nearly 600,000 in India. So our drug is a short-acting, very ultra short-acting treatment of 3 days. It is a tablets. It is given orally, and it has a 97% success rate. Today, the existing drug, like azithromycin, has a resistance of 50 to 60%. That clavulanic acid combination also do not work on atypical pneumonia, which is around 40% of cases. So from this point of view, this is a life-saving and very important oral antibiotic.
Okay, so just to get this, get it, you know, into perspective, you've finished your phase 3, you've submitted the data to the CDSCO. Now, when exactly do you get final approval for this particular drug, niftromycin, for pneumonia? And when would it potentially be launched in the Indian market? And what is the market size of it?
We expect this approval to come in next few weeks, actually, because DCGI takes little time to look at other data and give an approval. And whatever queries they have, we have responded. So we expect in next few weeks to get a formal approval from DCGI. And we expect to market by the beginning of next 25, that is around in early January. It will be in the market. It's a very significant size of the market because the specialists and the consultants do not have proper treatment for treating pneumonia. And there's a big vacuum because this drug is coming after nearly 30 years. And there's roughly about 18 million cases of pneumonia in India. So from all these perspectives, it's a fairly significant medical unmet need we are fulfilling. And then do very ultra short treatment of 3 days.
Okay. All right. Well, just hold that thought, Mr. Kharakiwala, because we do have visuals coming in of the Navi Mumbai airport runway, where we do have the Indian Army plane which has landed there, the Indian Air Force plane which has landed there. So those are the visuals which are fresh visuals which are coming in. So interesting, considering that we will be having a new airport eventually. Indeed. And I think that would be extremely good for the ancillary businesses as well. But in any case, Mr. Kharakiwala, if you could just get back to the discussion with regards to this particular molecule, nifithromycin, just give us a sense in terms of the other geographies where you have applied for the drug for nifithromycin. And if it is showing so much efficacy for pneumonia, when are you probably expecting approval in other markets? Give us a timeline and maybe even any kind of out-licensing opportunity for this one.
The other market, one of the Saudi Arabia have accepted this drug as a breakthrough medicine. And we would be applying to them, and we expect to get approval in next 6 to 9 months there after our approval in India. And similarly, as you know, we have received QIDP status, but currently we are not looking at the US market for this molecule. But certainly we would be applying into all the emerging markets. And we expect the approval to come in the next year or so.
All right. Hi, Mr. Kharakiwala, and thanks a lot for speaking to us here on CNBC-TV18. This is Nigel on this side. I missed the size of the drug. What is the total sales potential that you see coming out of this drug?
As I mentioned, in India, there are 18 million pneumonia cases. And it is an unmet medical need. So it would be fairly, we are working on the potential, but I think one is looking at something around in 3 to 5 years, 400-500 crore potential only in India.
Only in India. So 400 to 500 crores is what you're expecting in terms of a size for nifithromycin only in the Indian market. Then I'm sure you'll have, Mr. Kharakiwala, I'm sure you'll have a lot of suitors, considering that you do have a patent on this drug. If you can give us a sense in terms of the patent, how long does it last? And two, whether companies like Indian pharmaceutical companies or even global pharmaceutical companies are interested in tying up with you for nifithromycin.
See, our patent lasts in different countries, slightly different, but in India it lasts around 32 or so. And another 2-3 years is extended in many other countries, the patent. So there is a fairly long period of time. As far as India is concerned, we intend to market it ourselves basically. And also same true in emerging market. We are not really looking for a licensing option today, but we will explore this a little later for the Western market.
Okay, so out of all the molecules that you do have in your portfolio now, Mr. Kharakiwala, we've discussed WCK 5222, we've discussed WCK 6777. Give us a sense in terms of the molecule that you think has the most potential and will probably be first on the list to get monetized.
Actually, as you can see, this Midday for nifithromycin is the first getting monetized because as we will be launching in January itself. As far as the 5222 is concerned, as you know, we are taking clinical trial in a couple of months. So it is likely to get monetized in later part of FY25 in India. And maybe in FY26 in the global market.
All right. Appreciate you joining in, Mr. Kharakiwala, in fact, giving us all of those insights on that new drug. But before we let you go, yesterday we had the sad demise of Mr. Tata. Wanted to know if you have, conversed with him, you'll had any kind of dealings, given that both of you all have that common aim, right? To the cancer, to the pharmaceutical sector. So some kind of interactions that you all could have had.
Yeah, I think Mr. Tata's loss is a great loss for India. He was one of the tallest leaders, both as a human being and what he has done for Indian industry, business, and also establishing certain kind of benchmark in terms of the ethics and the quality one should have. I had an interaction with him several times. In fact, we bought a company in 90s, married pharmaceutical from the Tatas at that time. And I remember after 5 or 7 years, thought that he regretted that he sold that company to us, because that was his perspective on the healthcare subsequently. But the amount of work Tatas have done in cancer, both in Mumbai, Calcutta, and everywhere, is enormous. And one could say that it has become a benchmark for ordinary people to get it treated in the Tata's cancer facilities, wherever they have been present. And they have invested both, not in terms of money, but qualitative resources, also in terms of people and others. And I know from my colleagues in medical profession, they would like to work in the Tata's Institute, because the kind of knowledge and experience they can gather is enormous.
Sure. Absolutely, Mr. Khurakiwala. It's a benchmark of excellence when it comes to Tata's and, the kind of work that they've done in cancer care. Thank you very much for joining in and speaking with us and sharing your thoughts on Mr. Tata as well as your new molecule, which you have received an approval for from the CDSCO. We'll take a short break, but up next, Sudeep Shah will join in to discuss the technicals. Stay tuned.
Absolutely no evidence that this man thinks about anybody but himself. I've said it before. Donald Trump is a 78-year-old billionaire who has not stopped whining about his problems since he rode down his golden escalator 9 years ago. And President Biden and Vice President Harris were down there meeting with local officials and comforting families, asking how they could help. And Donald Trump at a rally just started making up stories about the Biden administration withholding aid from Republican areas and siphoning off aid to give to undocumented immigrants. Just made the stuff up. Get off your couch and vote. Put down your phone and vote. Grab your friends and family and vote. Vote for Kamala Harris as the next president of the United States.
Start by talking to you about that. In Mr. Tata's own words, he said he would like to be remembered as someone who made a difference. Nothing more, nothing less. What do you believe has been the impact that Ratan Tata has had on India and on the House of Tatas?
Well, I think, Shirin, to start with, it is a sad moment to lose someone like him. But I think it's also a life to be celebrated. I think that very few people can make the kind of impact that he has made in one lifetime. His footprint, as you know, goes far beyond just industry. I think his legacy as a humanist, as a philanthropist, will probably be remembered even more than his legacy as just being an industrialist. I think that his ambition or his dream of making a difference, He's done more than more than one can imagine to do that, to make a difference. He's made a difference to Indian industry, to society, through all the charitable and philanthropic work that the Tatas do, some of which I know he was very involved with himself. All very quiet, didn't speak about it. You know that he was extremely low profile, shunned any kind of attention. And he was a true son of India.
Welcome back. Well, let's cut across to Parikshit Luthra. He's in conversation with Tarun Garg, the Chief Operating Officer and the Whole-Time Director of Hyundai.
Hyundai opens for its IPO subscription next week, and today we are joined by the CEO of Hyundai India, Mr. Garg. Mr. Garg, you've just finished a press conference here in Delhi. Let me begin by asking you, if you were asked to define the brand's success, what is the biggest contributing factor to that?
Thank you, Parikshit. I would say that we have been in India now for more than 26 years, and the one key reason for success has been to have India-centric products. We have a very strong parentage in HMC, so we have access to all kinds of technologies. At the same time, we keep our eyes and ears to the ground and bring in products which are suited to the Indian customer. So whether it was the Santro or the Accent or the Creta, or the Venue or the Exter, always we have kept Indian conditions in mind to launch the products. Of course, we have built a very strong ecosystem in terms of dealer network, the connect with the customers, localization, a big focus on exports. I think one thing which differentiates Hyundai from everybody else also is in terms of a strong focus on exports. Today, 20% of our production is exported, and we are a hub for the emerging markets. So I think all these factors have really helped Hyundai to really do well in India all these 26 years.
All right. You speak about the last 26 years, and there have been many success stories. Having said that, you have been at #2 position, and in the last few years, the likes of Tata Motors, Mahindra have given Hyundai tough competition in the market. What do you think have been some of the gaps in your product pipeline, in your product strategy, because of which you've not been able to grow your market share further? Because if you look at the top position, Maruti Suzuki, their market share has only declined marginally.
So if you see, Hyundai has been a very strong #2 player, and always there has been competition in the market. Our endeavor has always been to find opportunities. So whether, like I said, as late as last year, when we launched the Exter, we could see an opportunity in the entry SUV segment, and Exter has done really very, very well. Then Creta, of course, has been a very strong brand. This year we launched the Creta facelift, and it has received a great response, a double-digit growth this year over last year, which already had a double-digit growth. Last month, we launched the Alcazar facelift, which is receiving some great response from the customers. Also, we have done some innovations like a dual CNG cylinder in Exter and Nios. So we keep on giving more and more value, more and more options to the customers, which helps us to increase volumes and market share. At the same time, primary focus has been on quality of growth. So if you see, we believe that volume, market share, profitability, brand, customer connect, all are important. And that is how we want to pursue even going forward as well.
I'd like to ask you about the festive outlook. It's been a tepid mood in the auto industry and in the markets, the retail market for the auto industry. How does the month of October look right now?
So frankly speaking, if you see, Indian industry has been growing at 5% CAGR, whether you take a 5-year CAGR or a 10-year CAGR. And of course, last 2 years, because of post-COVID pent-up demand, the growth was much higher at more than 20% and close to 8 to 9% last year. So obviously some kind of a moderation in demand would happen. In any case, Parishit, I've spent 3 decades in the auto industry, and June, July, August are normally sluggish months. October has started on a very positive note. As per the Vahan data, our deliveries, our registrations are up 40% this month over the same period last month.
And
so
you
I think,
expect to complete the month?
So frankly speaking, after a long time, October is a month where Dhanteras is also there, and Dashara is also there, and Navratra is also there. So everything is bundled into October. So we are very optimistic about October.
So what's your order book right now?
Order book is healthy, and we're receiving some great traction, like I said, for the newly launched.
Give us?
So numbers, let's not come to numbers, but order book, like I said, order book is healthy and a very good traction in October for all our products.
All right. Now, in terms of overall growth going forward, industry veterans have said that the auto industry will only see low single-digit growths in this fiscal and maybe for the next few years. In that kind of environment, how will you provide more value to the customer, ensure sustained growth?
So I think this is very important that you are looking at a midterm to long-term approach, and like I mentioned, that India is really growing at a very fast pace if you compare with the global peers. The CAGR of 5% augurs very well, and going forward, CRISIL has projected a CAGR of 4.5% to 6% for the next 5 years as well. So I don't think there is any cause of concern. What is more important is how do you really take the benchmark up in terms of technology. How, like for example, we are going to launch the Creta EV, which is going to be first high volume EV from Hyundai stable, and we are backing it up by localizing the battery packs. Going forward, we are looking at introducing 3 more EVs, and of course looking at localizing the LFP cell manufacturing along with the Indian partner, the entire ecosystem on the charging station as well. So it is all about our ability to really introduce those models, those features, those technologies. We introduced ADAS, a couple of years back, three years back. Today, 8 out of our 13 models have ADAS, and customers have really accepted it very well. As the highways, more and more highways are coming into place, the high speeds are going up, and ADAS is very, very useful.
Okay.
Welcome back. Well, just about mixed for the markets. We have the mid-cap index up around 120 odd points. It's the Bank Nifty, which is the sore point today. So down around 0.7%. Advanced decline ratio still holding on the advancing side. So let's see how that progresses. Currently around 1,200 stocks advancing to 1,139 stocks declining on the National Stock Exchange. As you can see, that crisscross is quite close to each other. But nonetheless, on our segment fundraise today, we have it as Orange Health Labs. It's a diagnostic chain that was launched operations in January 2021. In the past 2 years odd, the company has seen revenue grow over 100% year on year, and it's achieved around 100 crores in terms of revenue run rate as of September 2024. The diagnostic chain has raised a total of $35 million till now, with HCL India leading their $7 million Series A round and then upping their stake further in Series B. The total investment from HCL is more than $10 million. We have it as Dhruv Gupta, who's the co-founder of Orange Health, and Anand Daniel, who's a partner at HCL, joining in to discuss the potential from this. Afternoon, gentlemen. Well, Dhruv, let's start with you. You're in a space which is extremely competitive and fragmented to a certain extent as well. So what has resulted in this 100% growth that you've seen in your business in the past 2 years?
Absolutely. Thank you, Ekta. So diagnostics traditionally has been a very cluttered market. There are lots of companies, like you correctly said, who've been in the space. In fact, when we launched in Bangalore itself has had 1,800 labs. And, we were lab number 1,801. But fundamentally, what we realized is that actually, what consumers needed was that, modern Indian consumers are looking to get more and more convenience at home. We get our food at home, we get groceries at home, we get salon services at home. But when we're sick and we want to get tested, this wasn't an experience that was smoothly available at home. So in Jan 2021, we launched Orange Health with the premise that we will offer customers the opportunity to to get tested at home within 60 minutes and get reports within 6 hours. With this premise, we launched, and within 12 months, we actually became Bangalore's largest COVID lab. Over the years, we've expanded to multiple cities, and we've developed a significant market share in our cities, which has fundamentally enabled us to penetrate the market, to capture market share from other players, and also be able to capture the growth that's happening in this market organically.
Okay. Well, let's get Anand into this conversation as well. Anand, you all have been you all led the Series A investment in Orange Orange Health rather. Give us a sense in terms of, what is the return that you're anticipating from this particular diagnostic chain, and what is the potential growth that you are expecting in the diagnostic industry?
Yeah, Ekta, thanks for having me. Great question. So when we invested, it was mainly Tarun and Dhruv and a small team in Bangalore, right? So when we invested the Series A round, and when we invest in any of these companies, we expect them to be touching hundreds of thousands, if not millions of lives over time. In fact, Orange has already touched 1 million lives in their short existence. So to answer your initial question, can this become a household name where people go to for trusted, highly accurate, and high speed in terms of turnaround diagnostics at home? That is the thesis. And we are really excited to partner with Dhruv, Tarun, and team on this.
But your total investment is around $10 million. Give us a sense in terms of what is the horizon of investment and what is the anticipated return, according to you?
Yeah, so our investment horizons are normally almost a decade, because these are early stage companies. It could take 7 to 10 years to become large companies. And ideally, we look for these uncapped, very large outcomes, and it's very tough to put a specific number. And because I don't want Dhruv to have a set target, it needs to keep growing. And we believe this is a very large market which continues to grow. To your earlier question, just diagnostics is a 15 billion market growing at 15% year on year. in the past and will continue to grow. So it could be a very large outcome. It's tough to be precise, but the whole belief of our venture capital early stage investment is if things work out, this could be a very large outcome which can touch millions of lives on a daily basis.
All right, sure. That point's taken. Dhruv, right now you're only in diagnostics, but are you looking to expand into other healthcare verticals, and any further fundraising you would look at?
Sure, absolutely. So, one of the theses that we've had as a company is to fundamentally first focus and win in the market that you're playing in, right? We're in the diagnostic market, like Anand mentioned. Today it's a $15 billion market. Moving over the next decade, looking at about turning into a $40 billion market. There is a large opportunity at first to just focus and go deeper into this market, and that's something that we've been very clear about from the beginning. So, as we go deeper, the way we think about diagnostics is that our goal is to fundamentally help consumers measure their health in a way that enables the doctors to diagnose them better. So as we progress as a company, as the market progresses, over time we will probably expand into newer domains, but all in the service of being able to enable doctors to diagnose their patients better. When we started, we were just an at-home company. Over time, now we're thinking about moving from at-home towards omni-channel, and then like Anand said, it's a little bit as we keep our eyes and ears open, we see where the opportunities are, and then we keep moving into those areas.
Just quickly before we wrap up this conversation, Anand, what is the next leg of growth that you see in healthcare? Is it companies which do have some kind of association with artificial intelligence? And what is your approach? Are there companies that, is that a criteria that you would probably be looking at?
I would say the simple criteria is take a real consumer problem, be it in the tier 1 India or Bharat, which is tier 2 and plus. And there are so many problems that still yet to be solved. Use technology and deep thinking from a consumer back. Is this a real problem? How deep is it, and how can we solve and do it? And if they use AI, that's great, but that's not a necessity. Just picking these problems and solving them deeply is what we look for. And just to add to the previous question, Orange is just in 4 cities as of now. So just expanding that to more cities. My parents live in Chennai, and I really wish Orange was that, just on a daily basis across India, people have these problems. So finding stuff, finding problems, solving it deeply, proving that it works in a few areas, and then expanding it is a thing that we can do across diagnostics, across medicines, across tertiary care, like the whole value chain of healthcare and even preventive health.
Okay. All right. Well, we're going to wrap up on that note, Anand, as well as Dhruv. Thanks very much for joining in and speaking to us on our fundraise segment. So that's the view coming in from Axel India, which has invested around $10 million in Orange Health, which is a lab or diagnostic chain which has rapidly expanded just in the past couple of years. In fact, started operations post-COVID in 2021. We'll take a short break, but up next, we'll focus on the rupee, which has breached 84 for the first time. Welcome back. Well, let's shift focus away from the equity markets and talk about the currency markets. The rupee has breached $84 per dollar mark for the first time ever. And in fact, it fell as low as 84.1 in terms of depreciation before there was some amount of dollar selling. Lata's here to explain what's resulting in the weakness in the Indian rupee.
Well, it's quite a headline when the rupee crosses 84 and goes lower to 84.10 to buy a dollar, because it's been in this 83 to 84 range for over a year now. And 84 was seen being protected by the Reserve Bank for a long time. Whether they intended it as a mark, we don't know. But it seemed to recoil from that level. But today it crossed beyond. And at 84.10, we saw dollar supplies coming in. So dealers are suspecting that now Reserve Bank is protecting the 84.10 mark. Of course, their usual stance is they only remove volatility and come in when there is too much of a one-sided movement. Now, the chances are that the moment you went beyond 84, a lot of people who were sitting short dollars would have come and covered. And therefore, that 84.10 would have came very swiftly once 84 got crossed. And that's why perhaps the Reserve Bank intervenes to ensure that there isn't too much of one-sided movement. Now, why is this panic? For one, we know that, over the weekend, there are some important events lined up, important uncertain events lined up. The first is the Chinese press conference where they may detail some fiscal steps. Now, if they are fairly strong enough, then you could see a greater amount of foreign money going into Chinese stocks. As we have seen, foreigners have been huge sellers in the month of October, and that could get accelerated, which is one reason why the rupee is on a weak wicket. The other one is a possible attack of Israel on Iran that has already taken crude closer to the $80 mark and even crossed once. So there is again that fear. We are seeing crude rising, and that's also leading to pressure on the rupee. And a third factor, which combines both, dollar index itself has strengthened. And we are seeing many currencies weakening against the dollar. Who is to say that there cannot be a little more strengthening of the dollar? Of course, the latest bout of strengthening of the dollar was because the inflation number came in higher than expected in the US, and that led to at least one FOMC member saying that you can even pause in November. That also led to a bit of a strength, the dollar, leading to rupee weakness. Now the question in the market is 84.10 the new 84 as far as the RBI is concerned? Will they support that level? We will have to wait and see. Too many uncertainties are packed in over the weekend. Nobody will want to go with long rupee positions over such a weekend.
Okay, all right, Lata. Thanks very much for that. So 84.1 was the low point of the day currently for the rupee against the dollar. Let's see whether it manages to stabilize at these levels. For now, we need to take a short break, but we'll get you a lot more on the markets once we're back. Stay tuned.
बहुत ही संवेदनशील व्यक्तित्व थे। जीवन भर उन्होंने टाटा ग्रुप को तो बड़ा बनाया ही, टाटा ग्रुप को अंतर्राष्ट्रीय पटल पर एक अलग ही पहचान बनाई, भारत की पहचान बनाई विश्व में, अपने ग्रुप को विश्व भर में बढ़ाकर। लेकिन साथ ही साथ उनके जो दानवीर चरित्र था, हर प्रकार से, हर किस्म से, हर अच्छे काम के लिए वो तत्पर रहते थे। कभी ऐसा कोई व्यक्ति नहीं होगा जिसने कोई उनसे अच्छे काम के लिए मदद मांगी हो और उन्होंने ना किया हो।
भारत का कोहिनूर रहा नहीं, हमसे बिछड़ गया है, ऐसा मैं कहूँगा। और रतन टाटा जी हमारे में नहीं रहे, ये बहुत ही वेदनादायी दुखद घटना है हमारे लिए, पूरे देश के लिए। पूरे देश का एक अभिमान था, हमारे महाराष्ट्र का भी अभिमान था। लाखों लोगों को उन्होंने उद्योजक बनाया, उनकी इंडस्ट्री बहुत पुरानी है और ऐसे टाटा कंपनी के वो सर्वे सर्वा थे और आज मैं यही कहूँगा कि उनको देखकर लोगों में ऊर्जा आती थी, प्रेरणा आती थी और वो हमारे महाराष्ट्र और हमारे भारत देश का अभिमान है, स्वाभिमान है। उन्हें हमारे सरकार ने उद्योग रत्न पुरस्कार, उनको कई पुरस्कार मिले, पद्मश्री, पद्म विभूषण और जो भी पुरस्कार उन्हें मिले उनको देने से उस पुरस्कार की ऊंचाई बढ़ गई। ऐसे उनका कर्तृत्व था। मैं उनको महाराष्ट्र सरकार की ओर से और महाराष्ट्र की तमाम 12.5 करोड़ जनता की ओर से भावभीनी श्रद्धांजलि अर्पित करता हूं। उनका आदर्श लेकर आगे बढ़ना, उनके आदर्शों पे चलना, यही उनके लिए सच्ची श्रद्धांजलि साबित हो सकती है।
रतन टाटा जी ये एक बहुत ही सफल उद्योगपति तो थे ही, लेकिन उससे भी बड़े व्यक्ति के रूप में हम उनको देखते हैं, क्योंकि जिस प्रकार से उन्होंने देश के लिए और समाज के लिए काम किया है, उन्होंने केवल सफल उद्योग नहीं खड़े किए, एक विश्वासार्हता खड़ी की, एक ऐसा ब्रांड खड़ा किया जिसने हमारे देश को एक ग्लोबल इमेज दी और उसके साथ साथ अपनी संपत्ति को टाटा ट्रस्ट में विलीन करते हुए उन्होंने इस विश्वस्त
Welcome back. Well, for the markets, we have the Nifty, which is at around 24,950, so down around 49 odd points. Just want to point out a couple of stocks which are showing a lot of traction within the mid-cap index. So despite, the mid-cap index just about higher by around 100 odd points, do watch out for a couple of stocks such as Newland Labs, which is at the high point of the day. It's up around 11 odd % at this point in time. It's rallied around 15% this week itself and up around 160% this year. So there is something which is keeping that stock alive in today's trading session, maybe some amount of opportunities from the API space. Spark is the other one, which is the R&D arm of Sun Pharma, which is up around 7 odd %. We have JM Financial, which is up around 5.4%. So that one's doing well. In fact, IIFL Securities, 361 WAM, all of these stocks within that space are doing well, up around anywhere between 3 to 4%. Well, with that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.
जिस प्रकार के फिलेंथ्रोपिक काम उन्होंने किए हैं, चाहे वो शिक्षा के क्षेत्र में हो, चिकित्सा के क्षेत्र में हो, रिसर्च के क्षेत्र में हो, बुनियादी क्षेत्र में हो, समाज और देश के उपयोगी जो कार्य उन्होंने टाटा ट्रस्ट के माध्यम से किए हैं, मैं ऐसा मानता हूं कि जितने महत्वपूर्ण उनके उद्योग हैं उतने महत्वपूर्ण ये कार्य भी है। इसीलिए एक बहुत बड़े मन का व्यक्ति आज हमारे बीच से चला गया है। देश के लिए ये बहुत बड़ा नुकसान है।
अब ग्लोबल इकोनॉमी का फ्यूचर भारत से जुड़ा हुआ है। भारत की ये आर्थिक प्रगति नए अवसरों को लेकर आ रही है। आज महाराष्ट्र को 10 मेडिकल कॉलेज की सौगात मिल रही है। नागपुर एयरपोर्ट के आधुनिकीकरण और विस्तार का काम, शिरडी एयरपोर्ट के लिए एक टर्मिनल बिल्डिंग का निर्माण, आज इंफ्रास्ट्रक्चर से जुड़े इन 2 अहम प्रोजेक्ट्स का शिलान्यास भी हुआ है। मैं इन सभी विकास कार्यों के लिए महाराष्ट्र के लोगों को बहुत बहुत बधाई देता हूं।
Stocks are sluggish on the final trading day of the week as the high US inflation print and China's planned stimulus announcement this weekend keep the street on the edge. Metals and healthcare clock gains even as financials and autos are the big drags.
The rupee breaches the 84 per dollar mark for the first time and fell as low as 84.10 before the dollar selling came in. Dealers say the dollar selling by RBI at 84.10 per dollar.
CNBC-TV18 learns that Naval Tata is likely to succeed Ratan Tata as the next chairman of the Tata Trust. Melly Mistry is also likely to be made a permanent trustee of the board. The succession has high significance as the Tata Trusts indirectly own significant stakes in the group's businesses.
TCS misses expectations on margins and profits even as revenue come in line with expectations. Client-specific issues, weak discretionary spends and challenges in UK and Europe affected the growth in the quarter.
RBI's nod for the appointment of Partha Pratim Sen Gupta, an SBI veteran and the former MD and CEO of Indian Overseas Bank, as the new CEO of Bandhan Bank comes as a fillip for the stock. The approval of additional claims under the loan guarantee scheme only adds to the optimism. The stock is up 10%.
Hello, good afternoon. You're watching Business Lunch on CNBC TV18. I'm Vinny Motiwala. With me is Hormaz Pataki as well. Hormaz, very good afternoon to you as well. Subdued day coming in for the markets. Not much of an excitement. Nifty Sensex, you can see a bit of a red and a green, a mix this day.
All waiting for the weekend, isn't it? And the benchmark indices is showing up there on the screen as well. The Nifty now around the mark of 24,950 is where the index lies yet again. Not able to sustain at the highs of the day. Not able to sustain at that mark of 25,000. So we're making lower highs now on the charts. We made 25,234 on Wednesday, 25,134 yesterday, and we have failed to even cross 25,050 this afternoon in today's trading session. A major part of those losses are coming from the banking indices, and the Nifty Bank is the principal culprit in today's trading session. Almost 0.7% lower. It's slightly recovering from the lows of the day, but still almost 400 points down. No follow-up buying after a relatively good session that we had in yesterday's trade. But the Nifty Bank is the big underperformer. What's doing well though are metal names, pharma names, and the broader markets too, seeing some bit of green in today's session.
Absolutely. Broader markets, you could say, outperforming at least the benchmark indices. Some bit of a green the Nifty made, and the small cap, look at them, both of them managing to hold on to gains on the screen. Nifty mid cap as of now almost 0.2% of gain for mid cap, small cap also holding on to decent number of gains there. Let's also look at some of the individual names. We have Bandhan Bank that's holding on to strong gains. We have BSC, Page, as well as HCL Industries, which are managing to hold on to good gains in the broader markets. While the Nifty Pharma names, you have something like a Newland Lab that's holding on to gains, Walkhard, as well as Strides Pharma in the Pharma pack that are managing to hold on to gains. But let's move on. And the Tata Trust board that will be meeting today in Mumbai to discuss the succession plan following the demise of Ratan Tata. Sources say that Noel Tata is likely to be appointed as the chairman of the Tata Trust, while Navi Mumbai is also likely to be made a permanent trustee on the board of Tata Trust. Let's go across to Vamakshi to get in more details on that and what are we understanding.
Well, absolutely, Vinny. Who is Noel Tata? That's the big question right now. He is actually the son of Naval Tata and Simone Tata. He is the half-brother of ex-chairman of Tata Group, Ratan Tata, and Jimmy Tata. And in fact, he is already on the boards of Sir Ratan Tata Trust and Sir Dorabji Tata Trust. These are very influential trusts within the Tata Group, and they control majority stake in Tata Sons. Now, let's look at how his career has spanned over the last couple of years. He began his career at Tata International, which is the Tata Group's arm for products and services offered abroad. In June 1999, he became the MD of Trent, which was founded by his mother. He served as the MD for Trent for 11 years and later took over as the company's chairman in 2014. Now, under his leadership, Trent has grown from one store in 1998 to around 850 plus stores now. It is in fact the fourth largest company in as per market cap in the Tata Group. In fact, its financials too have grown, have seen a tremendous growth, from a revenue of around 50 crores in FY 2000 to around 12,277 crores in FY 24. The net profit too has seen a very significant surge. Noel Tata developed Westside, turned it into a profitable venture. He was also responsible for turning Trent into a 1,000 crore company. He then launched a slew of brands, which include Cicla and Zara in India. He was responsible for a JV with Tesco to operate some brands under the banners including Star Bazaar, Star Daily, Star Market. Trent also underwent a remarkable transformation with Zudio, which was introduced in 2016, and now within 8 years only, Zudio has grown to 545 stores across 164 cities. Now currently, let's also look at his roles within Tata Group companies. He is the chairman of Trent and Tata Investment Corporation. He is the MD of Tata International and the vice chairman of Titan as well as Tata Steel. In addition to that, his personal life also ties him closely to the Tata Group. Keep in mind that he is married to Alu Mistry, making him the son-in-law of Palonji Mistry. Keep in mind that Palonji Mistry is the single largest shareholder in Tata Sons, and therefore this further solidifies his position as a key figure in the group's governance. So that is it about Noel Tata. Back to you in the studio.
Indeed, Vamakshi, thanks a lot for that. But what is the Tata Trust and why does the next chairperson at the Tata Trust matter? Vivek is joining in with all of that. Vivek.
Well, you're absolutely right. This has been the key event to track ever since the sad demise of Ratan Tata. Number one, what are the Tata Trusts? What is Tata Sons? And what will be the impact on the shareholder of Tata Group companies? First up, let's understand what is Tata Sons and why is it that we're tracking this particular entity. It's the principal investment holding company and the promoter of the Tata Group companies. 66% of the equity share capital of Tata Sons is actually held by philanthropic trusts. Ratan Tata was the chairman of the Tata Trust. Now, the Tata Trust mainly comprised of Sir Ratan Tata Trust and Sir Dorabji Tata Trust, and they own a little over 51.5% stake in Tata Sons. Now, talking about what happens next, there are 13 trustees in total across 2 trusts. 5 individuals are common trustees. The names will appear on your screen. Former Defence Secretary Vijay Singh, Venu Srinivasan, Noel Tata, that's something that Vamakshi just spoke about, Navi Mumbai, as well as Darius Kambata. And going forward, the key clarity needs to emerge as to who will be the next chairperson of Tata Trust. Remember, the chairman will be elected through the majority consent amongst the trustees. Now, what is at stake? Remember, Tata Sons has significant holding across all of the Tata Group companies, and among the Tata Group companies, there are a significant amount of companies which are very large listed players, quite a few of them who are also part of the Nifty 50 index. So names like TCS, where they have over 71% stake, Tata Motors over 40% stake, Trent, Tata Power, Titan, Tata Steel, Indian Hotels. Remember, all of these companies have market capitalizations of more than 1 lakh crore. And in total, Tata Sons controls over 16 lakh crore as far as the Tata Group listed entities are concerned. So that is what is at stake, as to who exactly will become the next chairperson of the Tata Trust and what is the kind of control they will have over the listed universe.
Absolutely, Vivek. Surely it's going to be an important one to watch out for. Thanks so much for that. But let's also hear out what Kumar Mangalam Birla and former Tata Sons board member R. Gopalakrishnan had to say on how Ratan Tata simplified the structure of Tata Sons.
Before he came in, the Tata Group was more a constellation of companies. I think he, after coming in, actually pulled them together. They became a true conglomerate in the true spirit after his coming in. So that was, I think, his first real impact in terms of the change he brought about in the Tata Group. I think that he probably had far more constraints to be able to do that. He had an old guard, which was fiercely independent, if I can call it that. But I think he did all of that. He took his own time, but he did that rather well. And I think these are processes and institutions that are alive and kicking even today. So I think in my eyes, he did all the right things. He had a fairly kind of a scattered set of companies when he inherited them. And I think that he leaves the group a much more cohesive, united conglomerate than when he inherited it.
Well, that's, of course, Mr. Birla talking to us from yesterday. Well, let's welcome in Shailesh Haribhakti. He's chairman at Shailesh Haribhakti Associates. He's, of course, served on the boards of many companies, sort of tracks corporate governance issues very closely, and, of course, weighs in on important corporate stories as well. Mr. Haribhakti, good to have you with us here, sir. Prashant this side, and it's good speaking with you. It's been a while. We just reported some time back that this is, of course, source-based, and this will have to happen, as we understand it today, that Noel Tata is set to take over from Mr. Ratan Tata as the chairman of Tata Trusts. So I just wanted your first thoughts on this story.
I think it's no longer a story, no longer a speculation. I think Noel Tata is the heir apparent, and we should see that before the day ends today. That he will very much be taking charge of the Tata Trusts. I think it has come out of a very well-considered kind of succession plan that has been laid out. And I think the manner in which the structure has worked is now showing the fantastic advantage that it has for continuity, for making sure that the legacy stays, for making sure that the fantastic reputation that the Tata Group has globally will continue to be enhanced under a new set of leader. And in my humble opinion, I think Noel will do a fantastic job. He's one of the most kind-hearted, people-oriented, trusting person who brings everybody in a meeting together, takes the sense of the meeting, and without being too forceful, make sure that the common point of view is carried forward in terms of action. What is exemplary is the way that he has led Trent. And we all know that it recently entered into the main index, quite deservedly so. And I believe that his leadership at the Tata Trusts will carry on the legacy of fantastic work that the Tata Group is known to do.
I have two questions, Mr. Haribhakti. Do you think as you suggest, this is a mere formality in that sense? He's heir apparent. There is one. Second, so it'll be obviously unanimous in that sense. And second, I remember, when the unfortunate tiff which happened, when Ms. Mistry was there and Mr. Ratan Tata himself, I remember you'd weighed in at that point and you'd kind of raised questions about giving charge, but giving ownership, not giving ownership in that sense. Do you think this is now going to go smoothly, or because this was a change? Earlier, it was always the same person who headed Tata Sons and Tata Trusts, but of course, it changed when Mr. Ratan Tata crossed the age limit, and then sort of he was made chairman emeritus, and he took over and stayed on at trusts. So I just wanted to get your sort of sense on this, because you've tracked this and you've commented on these issues before as well.
Yeah. No, I think that there will be an absolutely smooth transition. No feathers will be ruffled. I think the maturity with which N. Chandra has led Tata Sons and the amazing performance of the group under his leadership will make sure that nothing changes there. And I think quite appropriately, Noel will take charge of the trusts without wanting to dominate, because that is not his nature at all. His nature is one of making sure that things grow, that things become better, that there is a continuous improvement that will happen under his charge. So I don't see any ruffling of feathers. I don't see any problems in the continuity. In fact, I see the Tata Group continuing its fantastic march ahead.
Mr. Haribhakti, do you know Mr. Noel Tata personally? I mean, have you interacted with him? Because you and can you give us
I have.
Because he's obviously a very private man. You don't see very many interviews in print or on TV. I mean, as you said, he's the man behind Trent, and that is, of course, done what it has. But we don't hear from the Trent team as well. We recently spoke with the operational team for a brief bit, but nothing too specific. It's been a fantastic story. But go on, sir.
No, I had the privilege of serving under him as chairman on a board of our common friend many years ago. And that is the experience that I can never forget, that he was an exceptional person, great leader, would never dominate, would bring about consensus exactly the way a good chairman should. And that is why I have very fond memories of those few board meetings we had. Unfortunately, that common friend met with an accident and he's no longer with us. But I still remember the amazing way in which he would come prepared for the meeting, get the sense of the meeting, make sure that everybody's respect was maintained, the voice was heard, and I feel he will be an exemplary leader.
So we should expect longevity and continuity, right? Both at trusts and at Tata Sons, because when Mr. Chandra took over, I mean, the general sort of understanding was that, I mean, he is in that sense a young man, right? So he has that, he could sort of run Tata Sons as an entity for the next, say, decade, maybe more. And now you have Noel Tata at a trust level as well. So continuity in that sense?
Absolutely. And an amazing positive set of circumstances where we have a thorough professional to take the business leadership. We have an amazing human being taking charge of the trusts, making sure that their philanthropic objectives are fulfilled, continuing to lead the companies that he leads so brilliantly. He is, as we are all aware, also on the boards of various other Tata companies and has served with amazing distinction in each one of them. And so I think we are going to see very positive trends coming out of this succession. But I would like to say that I must wish Noel all the very best in this fantastic assignment that has, by circumstances, come to him. But I also want to pay homage to the fantastic person that Mr. Ratan Tata was and publicly acknowledge that the whole of India felt lost by his passing.
All right, Mr. Haribhakti, we'll leave it there for now. Very well put, sir. Thank you very much for joining us with those thoughts and those sort of ideas. And we'll of course, ask you to join us once again once the announcement. As you said, he's there a parent, and of course, it's going to happen as a matter of formality. But when it actually does happen, if you can hear me, Mr. Haribhakti, we'll have you back again to take this forward and maybe a little bit more. Thank you once again, Hormuzwini.
Thanks a lot for that, Prashant, and that was a very interesting conversation there with Shailesh Haribhakti. Time for a short break. Up next, more news and updates continue on the other side. Stay tuned.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup?
Welcome back. The Navi Mumbai International Airport achieved a key milestone today as an Indian Air Force C-295 aircraft successfully landed as part of a trial before the airport opens for commercial flights, potentially in March of next year. Madhya is joining in with more. Madhya, big day for the Navi Mumbai International Airport, something that has been in the works for decades now.
Well, it's a big day for the Navi Mumbai International Airport. It's a sunny day as well, and behind me what you're seeing is the Indian Air Force C-295 transport aircraft, which is manufactured by Airbus. The aircraft landed today successfully at one of the 2 runways of the Navi Mumbai International Airport, and this is an exercise to prove the readiness and capability of the airport. The airport is not operational yet. The Maharashtra Chief Minister Eknath Shinde, Deputy Chief Minister Devendra Fadnavis, Minister of State Muralidhar Mohal were all present to witness the landing of the IAF transport aircraft. Speaking to the press, the Chief Minister said that this airport will start commercial operations by March or even before that. Remember, this is a very big development for Mumbai and for Maharashtra. We only have one airport in Mumbai, and this second airport will be a big boost even for the Maharashtra government as the state heads for elections. Speaking to the media, the Chief Minister said, "हम तैयार हैं flight के लिए भी और fight के लिए भी." So definitely an important milestone for Maharashtra as well as the Navi Mumbai International Airport.
Okay, thank you so much for that update there, Madhya. But let's move on, and actually we'll slip into a very short break. Don't go anywhere because we'll bring you more news and updates after this break.
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
There is absolutely no evidence that this man thinks about anybody but himself. I've said it before. Donald Trump is a 78-year-old billionaire who has not stopped whining about his problems since he rode down his golden escalator 9 years ago. And President Biden and Vice President Harris were down there meeting with local officials and comforting families, asking how they could help. And Donald Trump at a rally just started making up stories about the Biden administration withholding aid from Republican areas and siphoning off aid to give to undocumented immigrants. Just made the stuff up. Get off your couch and vote. Put down your phone and vote. Grab your friends and family and vote. Vote for Kamala Harris as the next president of the United States.
Investing.
Welcome back. You're watching Business Lunch on CNBC TV18. A quick look at the markets. Recovered from the day's lowest point, but still behind the 25,000 mark is what we're seeing. The Nifty is trading at. So yes, we're... Okay, so we do have the latest update coming in that Noel Tata has been appointed as the chairman of the Tata Trust. So yes, that's the word we were talking about just a short while ago, and that has come in, Horma. So big update on that front that we're watching out for.
Big news coming in indeed, and the Tata Trust has unanimously elected Noel Tata as the chairman of the Tata Trust. Remember, the Tata Trusts were to meet today to discuss the succession plan after the demise of Ratan Tata. And the confirmation now coming in that Noel Tata has been appointed as the chairman. We were just in conversation with Sailesh Haribhakti, and he was also mentioning that Noel Tata is a man who takes consensuses, takes sense of meetings and takes people along as well. So he will be the heir apparent and he is the right choice for the leadership role here at Tata Trust. So big news indeed coming in.
Absolutely. And, you know, previously when he spoke to HP Ranina also, he similarly mentioned that, you know, there's not going to be any doubt or concern about that Noel Tata is going to be coming. That's the word coming in as well. So, you know, that is interesting that we're keeping an eye on Noel Tata. He's had a good run with, you know, the Tata companies as well. And he was the heir to that. And absolutely, that announcement coming in, looking at all the Tata stocks right now as well. We're keeping an eye on that. But Noel Tata surely has been appointed as the chairman of the Tata Trust. And Noel Tata is someone who we will, you know, obviously keep a watch on. He's had a good run with the Tata Group as well.
Indeed, and it was anticipated. It was in anticipation. We will be joined by Shireen soon. Prashant will also be joining in with more on this. So, but the news of the hour is that Noel Tata has been appointed as chairman of the Tata Trust. So, it was expected that the decision will be unanimous. HP Ranina, we spoke to him earlier, as Vinny was just mentioning, that there will be absolute consensus in this meeting to appoint Noel Tata as the chairperson of the Tata Trust. That there were two meetings that were supposed to be held today by the Tata Trust, one to pay homage to Ratan Tata and of course to appoint the chairman, and Noel Tata has now been appointed as the chairman. News break confirmed. Prashant is joining in with more.
I'm tempted to say that maybe Mr. Haribhakti had an inkling, because he was sounding really saying that, well, it's almost happened, and maybe we should get him back, Mr. Haribhakti, and we can ask him now that it is confirmed. So if you're just joining us, Noel Tata appointed chairman of Tata Trusts, and looks like there were two sets of meetings, as you guys have been saying. One to pay homage to Ratan Tata, and of course the other one where Mr. Noel Tata has been appointed unanimously, and there are some more information coming in. We'll put this up. So there was clarity that any decision would need to be absolutely unanimous, and it was. The decision to appoint the chairman today, and this is coming in from Shireen, that it was keeping in mind Ratan Tata's approach of moving on, and even though Mr. Tata, of course, it's just been a day since Mr. Tata's passing, the fact that they've moved very fast, they've kind of kept the approach of Mr. Tata's in mind, which is to move on and look ahead and look forward. So that is the big information which is coming in. I think Mr. HP Ranina is with us. He was with us a couple hours back as well. Mr. Ranina, good to have you back. It's official, it's confirmed. I heard you back then as well. You were saying it will be done unanimously, and I think you said, take it from me, yes, it will be absolutely unanimous. So it's happened, sir. Correct. Go on.
That is how it was expected. That is how it has happened. And I think they made the right choice in appointing Noel Tata as the chairman of the Tata Trust, because he will keep a close liaison with the Tata companies. And the Tata Trust and Tata companies have to work in tandem, as held by the Supreme Court in this recent decision last year when Cyrus Mistri's case had come up. So it is a good decision. I think it will be very good for the entire organization.
What should we expect from here, sir? Continuity? These are people who work together for a long time. So
absolutely. Total continuity, they will act in tandem. There'll be total harmony in the working. So I'm very happy that this has happened, and I'm sure that the Tata Group will has the best to come now, and will lead you to new heights, both under Mr. Chandrasekharan as the Tata Group chairman, and under Mr. Noel Tata as the chairman trustee of the Tata Trust.
Mr. R. Gopalakrishnan is also with us, former board member at Tata Sons. Mr. Gopalakrishnan, good to have you with us here, sir. Thank you very much for joining us. Your first thoughts, sir? Mr. Noel Tata, unanimously chosen as a leader of Tata Trusts.
Well, I didn't even know that, but if you say that he has been chosen, I'm delighted.
He has been, sir. We're reporting that he has been, yes.
But he is the chairman of the Tata Trust, all the trusts.
Yes, chairman of Tata Trusts, yes.
That's very good. I'm happy.
Have you...
Yeah?
Yeah, what should we expect from here, sir? As someone who's worked in the system, as the former board member at Tata Sons, I'm sure you would have worked with Mr. Noel Tata as well, right? You would have had interactions with him. Can you tell us?
Noel is a very, very nice and sensible man, and he's got his heart in the right place, and he will do wonderfully well for Tata. So I'm very happy for Tata Trust, and I'm sure Chandrasekhar will do what is right for the business.
We in the media, Mr. Gopalakrishnan, don't get he's a very private man, obviously doesn't, not very many interviews or any such. Even, of course, with the huge success of Trent more recently, could you said he's a very wise man, very nice, and could you tell us a little bit about his style of working? What can we expect for Tata Trust under him, sir, from here on?
Listen, Tata Trust is about charitable activities, NGO activities, and it has been set on a certain strategy and a certain path. And Noel Tata represents continuity, and he will take it on that path with all the business acumen and entrepreneurial acumen that he has acquired during his business career, which he has concluded in the executive sense. He is now non-executive. He'll be able to add a lot of value to the trust, not different from his elder brother, Ratan Tata. So I think this is a very positive development, okay?
Mr. Gopalakrishnan, good afternoon, sir. Shireen here. We were speaking yesterday about the possibility of this decision, and it is now official. What I am given to understand is that there were two meetings that took place this morning. One meeting of the trust to pay homage to Mr. Tata, and the second on the chairmanship decision. And, what my sources tell me that there was not even an iota of ambiguity in the decision made to appoint Noel Tata as the chairman. It was a unanimous decision, and there was consensus on taking this decision forward. Prashant, one of the other aspects that's important to point out, to just build out context, there was some conversation on whether this decision should be taken today, given the fact that we just had Mr. Tata's last rites being performed yesterday. But finally, the decision was that this is what Mr. Tata would have liked. His approach was to get on with decision-making and to move on with life. And that is why the trust decided that they would take forward the decision on appointing Noel Tata as chairman today. So that has been the sequence of events as it has transpired. Mr. Gopalakrishnan, when we were speaking yesterday, you were talking about how when you joined the Tatas, you were mystified about how this structure works. But now, as a former insider with an understanding of how it does work, and now with the appointment of Mr. Tata, Noel Tata, to take things forward, business as usual and a continuity in the approach, you think?
Absolutely. I mean, earlier the trust chairman and the Tata Sons, the business chairman, if I may use that expression, was the same person. JRD was and Ratan was. And sometimes that could provide a potential conflict. Though they handled it, you could not leave that as a structure. So it's now very nice. You separated the NGO, not the NGO, the trust functioning from the business functioning, and this is wonderful. This is, you don't need to have a PhD in organization structuring to know that it's the.
Yes, you're right in pointing out that was the amendment made to the Articles of Association where the decision was taken post that bitter boardroom battle with Cyrus Mistry to separate the two positions of the trust as well as the Tata Sons chairmanship. And of course, as we know, N. Chandrasekharan was reappointed and does have a few more years now as far as his tenure is concerned as chairman of Tata Sons. Mr. Gopalakrishnan, it's always a pleasure, sir. Appreciate you joining us here on CNBC-TV18. Many thanks for your time today on this story that's developing, and of course the decision that has been taken, which is breaking on CNBC-TV18 this afternoon. Appreciate you joining us here.
Goodbye.
Mr. Ranina, let me come to you, sir. This is, of course, still source-based information that we are picking up, but two meetings took place this morning. One on the meeting to pay homage to Mr. Tata, and the other on the decision of appointing a successor. And Noel Tata it is, as was being speculated and as we were discussing earlier this morning, Mr. Ranina.
Yes, absolutely. I think this is the right decision because Noel has been in charge of various important companies of the Tata Group, and he has been on the Tata Trust, so there'll be complete synergy between the Tata Trust and the corporate entities. And therefore, this is the right decision. As I expected, this will be unanimous. There'll be no conflict, nothing. It will all go through very smoothly. And I think the best is yet to come for the Tata Group. Tata Group is going to prosper from and go by leaps and bounds. So I think it's a very good decision, good for the market, good for the shareholders, good for all stakeholders.
let me take that point across to Mr. Vallabh Bhansali. He joins us as well. Mr. Bhansali, thank you very much, sir, for taking time out to speak with us on a big day and a big story that's just broken on CNBC-TV18. I'm picking up from my sources, sir, that Noel Tata has been appointed. That decision has unanimously been taken by the Tata Trust to appoint him as the chairman after the demise of Mr. Ratan Tata. Your thoughts, Mr. Bhansali, on Mr. Tata's appointment?
Well, it is not entirely unexpected, Shireen, and one can be only happy about it. The way Tatas have functioned is that they shape people, and they shape Tatas. I mean, Noel was a born Tata, and so, he has been working very quietly in an area where they've had spectacular success. And so as I try and visualize him in the new chair or new position, I see that, okay, the qualities of simplicity, humility, the quintessential Tata character, is all over him. And his experience, they all will come with different backgrounds, but they all, had the chance to grow under the big trees. Mr. Ratan Tata under J.R.D. Tata and Noel Tata under Ratan Tata. So they work closely for very long. They have their own pattern of, you are part of this story, this company, that company or not, doesn't matter. So I see that the fact that part of retail, and he has done such an outstanding job of that whole business and related businesses, I think gives me great happiness and hope that the amazing story of the Tatas will flourish under him.
Mr. Bhansali, you picked up on something that I remember Mr. Ratan Tata told us in an interview, and he said that it doesn't matter, that he believes that the group would change in its complexion and its aspiration, but the one thing he hoped would remain intact were the values that drive the group, the integrity and the sense of trust and the values that have driven the group. With Noel Tata coming in, as you pointed out, so there will be a passing on of the baton, but more continuity in terms of approach, you think?
See, it is hard to say, and it's also unfair that I think someone who sits on such a big position must have the benefit of own vision, own preferences. And as long as it comes from a sense of purpose for which Tata have stood for, more than 130, 40 years, I think that's what matters. That has worked for them. That has worked for the country, society, community, etc. And I think that is very important because there are very few enterprises who eventually are able to practice that. It's a spiritual thing almost, because it's easy to talk about purpose, but unless your purpose is really broad-based, people don't recognize it as purpose. It's always a business objective defined in, whatever language, etc. But there's a deep purpose for which they have been, committed and worked now through generations. So I think that purpose gives you the direction, which is, of course, shaped through the prism of the person, the times, the opportunities, etc. And therefore, I would say that as long as that's what I meant when I said that you are groomed to be a Tata. And what you said, what qualities that we talked about, they are essential to being a Tata. And I think Mr. Noel Tata is full of them. I wouldn't want to impose one approach or the other. Let him take, he has been seeing all this. Now he's a mature person. He has seen all this, go through ups and downs, etc. So I'm sure he's going to bring some wonderful perspective.
I think that's very well put and very well articulated, Mr. Bhansali. You're absolutely right in pointing that out. As someone who's observed both Mr. Ratan Tata as well as Mr. Noel Tata, and both have been, individuals who have chosen to fly under the radar. But if we could just focus a little bit on Noel Tata and the manner in which he has transformed the businesses that he's involved with, and you alluded to that in your opening remarks, your perspective on the rise of Noel Tata and the evolution of Noel Tata as a leader.
So, you are baptized by fire. They looked at the horizon. Retail was going to be a very big business. There were various approaches from, their cash and carry to, West Side and other areas. and how they've been very quiet about their business in retail. That's the remarkable part, that they haven't made big announcements and big objectives, etc. This has been under the radar, relative to the size of the group and what they could have been otherwise. We have seen some very big, noisy retail entries. And so from that point of view, I think it gives us a character of the person that he would rather work quietly than make big announcements. But focus on the customer. This is what matters in retail. And do it profitably. I think what's been remarkable about the work that he has done is that he has achieved profitability from very early days. So I think that gives us a character of the person to some extent. But the canvas now is very large. It's, as they say, salt to software, their Tatas. So all that now has to be tailored, has to be amended, or rather, I would not think that, you should look at Tatas through retail eyes. He has to look at Tatas now, with whatever is required, which, as I said, is that great sense of purpose and tradition. And I'm sure that he will do it.
That's right. Mr. Bhansali, you brought up an interesting point that one will have to look at the tenure of Ratan Tata through the prism and the context of the times that he was operating in, and look at the choices that he made with that context as well. As you look at the Tata Group today, I mean, the sheer breadth and depth of the businesses that they operate in, as well as in the context of where India finds itself today, both from a domestic point of view as well as its role and relevance in the global economy. I mean, how would you, what to your mind will be the opportunities and challenges that Mr. Tata will have to weigh?
In a way, they have taken large bets on, what are the trends that are visible today. In terms of their partnership with, to make Apple phones or semiconductor or Air India or their whole emerging digital platform, which is, growing by the day. And of course, they have their traditional commodity businesses in terms of steel and chemicals and so on. So I think they are already well aligned to the trends that are visible today. What it will be in 20 years' time today, I think nobody in the world can probably predict, because the world is changing so fast. But what I am trying to allude to is that if you are already a multidimensional organization, that means you are already, have the advantage of that many more horizons. If you are not in software, then, technology becomes that much more difficult and so on and so forth. So I think they are, and now either the emerging businesses of, making aircrafts, and things like that, and defense. So I think they are well poised to take advantage of virtually anything that we can probably conceive of. If the nature of business itself changes tomorrow, what sort of disruption will happen, it's hard to say. But based on what I can see, I think they have a solid foundation in various aspects of our economy and the trends that we can see.
Mr. Bhansali, thank you so much for so succinctly but comprehensively putting together your thoughts on the innings that Noel Tata takes over as the chairman of the Tata Trust, and what this means now as far as the source-to-software conglomerate itself is concerned. We truly appreciate your time. Thank you very much, sir, for joining us here this afternoon on this big developing story. Prashant?
Shireen, thanks very much for that. Very interesting to hear from Mr. Bhansali wrap up what his sort of big picture thoughts will be about Mr. Noel Tata and how he kind of sort of will lead Tata Trusts from now. And Shireen, as you said earlier, what is also amazing is the speed with which they've moved, right? And I think, as you said, there was a meeting earlier which paid homage to Mr. Ratan Tata, and the second one where Mr. Noel Tata has been appointed unanimously. So, and as that line that I read, which is they've done this in line with Mr. Ratan Tata's sort of motto in that sense, to move on.
Yes, absolutely.
Yeah.
That is that is what I was given to understand, that there was some debate and back and forth on whether a decision should be taken as early as today. But when it was very clear that this was a unanimous decision, and there was absolutely in the words that were spoken to me, there was not even an iota of ambiguity on the decision itself. Then the decision was that, look, let's get on with it. That is what Mr. Ratan Tata would have liked. He would have wanted, the decision to be taken and for the group and the trust to move on. And hence the decision to go forward with the appointment of Noel Tata as chairman today.
Absolutely. And, just the big story, if you're just joining us, Mr. Noel Tata appointed chairman at Tata Trusts. And this is, of course, the big story. And, of course, I mean, the amazing thing with the group itself is the way this is structured. I think, as Mr. Gopalakrishnan put it, one is, of course, the business side of things, which is Tata Sons. And then there is Tata Trusts, which controls 66% in Tata Sons. Which is, of course, the charitable arm, the group of charities, which is Tata Trusts. And, and now, of course, we've got Clarity Tata Sons, where Mr. Chandrasekharan is, of course, the chairman, and where at the trust level, Mr. Noel Tata is going to be a chairman. So this is what's coming through, and we'll continue to get you more perspective from people who are who've interacted with Mr. Noel Tata more than anything else. As we've been saying, he's been an intensely private man, has kept to himself through the rise and rise of Trent, and of course over his long business career as well. So we'll try and get you more on this in terms of the road ahead as we go along. So that's it for now, guys. Almost, Vinny.
Thank you so much for that, Prashant and Shireen as well. Some important insights coming in. But the news of the hour, Noel Tata appointed chairman of the Tata Trust, as the late Ratan Tata would have wanted. The show must go on. And with that, we take a short break. More news and updates continue on the other side.
Start by talking to you about that. In Mr. Tata's own words, he said he would like to be remembered as someone who made a difference. Nothing more, nothing less. What do you believe has been the impact that Ratan Tata has had on India and on the House of Tatas?
Well, I think, Shireen, to start with, it is a sad moment to lose someone like him. But I think it's also a life to be celebrated. I think that very few people can make the kind of impact that he has made in one lifetime. His footprint, as you know, goes far beyond just industry. I think his legacy as a humanist, as a philanthropist, will probably be remembered even more than his legacy as just being an industrialist. I think that his ambition or his dream of making a difference, he's done more than one can imagine. To do that, to make a difference. He's made a difference to Indian, industry, to society, through all the charitable and philanthropic work that the Tatas do, some of which I know he was very involved with himself. All very quiet, didn't speak about it. You know that he was extremely low profile, shunned any kind of attention. And he was a true son of India.
Welcome back. Manisha Gupta is now joining in with Sriram Krishnan, the Chief Business Development Officer at NSE. Manisha, over to you.
Thank you so much for that. And Mr. Krishnan, thank you so much for joining us here at CNBC India. Well, NSE has completed 1 year in commodities. Congratulations to you on that. And how would you look at the year gone by? How has been the response for the products launched?
If I look back, the 1 year that we have gone through has been really, really satisfying. And I say that because commodities is a difficult segment for members to get enabled, for them to invest in getting those lease lines to enable connectivity, because co-location is not permitted in commodities. So it's taken each member about 5 to 6 weeks to get those lease lines, to get connected, to get their front office and back office ready for trading NSE commodities, and then to finally get the algo certification done, approvals done, and then go live. So it's been a bit of a stretch, but we are overwhelmed and really, really grateful for the kind of support we have seen from the ecosystem. I think the ecosystem players acknowledge that there is enough place for multiple exchanges to offer commodity products. And I think that's why they have invested and got ready to trade, to offer NSE commodities to customers.
Sure. Mr. Krishnan, that is a year gone by, but now what are you looking forward to in sense of commodities? What is NSE planning? Are there any new launches in the pipeline?
The 1 year has been a period of getting ready for the ecosystem. And in terms of certain milestones that we have seen in NSE commodities, we have seen intraday open interest peaking at about 600,000 barrels. We've seen more than 1 billion barrels being traded in the last 1 year. About 240 members have got set up already and live on NSE commodities. And I think more and more volumes are building up with each passing day. In times to come, we will certainly look to bring new products. I think it's time for us to look at the list of products enabled by the regulators to get the market feedback on which could be the best products for India in the next phase. I think in phase 1, the focus was on energy products, but in phase 2, we will broad base this a bit and see what the market requires, and very happy to support the market in every possible way.
Oh, sure. Mr. Krishnan, while the last 1 year has been very volatile for commodities, it is said that we are into a structural bull run for commodities. You talked about the volumes to us. Are you also now looking at metals, energy, any agriculture commodities that has been on your list that you would introduce on the exchange going forward?
If you look at the way the economy is shaping up and various sectors are gearing up, in the next several years, there's going to be a huge demand or a huge level of growth that we can expect to see in multiple sectors. And many of these sectors are, in fact, dependent on crude oil and natural gas. For example, you take plastics, or you take petrochemicals, or you take rubber or tire manufacturing, you take aviation fuel, petroleum, as the country is consuming more and more cars, automobiles, and so on. I think there's going to be a definitive demand for crude oil and natural gas. So that was the motivation for us to come out with the energy products first. But I think in times to come, many more sectors are going to grow, and they will require hedging options. At the moment, a lot of hedging happens outside the country. It's going to be our objective to make hedging options possible on the Indian exchange itself, which is the NSE. So, that's the motivation for us to get into this space and see what the market requires us to do next.
Surely. Mr. Krishnan also would want to know on what are the conversations with regulators at this point in time. And as you said, you want to grow the ecosystem of commodities within India, grow it as an asset class as well. So what is it that is being talked about, and what is the plan for the years to come?
We want to make it a really, really big segment. If you look at other countries, the developed countries in particular, commodities is a really large segment, sometimes larger than the equity space. And in India, unfortunately, that's not yet the case. And that's why we think there is a big opportunity for us to expand this segment and expand the market and benefit the market participants in terms of efficient hedging solutions on the Indian exchanges itself. So that's going to be the discussion with regulators on how we can contribute to the growth of the ecosystem in the commodity space, and how NSE, with its vast experience in equity derivatives, can not only replicate the technology, but also offer margin efficiency and bring in innovation into commodities too. That's going to be the theme of the discussions.
We get that. Mr. Krishnan, thank you so much for joining us. Congratulations yet again in the last year of commodities for you. As you said, 240 members have joined in, and there's much more in pipeline in sense of participants, products and commodity derivatives there. But with that, that's all the time that we have on the show. Your stocks will take all the action forward.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we're just about consolidating for the frontline indices. We have the Bank Nifty, which has been under pressure. So no real uptick which has taken place for the Bank Nifty and no worsening which has taken place for the advanced decline ratio. So static is what you'd have to say today in terms of trade. We have the mid-cap index, which is up around 100 odd points. Overall, a lot of stocks, however, buzzing around. So we have a lot to cover in the next 30 minutes in terms of queries coming in from viewers. Hi, Vinny.
Hi, Ekta. Good afternoon. From the broader market front, it's a good afternoon coming in. And we're watching out for pharma names. Let's keep an eye out on all of that. Newland Labs is buzzing in trade. We had Wockhardt Pharma also that is buzzing in trade. And a lot of mid-cap movers like something like an BSC is also in focus today. But let's get started with all the stock-related queries. And today joining in with us, we have our experts. We have Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, head of technical research at Prabhudas Lilladher, to answer all your stock-related queries. Vaishali and Shaina, both of y'all, very good afternoon. And Vaishali, just want to understand, before we end the week, we had a bit of a volatility this week. How are you looking at in terms of the markets, any levels that we should be keeping an eye out on specifically for the Nifty and the Nifty Bank?
Very good afternoon, ladies. Yes, so it has been quite a narrow range as far as the major index is concerned. So let's talk about Nifty to start with. I mean, well, it is continuing to be in a narrow range of 24,900 as support and 25,200 as resistance. And since 2-3 days, we've been observing that is what has been happening. So unless and until we see a decisive move on either side, there will be a clarity as to which way the market is heading for. So even the advanced decline ratio, if we talk about, is quite flat. So is the case with volatility index. So I guess it should continue to be in this range. As far as Bank Nifty is also concerned, yesterday we saw a good move coming in. But however, now once again, on near-term basis, we would say 50,800 would act as support and 51,800 is a resistance. So it's a wait and watch scenario.
Okay, all right. It's a wait and watch scenario which is coming in. Well, let's get to our first query then. We have Sagar, who writes to us from Bangalore, holds 4,000 shares of Bharat Electronics, which is bought at around 299. So he's sitting on a loss at this point in time, wants to know what to do, whether he should book his loss or he should remain invested in this particular counter. Well, Shaina, over to you. What's your sense on this?
Well, I would suggest continue to hold. Despite him having made losses, I think he would recover it. The first quarter numbers were excellent. I expect even the second quarter to be good. In terms of valuations also, it is decent compared to the rest of the PSU pack. And the order book position is very healthy. So it's better to continue to hold on to the stock.
Okay, better to hold on to the stock is the word coming in from China. But Vaishali, on the technicals, how are you looking at Bharat Electronics? What's the word for this?
Well, the long-term trend is pretty much intact. We saw the recent high of 340 and now it did make a low of around 270 levels. It's attempting to show a bounce back. So depending on your time period as to how much he or she is ready to hold on, I think it's a hold for now, because once we see the stock moving about 290 and sustaining above, it's back on track for higher targets. So, and I would, this is in support with overall, if you see full defense pack, is showing a sign of a bounce back and attractive levels to buy. So I would say stocks like BEL, if it's not for trading perspective, continue holding and in fact keep adding in dips.
Okay. That's a word on BEL. Let's move on. And Akash T is writing to us from Patna. He's holding 50 shares of Nalco at a price of ₹30. Wants to know the future prospect of his investments. Shaina, I'm going to come to you because, you know, obviously we heard a lot about the China stimulus points coming in. So overall, how should we play this stock especially? What should the viewer be doing now?
I would suggest that you can continue to hold the stock, because aluminum prices have actually moved up quite substantially, and this is despite not having any news immediately on the China Plus One, but that is definitely there on the cards, and Nalco is doing pretty well in terms of managing their balance sheet also. They've got good growth plans in place. So I would suggest Nalco as a hold.
Okay, you would suggest Nalco as a hold. Vaishali, what about you?
So chartically, it's showing quite a robust move. So I would say the trend is so strong. And I would say now for near term, 205 would act as a stop loss. And I think the way the stock is moving, it's ready to go towards 235 to 240 for a short-term perspective. So I would say hold.
Okay, all right. Well, we now have Manoj Jain, who writes to us from Chennai. He holds 40 shares of Zomato, which he's bought at 70. He's asking if he can buy more shares at the current price. So he's currently sitting on a profit. His buy price was 70 odd rupees. He's asking if there's more upside from these current levels. Shaina, you know, coming to you in terms of the fundamentals, do you think Zomato has seen a good amount of upside? Or do you think that there's anything about the fundamentals that could, you know, possibly result in a further upside? And would you recommend a buy at these levels?
Well, see, Ekta, by itself, Zomato looks like a good bet, even in the long term, considering that it is moved into profits. Blinkit is doing well, expanding its spread. Having said that, I would continue to hold Zomato, but if I want to add to the sector, I believe you can keep, Swiggy, the IPO is there on the cards. And you can add actually Swiggy, which in my view, the valuations are slightly, will be better than Zomato at current levels in terms of their PE and other valuation parameters. So you can keep some powder dry for investment in Swiggy.
Sure. Okay. Vaishali, just a quick view from you on Zomato as well. Do you expect still a further upside?
Well, the stock chartically is quite flat right now. So if someone has to add at these levels, I would say no, because market is quite vulnerable. Look for a opportunity to get into the stock at around 250 levels. That would be ideal. But contrary to that, if stock moves above 290, then it's back on a strong trend, and then one can look for a 300, 310. But ideal technical levels to get into the stock would be around 250, 55.
Okay, all right. Well, on that note, we need to take a break with the news that we have the markets in just about consolidatory mode, but the Bank Nifty underperforming. We'll take a quick break. Up next, more queries. Stay tuned.
Welcome back. You're watching Your Stocks, and we still have our experts with us, Shaina Mukaddam as well as Vaishali Parekh, to solve all your stock-related queries. This next query, we have a caller joining in with us this afternoon, Mr. Deepak Kishan, who's joining in with us from BR, and he has a query on PBR Inox. Mr. Deepak, can you hear us? And you can take your query on PBR.
Yeah, ma'am. I had purchased just 3 shares of PBR Inox around 1.5 years back. So the stock hasn't performed after that. It has consolidated in below the range, and I'm still holding it at a loss of around 22%. So I just wanted to know the long-term view for this, because I think it needs patience, but how long should I hold, to exit the stock or book profit, and what should be my strategy?
Sure, okay. So it's a long-term query. PVR Inox purchased 3 shares at around 2,077 rupees. China, long-term query, I'll take it to you. What should the viewer be doing now? We are not seeing that many lineup of movies, that have performed too well. What are we watching out for now, and what should they be doing with their stock?
Even if the investor had invested for 5 years, he would still not have made much money. In fact, it's only in the last 6 months that it's given a little bit of, up move. At the same time, I think this up move is largely priced into the current levels. The stock also has moved up. And basically, while the performance in FY24 was much, much better than FY23, I think, at current levels, it's still expensive. And if you're going to hold it for the long term, I think the overall technology is changing, so one cannot really extrapolate into, say, 5 years, 10 years. So you have to look at it for the shorter term, and for the shorter term, I think it is fully priced. The debt is very also high. So in terms of balance sheet also, I'm not very comfortable, and it's a very over-owned stock. It's just held by a lot of mutual funds. So I would actually switch. I think there are better opportunities in the current market.
Okay, Vaishali, what would your thoughts be, considering that the stock has done modestly well as compared to other mid-caps in the past 6 months? But China is not, very bullish on the fundamentals at this point. Technically, how does it look?
So I totally agree, actually. It has been hardly a momentum stock or hardly a strong trend. But I would still say that now he's holding, may as well hold for some more time, because right now it's just trying to breach the resistance levels of 1640. And if that happens and if it sustains, then I think he can look for a target of 1750. That could be the ideal level to exit. And if now it doesn't succeed to move beyond this, I think keep the stop loss of 1550 to exit.
Okay, all right. We now have Shashank, who writes to us from Bihar. He holds 30 shares of Prestige Estates, which he's bought at around 400 odd rupees. He's sitting on a good profit on that one, excellent profit in fact. He's asking whether to hold or to exit at these current levels. Well, Prestige Estates has been a multi-bagger from the time Shashank has bought it. What would you recommend on, let's start with the technicals. Vaishali on Prestige?
So overall, realty sector has done quite well. And I think right now Prestige is going through a long consolidation. So right now it's in a very narrow range. 1700 is the support, and the resistance in the near term is around 1970. So this is the band that one is observing in Prestige Estates. I think for now, look for a target of 1970, and if it still moves beyond, one can look for a target of 2050 to 2200.
Okay, and China, what's your word coming in on Prestige Estate? Then, it's performed better than the Nifty Realty, at least when you're looking at it in the last year. So what would you be watching out for here? Prestige Estate a good bet, or maybe you would switch to something else?
Well, you can continue holding, in my view, Prestige Estates. They recently did the QIP, raised about 5,000 crores. The issue price was close to about 1,674, which is like a pretty decent level, considering that their balance sheet also now, after this issue, which they can use to repay the debt equity will be maintained at about 0.7. Which is not bad for a real estate company, especially Prestige, which is expanding a lot. They've got a lot of ongoing projects. Bangalore, in fact, I think this quarter will be pretty good, because Bangalore, they launched a pretty large project, and that I think some of the revenue will come in this quarter. Also, they have got other plans for, across India, they've got various plans. Mumbai, they've got Mumbai, Hyderabad accounts for about 50%, Bangalore accounts for about 50% of revenue, and they've got projects ongoing in all these sectors. So to that extent, I think valuations also are not stretched considering the medium to longer term. So I would suggest hold.
Okay, suggesting a hold here. Next query is from Srinivas Vemuri, who's writing to us from New Delhi. He's planning to invest in Bajaj Hindustan Sugar and Hindustan Foods. Wants to know if these are good stocks to invest in at the current levels. Vaishali?
Well, I think Bajaj Hindustan, I wouldn't recommend a sugar stock, at least for investment, because it's all very cyclical and seasonal. So no, I technically also it doesn't match my view, because 37 rupees is the support level and 44, 45 is the resistance. So that would be the strategy that he can hold if for trading strategy.
Okay, all right, fair enough. Vaishali as well as Shaina, thank you very much for joining in and giving us all of your perspective on a lot of these stocks. Well, we leave the markets in just about a range-bound fashion for the Nifty, for the Sensex and for the mid-cap index. But the Bank Nifty is the one which is under pressure. Advanced decline ratio still holding on the advancing side. So let's see whether that sustains in the last 1 hour. That's all the time that we have on your stocks. Closing bell up next.
It's a mixed picture that is coming up from the Asian markets. The Taiwanese index is trading with very healthy gains of over 1%.
TCS reports a margin miss in the current quarter. EBIT margins at 24.1% fall short of street expectations.
The downside, the low from 2 days back, I think has to remain unbroken for any of this to work out. 24,694 is where that number is at.
The stocks that I'm focusing on, one is Bandhan Bank. There's an update that's come in there.
Flat actually for all practical purposes. 24,984, flipping into the green.
Structurally, we will see higher inflation because of printing, but that will lead to higher asset prices.
The Nifty and I think the mid-cap index are along the flat line. Watch for the banks.
We have started to bring some true innovation on the market, like the soft cheese.
Noel Tata is likely to be the successor, and Melly Mistry is likely to be appointed a permanent trustee.
The aircraft landed today successfully at one of the 2 runways of the Navi Mumbai International Airport.
Noel Tata has been appointed as the chairman of the Tata Trust.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, it's a quiet day. The market is down about 50 points. This is Closing Bell, and what you saw through was, of course, the run-through of the day so far. We're coming to you from the CNBC-TV18 Motilal Oswal Studios, and this is the last sort of hour of trade for the week coming up. I'm Prashant. With me, my colleagues Reema and Surabhi. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon, folks. Finally, we're at the last hour of what's been another really busy week. Not maybe so much in terms of price action, but definitely in terms of news flow.
Nigel is seeming a little subdued today. Nigel, it's Friday.
I think we'll hear him louder after 3:30.
Nigel's schedule is, it starts at 5:30, 6:30 and then 7:30. I won't say what.
Nigel's an early evening boy, you know, but yeah, it's been an interesting week. So let's hope, you know, we end somewhere around here and don't see any kind of big sell-off.
Yeah, absolutely. And, you know, I think the only sector which is doing well is metals, right? I mean, I think that's up about 0.75%. And maybe that is, again, you know, you're kind of joining, you're basically trying to see if China will announce something which may sort of cause a pop or a sustained move higher. Which was that meeting is tomorrow out of China. Last one was a big disappointment, remember. And tomorrow is the Ministry of Finance meeting, there's a briefing, etc. So will there be a number? A number is important because if there's no number, if there's no big headline number, I mean, then, you know, people are likely to say, well, it's not really gone anywhere. And so will there be a big headline number? That is the question. We'll talk more about this in a bit from now. Otherwise, I mean, I think it is generally quiet. We're also going into the weekend, right? Because the 2 days of holiday. And as always, we've been sort of, at least for the last fortnight or so, markets have been waiting for this thing in Middle East to resolve itself one way or the other. So that uncertainty pushed oil prices as we head into the weekend about 4% last night. And I think it's holding on to gain so far. Reema.
Well, China closed down today. So I'm not sure in terms of expectation how exuberant and excited the street is. But the Shanghai index was down close to about, I think, 2.5% by the close of trade. For us, on a week-to-date basis, the Nifty is down about 0.25%, but the mid-cap index is up nearly 1%. TCS started trade with a cut of about 0.5 to 1%, but by the close of trade, it's extended its fall to more than a 2% cut. So, you know, the fall came through after the opening tick. Between about 11 and 12, we've seen TCS slip close to about 2%. But on the other hand, HCL Tech, which reports numbers on Monday, is higher by nearly 1.7%, and Infosys too came in for some amount of buying interest. Reliance Industries was showing promise in the session, but now their rally has faded a bit too.
Yeah, absolutely. And you know, global markets are not doing too much. Very, very quiet. Even in terms of European market action, there's a little bit of red, little bit of green. So it's frankly quite directionless. I was just looking at Tesla shares, by the way, for the reason that it made all the kind of headlines, right, with this robo-taxi announcement. Guys, I wonder, how robo-taxis will figure and feature on Mumbai roads. I'm not sure. I take the taxi or try and take the Uber here. But I'm not sure if a driverless cab will manage to navigate lower peril. What do you think?
All the infrastructure being built, right? Bridges everywhere. So
Then maybe. Then the coastal road, maybe. It'll figure on the coastal road. Okay, anyway, back to the market. That was a digression. But on the mid-cap screen, I mean, there is a little bit of green. That's the only index that's holding out slight positive at this point in time. Very, very different sort of set of stocks moving around, and we'll talk about some of them. So the ones in focus include obviously Bandhan Bank on the news flow, on the change of guard. Then there is Newland Laboratories. It's got some positive brokerage commentary around it today. It's working really well for the stock. Nippon Life has suddenly taken off about 8% up. So when it comes to individual stock action, there's plenty to keep us excited. But otherwise, very, very range-bound session for the headline indices today. Nigel.
Well, that's right. I think the best news today is that the mid-cap index is in the green. So your portfolios will be feeling very, very good. Well, let's find out how you trade the final hour of trade. For the time being, we're down close to around 40 points. Midesh Thakkar is back with us. Midesh, you were sounding a little bit cautious in the morning, and it appears that cautious view is playing out pretty okay right now. I think you had mentioned this morning that only once we get 25,400 would you believe that it's the real thing. Any change in stance? The Nifty Bank you called out as well. You didn't believe in yesterday's bounce. It's down 400 points.
Yes, I think the structure is, on the weaker side, which means that most of the moving averages on the hourly, 2-hourly charts, the indicators are still pointing downwards. Though the good thing is that because of that bounce back, which happened 2 days back, 3 days back, and it was against the decline, I think the volatility indicators are subsiding a bit. So I believe it could be a slightly, choppy but sideways kind of an action with mild downside bias. So on the Nifty, it will be 24,700 to about 25,250, and in the best case scenario, 25,400. And on the Bank Nifty, I think the key support is around 50,700, 650 zone, and on the upside, it's 51,700, and in the best case scenario, 52,400. So broadly, it's a market which will be going through some volatile times. In case the support levels hold, then I think, after some base building and choppiness, we might see a reversal on the upside. The only worry in this entire scenario would be if the support levels don't hold, and then I think, we might prepare for further downside, but that is something which we might know in the next week sometime. So for trading with stock specific bias, I have a buy on PEL, Pyramid Enterprises. Keep a stop at about 1,050 for targets of 1125. And that apart, I think, the IT names are looking good. Oracle Finance is a buy with a stop at 11,300 for targets of 12,100.
All right, Mitesh, thanks very much for that. So we'll come back to you with more. Actually, Mitesh, if you could stay with us for a bit longer, I want to get your thoughts on metals. But let me just put the context for our viewers, right? Now, there is this much anticipated, everyone is covering it, that tomorrow the Ministry of Finance in China is having a meeting, and then there is a press conference. Now, the context is this, that markets got very bearish, and I think Chinese authorities are aware, if you sort of read articles coming out of there, that markets got too bearish post the NDRC press conference. This is the last one which was supposed to throw up this stimulus after China came out of the Golden Week holiday. But nothing came, really. The big question for markets is if the policy pivot is still on track post that pressure, or is actually fizzled out. And I think in that context, we get the answer tomorrow, and this becomes important. Now, there is also a little bit of nuance here. While markets got very excited because of NDRC, because of, before that there was the Politburo. So there was too much emphasis on that NDRC meeting. But NDRC in China largely looks at investment projects and partly involved in fiscal deployment as well. It is the PBOC, the Central Bank, People's Bank of China, and the Ministry of Finance, which is largely responsible for what they call cyclical policy adjustment, responding to, the ups and downs in the economy. Now, one other thing before I get to the actual expectation, the finance minister, the Chinese finance minister himself will address and take questions as far as the press conference is concerned. So what to expect? So here are a couple of things. Revisions to official fiscal deficit requires a NPC approval, which is National People's Congress, which is another important body, which will meet only late October. So the Ministry of Finance as far as we can tell, will not be able to pre-approve a large budget spend ahead of this NPC meeting, which is only sometime in late October or early November. That is the next National People's Congress meeting. The possibility is, and this is essentially now the actual expectation, the possibility is that the Ministry of Finance may give markets an implicit heads up about an upcoming fiscal stimulus plan. They may actually indicate towards a fiscal plan quite strongly, especially this may come up, a directional sense of this fiscal spend may come up during the press conference, which is where they're expected to take questions, etc. as well. Remember, after the NDRC meeting as well, there were questions taken. There was a press conference. A specific question was put to the authorities at that point by the Reuters journalists about a fiscal plan, and they did not really commit to it. So expect a repeat in terms of questions at least. And the hope is, the expectation is that we will not get a big headline number because they can't do it without the NPC approval. But they may actually strongly indicate towards it, especially because I guess the authorities in China also don't want to sort of let go of this momentum that they are seeing, at least, which has developed over the last fortnight or so. So this is, is broadly the expectations. Don't expect a big number tomorrow, which is essentially what gets everyone very excited, because one can fixate on that and say, well, this is this percentage of the annual budget in China, and this is what it will do to growth, etc. But expect an indication that they are committed. I mean, there's a possibility they may not do it, but an indication at best, and maybe a strong indication if we are lucky, especially the metal stocks here today. Mitesh is, I think, still with us. Mitesh, thanks for waiting. Just your thoughts on commodities, metals, mining stocks. What's your sense? That sector is up today.
In fact, we have been positive here and we have seen good rally, but the one which looks stronger to me are the non-ferrous, the aluminum stocks like Nalco and Hindalco. While Tata Steel and SAIL also, look promising, but just looking at the overall setup, the position of the indicators, I think Nalco and Hindalco might do well. So on a national aluminum, for example, my sense is that it's heading towards the highest ever level which the stock has done is about 227.4. And we are just about 2% below than that. And the daily and the weekly charts are, clearly showing signs of expansion. Good chance that Nalco might head towards 250 plus levels. Similarly, Hindalco also, if I was to look at it, the highest level the stock has done is about 772, and now at 747, and the structure is positive. So I think it should retest those highs and maybe even clear them.
Okay, that's the call on some of these metal names. Prakash Diwan is now joining in on the show. Prakash, afternoon. We spoke yesterday post the TCS's numbers, and there were a few green shoots. The recovery in hiring, the recovery in BFSI, etc. But the stock has taken a bit of a hit. Do you expect the next 3 months TCS to be sluggish? Is it time to look at the other IT names? Or if someone has IT exposure, it's time to, pair some of those bets, because you don't know what's going to come out, right? There could be another disappointment like TCS, and you made some money in IT names.
So, Rima, good afternoon. So, I do agree. The numbers were short of expectations, particularly the margins, primarily because they came mostly from India. And the India-based business is known to be, long-term revenue growth, but not too much on margin accretion. But what's probably not been accepted by the market very well, though initially it seemed that the North American BFSI uptick, as you rightly pointed out even yesterday, was some sort of a green shoot which could make people believe things will look up. But as of now, we really don't know what is the behavior that you can build in from a longer term perspective on the order wins. The Fed rate cut has been kind of come and gone, but we've really not seen corporate America look at anything which changes the trajectory or the pace of change. And that's primarily because you have a big event in the form of the November US elections. Once that's out of the way, you probably have clarity. So if you really ask me, most IT names, barring an Infy or something which probably has different levers to work around, you'll probably find IT goes sideways now. And till there's some sort of a uptick in order booking, which is where things will start looking up differently for most companies. And it depends on which verticals start contributing. Is it BFSI that leads the pack? And is digitization going to make a comeback, or is it more AI support? So a lot remains unanswered, and that's precisely why I think people are taking some money off the table when it comes to TCS, and that could happen in some of the other bigger names as well.
Okay, that's IT for you. By the way, let's pull up Newland once again. I mean, Newland has been an absolute stunner today. The stock's up almost, I think, 13 to 14% last we checked. What Ekta tells us that there is some sort of expectation out there, and the analyst commentary that's doing the round is talking about perhaps better exports in the months to come of couple of the APIs that they're involved in, and maybe that could be driving up sales. Exports of 27 million, which is going to be a 12 times increase month on month. I mean, this is all sort of buzz and chatter that's doing the rounds in terms of the analyst fraternity that tracks this company. And maybe those high expectations are getting priced in as we speak. Let's see if the company can deliver or not. But Prakash, let me take a chance. Newland, have you looked at the company of late?
So it's been making some very positive noises for the last couple of months, though. And if you look at the last 12 months trajectory for this stock, should be very clearly it's a stock that the market has certainly found love for. It's done so well, given the fact that it was valued for not having seen any growth in the previous 12 months, and then this year it's kind of made a comeback, which is phenomenal. So it's all about timing in terms of the output of the business. This could happen to a lot of companies that have been investing in energies and resources into the research side. And when these molecules start actually reaching commercial stage, or when some of the products get into the monetization phase, which is the case in Newland, then you have this opportunity. Now, will this opportunity continue? The answer probably is yes, not at the same pace at what we've seen last 12 months. But I would implore people to look at some other businesses that are in a similar set, in that sense, in a similar stage of evolution. And there are a lot of these businesses which are doing a lot of work on CAR T cells with the cancer oncology side. Some of them on the Ozempic side. We spoke about that yesterday. You look at the NATCO again. Why I keep bringing it back is from a valuation perspective, the risk reward is so favorable. Things that are working out for them will start kind of paying off so brilliantly. It's just a matter of time when that happens. From here, you have that delta being created in terms of earnings potential, which Newland has done. Even some of the older businesses, well discovered, like TVs, for instance. Why are they moving so strongly? Because everything which used to be a tailwind is kind of leading to some sort of solution being found on each of those counts, and the headwinds are getting to be so strong and favorable. So Pharma, you will see very specific stock-specific activity, company-specific activity. And from that perspective, if you time yourself right in terms of getting into a story, I think it pays off well. Newland, yes, there is some more legs to this rally, but yes, the better part of it is behind us. You could probably look at some of the other names, Orchid, NATCO, which are kind of getting there in terms of opportunities.
Okay, Just I reported numbers, a while back. And the company's revenue growth has slowed down to single digits. So in the current quarter, revenue growth stands at 9.3%, which compares with about a 13.5% growth in the June quarter, more than 16% in the March quarter, nearly 20% in the December quarter. And prior to that, we were looking at a growth between 25 to 30%. So that post-COVID boom, there was a recovery in the growth rates, and once again, it started moderating. And in the current quarter, revenue growth is 1.5% quarter on quarter, and on a year-on-year basis, 9.3%. Margin defense, though, has been quite solid, and the company's margins sequentially have been maintained at 28.8%. Profits have gone up by nearly 9%. Remember, the company is sitting on a fair amount of cash. The cash on the company's book stands at close to 4,942 crores, so it constitutes a large part of the company's overall market capitalization. Just as Q2 numbers. But let's get to some of the big movers of the day. Bandhan Bank is surging on the back of the appointment of its new MD and CEO. Abhishek now joins in with the details. Abhishek.
Well, RBI has approved Mr. Partha Sengupta as the MD and CEO of Bandhan Bank for a period of 3 years, and he should join the bank before 10th of November 2024. So Bandhan Bank has also received claims that they have raised to NCGTU, which is about the claims under CGFMU Credit Guarantee Fund for Micro Units, as well as ECLGS, which is Extended Credit Links Government Subsidy. So in total, Bandhan Bank had received about 1,460 crores from the claim of about 2,213 crores. So about 66% of the claims is what in totality they have received. Now we have brokerages who have written on Bandhan Bank. CLSA says they have an outperformance rating with a target price of 240 per share. They say that key overhangs are gone. That is with respect to management change, as well as the CGFMU audit being completed and announced. So with these two key overhangs now behind, focus will be back on fundamentals. In the near term, credit quality of MFI portfolio along with the sector that you are seeing can deteriorate. However, they believe that this is already in the estimates of analysts as well as in the price. Jeffries has also written on Bandhan Bank. They have a buy rating with a target price of 240 per share. They say that RBI appointed Partha Sengupta as the MD and CEO for 3 years. This should be taken positive as he was earlier Deputy MD at SBI as well as MD and CEO at IOB, that is Indian Overseas Bank. So he has also worked in West Bengal, which is a key market for Bandhan Bank. So with past stresses clear and valuations being attractive at price to adjusted book value of 1.1x FY26, this stays a buy for them. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. So that explains why Bandhan is doing well. But Abhishek, yesterday you were telling us that Credit Access Grameen's update wasn't that impressive, and now Nomura has raised various concerns. So that's why I think they've come out with a note. Tell us more about that.
Well, MFI stress, we did highlight in May of 2024 that there is stress in the rural economy, which is now being seen amongst lenders as well. So we saw that in CredAC numbers yesterday, wherein the disbursals declined sharply on a sequential basis, and that led to weak AUM growth over there. So Nomura has come out with a note on Credit Access Grameen. They have downgraded it to reduce from neutral. They have cut the target price to about 950 per share. They say that state elections, including Maharashtra, Bihar, and Jharkhand are coming up. These three states form about 28% of the business for Credit Access Grameen. So steep decline in disbursals or AUM growth. Asset quality has also deteriorated in the business update that the company has given. So multiple headwinds ahead for MFI sector, and they believe that asset quality issues in the medium term will be driven by steep rise in PAR, that is portfolio at risk, across buckets, especially in early bucket, which is PAR 0, wherein it has increased to 4.9 versus 2.5% in the previous quarter, and that should lead to overall credit costs being not only high in Q2 FY25 but also in the near term as well. Due to rising NPAs, there will be interest reversals on the portfolio, which will impact the net interest margin of the lender. And along with that, fintechs have been partnering with NBFCs, especially in the small ticket size unsecured loans, anywhere between 35,000 to 40,000 kind of a ticket. That is at a very high interest rate and at the same to the same household, aggravating the problems at the lenders side. Back to you.
Okay, all right. Thanks a lot, Abhishek, for that. Well, let's hop across to Prakash Diwan. Prakash, you heard what Abhishek had to say. Bandhan Bank, finally that stock seems to have things going for it. You've got a new MD/CEO at the helm, and also, in terms of a recovery, they've got 65% of what they asked for. Though the good news is that from here on, the provisions may not be very, very high. And the other one is Credit Access Grameen, which is weak, down 5% in 2 sessions. Your view on both these two counters?
Hi, Nigel. So, my view on MFI is extreme caution. I think there's much more that's not come to the fore in terms of bad quality of assets. And once that starts, it'll probably start unraveling, and you'll probably have some balance sheet which will really get very majorly impacted. I don't know which ones are those yet, but I'm talking more from a overall collections perspective, how things have been. You look at anything that gives you an indication of metrics related to rural demand, and it tells you that most of the demand has been very tepid for a fairly long time, and that's where the stress starts developing. So collections is going to be a big challenge for most MFIs, and Grameen Access very clearly demonstrates that. But on Bandhan, I'm very positive, Nigel, for the simple reason you have an MD, somebody in the top slot now with a lot of things, adding to that position. I mean, you have familiarity with the geography, you have familiarity with the segment. Having worked in a PSU bank of a large scale, there's an advantage to figure out how to grow. So, you have all of those things and then there's continuity. And this whole thing of the credit guarantee issue being, out of the way actually paves the way for Bandhan to start moving. And remember, from a valuation perspective, 4 years have passed since the COVID lows. I think it was, 152 or wherever it was at that point. It's hardly, moved 30% from there in all these 4 years. So it has a lot to catch up. The size of the book has grown. They've made some decent acquisitions on the fee-based franchise as well. The asset management business. So I think it's definitely a package worth looking at. Whether you want to wait for the demonstration of change to happen from the new leadership or whether you want to put the money before that, it's a call that you take. But I think from a risk reward, it's very, very promising at this point in time.
Okay. All right, Prakash, we'll leave it on that note then for today. Thank you very much for joining in. You have a good weekend and we look forward to connecting again very, very soon. Okay, that's Newsbreak confirms Sudarshan Chemical to acquire global pigments business. And that's a big amount as well, about almost 1,200 crores of the Hubach Group. I think this is something that Vivek had alerted us on not too long ago, and that story has finally been confirmed. So we'll try and get Vivek back very quickly. Stock's reacting very, very well because this is a global company. And it's a large-size global manufacturer that I think Sudarshan is acquiring. And perhaps the valuation is something that the street is quite okay with, looking at the stock reaction.
From what I remember, and we'll have Vivek join us, basically this company got into trouble. The global group got into trouble, and I think they were filed for bankruptcy, etc. And in the pigments business, I mean, I remember when even before the story, there was speculation whether this is going to be beneficial for Sudarshan. Because that company going out of business is a large player in the pigment space, but of course then we reported that they're trying to acquire and think it's finally happened. So as you said, CNBC-TV18 Newsbreak confirms stocks are sharply rising about 3% or so, and we'll have Vivek join us back on this to refresh our memories and what this may mean. Vaibhav Sanghvi from ASK is going to be joining us on the other side. Stay tuned.
We have never seen Jamshedji Tata, Dorab Tata. People who knew about or written about them, they were very simple men of integrity. But in my life, I met him, this man of integrity, simplicity, care for others, compassionate, always care for others. I don't think in my experience, I met anyone like him. And it's hard to get someone like him. May I only pray, may his soul rest in peace. He was a legend, there was an era, it was the end of an era for me.
बहुत ही संवेदनशील व्यक्तित्व थे। जीवन भर उन्होंने टाटा ग्रुप को तो बड़ा बनाया ही, टाटा ग्रुप को अंतर्राष्ट्रीय पटल पर एक अलग ही पहचान बनाई, भारत की पहचान बनाई विश्व में, अपने ग्रुप को विश्व भर में बढ़ाकर। लेकिन साथ ही साथ उनके जो दानवीर चरित्र था, हर प्रकार से, हर किस्म से, हर अच्छे काम के लिए वो तत्पर रहते थे। कभी ऐसा कोई व्यक्ति नहीं होगा जिसने कोई उनसे अच्छे काम के लिए मदद मांगी हो और उन्होंने ना किया हो।
भारत का कोहिनूर रहा नहीं, हमसे बिछड़ गया है, ऐसा मैं कहूँगा। और रतन टाटा जी हमारे में नहीं रहे, ये बहुत ही वेदनादायी दुखद घटना है हमारे लिए, पूरे देश के लिए। पूरे देश का एक अभिमान था, हमारे महाराष्ट्र का भी अभिमान था। लाखों लोगों को उन्होंने उद्योजक बनाया, उनकी इंडस्ट्री बहुत पुरानी है।
Welcome back. Well, look at the bottom of your screen. Actually, you have Concor's numbers that have come in there. And for the first half of the year, actually, they're trailing what they've guided for. So Concord in the first half of the year, well, the growth in the EXIM business is only around 3.5%. They were guiding for 15%. So that's a miss. They're lagging on that front. On the domestic business as well, the growth is close to around 14%, but they were guiding for 25%. And on an overall basis, they've just done 6% in the first half of the year. The tall expectation that they laid out was 18 to 20%. So they'll have to do something phenomenal in the second half of trade to actually go ahead and achieve these numbers. But for the time being, Concord is the one that actually is lagging in comparison to what they themselves have been guiding for, much lower than what they had guided for. So we'll see how that goes. But let's address the news piece on your screen. You heard it first. Now it's official. Sudarshan Chemicals all set to acquire a business overseas. Vivek joins us to fill us in with those details. Vivek, congratulations. You hit the nail on the head. Tell us more about it.
Well, Nigel, that's right. So earlier we had informed you about how Sudarshan Chemicals, the Indian chemical player, was actually going to go ahead and look to acquire a larger listed entity as far as the European operations, or a global major as far as the pigment segment was concerned. And along expected lines, just some time ago, the news has hit the exchanges that Sudarshan Chemicals, the subsidiary of the company, will be acquiring the global pigment business operations of Hubach Group of Germany. This particular acquisition has actually been done from the insolvency resolution. Remember, the Hubach Group had actually filed for bankruptcy or insolvency, and the bid of Sudarshan was actually the best bid as per the insolvency, on the back of which they have received this particular, portion of the business of the Hubach Group. What is it that they are paying? The Hubach Group overall total revenues was, FY21, FY22 was over 1 billion euros, but that is of the entire operations of the group. For only the pigment business of this particular entity, Sudarshan Chemicals is paying close to 127.5 million euros, which works out to 1,180 crore rupees. So it does appear to be quite an attractive, acquisition in terms of valuation. But again, we'll have to wait and watch by, in case the company does hold an analyst call to get further details on the kind of valuations that they've actually paid to acquire this particular asset. What is it that the company, the combined entity, will have? They will have a comprehensive pigment portfolio of high quality products and a strong presence and they will have presence both in Europe as well as Americas. Company says that there will be 19 sites globally through which they will actually be getting access. When you're talking about the Hubach Group, 1 billion euros, like we mentioned, in FY21 and FY22, and they are present across Europe, Americas, as well as the Asia Pacific region. The main news is that, Sudarshan Chemicals actually goes ahead and increases capacity as well as presence quite significantly in the pigment business, and that, it'll be something very interesting to track going forward, how exactly they can go around and turn around this particular asset.
I mean, that is a rocketing Starship kind of move on the stock. 18% now. So just Vivek, what are annual revenues for Sudarshan right now, and the pigment business, what are the revenues annual?
Sudarshan business, the annual revenue, FY24 was close to 2,540 crore, and they did a PAT of a little over 350 crore. Hubach Colorants India, that will be the other stock in focus that we need to keep an eye out for. That is a listed entity within India, the owner of whom is actually the Hubach Group, the global listed entity. So over there too, there could be some changes as far as the ownership is concerned, and there could be an open offer too that gets triggered over there. Hubach Colorants is the one that we're talking about. Talking about the exact breakup of, Sudarshan Chemicals, the colorants business, don't have it exactly. We'll just look for that particular one. Hubac Colorants India, they had annual revenues FY24 of 791 crore, profitability of around 40 crore. So again, it's a significant development. We'll wait and see, what the company says in terms of the analyst takeaways. What is the kind of acquisition what is the kind of valuation that they've paid for this particular acquisition?
And this Colorants company is the pigments business, but they're acquiring the entire pigments business of the Hubac group, right?
That's right.
Not just this.
Global pigment business of Hubac Colorants.
Yeah.
That's right.
Okay.
And Vivek, sorry, just to come back to the point on total, I think you said 1 billion euro is the total revenue of the Hubac group. And what is the size of the pigments business, which is what Sudarshan is acquiring?
Well, that is the gray area, and that's what we need to find out for, because $127 million, close to 1,000 crore, they are paying, for the business, but the breakup is not given as far as the Hubac Colorants business is concerned. But we do understand that, it's the majority portion as far as Hubac Colorants is concerned. The total global revenues, which is what, again, we had highlighted earlier, the total global operations, FY21, FY22, had turnover in excess of 1 billion euros. So we'll wait and watch by, in case there are more details that do come in, or in case there's an analyst meet, etc., that is held, so that we get more details on that front.
20% now, by the way, on the stock. So, Sudarshan, I remember there were some notes, etc. as well. Did we have an estimate of what they could likely pay? They're paying just under 1,200 crores. So, is this in line with what was put out, or was there a number in the first place?
Well, there wasn't a number because it was a closed bid. We understand that they had given to the insolvency, resolutions. But we do understand, given the fact that there aren't too many players in this particular space, we understand that the competition was limited. And we also understand that there were very few bids that had received. And Sudarshan had emerged as the highest bidder. And, the bid was quite aggressive compared to, the other bids that Hubac, the insolvency resolution professional of Hubac had received.
Okay, all right. So Vivek, we're lovely to get a that's great information. We'll try and get an analyst as well to talk to us about this, but that's the story. Volumes have also exploded. I mean, so the move has come on the back of sharp volumes. It's limit up on Sudarshan Chemicals. That's a very large one coming through. 15 lakh shares now, almost on that one. And of course, 10 lakh shares on Hubac Colorants, the India subsidiary. Weber Sangvi is with us, CEO at Ask Hedge Solutions. Weber, good to have you with us here. I know we don't talk stocks, but Sudarshan Chemicals, it's not a stock we talk about every day, but they're a leader in the pigments business. Have you looked at this at all ever, or any thoughts, if you have any?
No, unfortunately, Prashant, I think we don't track it closely on this name, so I will pass on in terms of the comments.
Okay, let's talk about metals then as a sector. So markets are fixating on this meeting tomorrow in China. Do you think anything will come out of it? And there's money to be made here next week.
Yeah, of course. I think what we've seen, Prashant, from a sentiment perspective is on the earlier kind of stimulus leg, we've seen some sizable rally from a metal pack. Partly kind of factoring in that the momentum on this sector will kind of continue. And of course, the street is looking forward to the event over the weekend. While in my experience, we've always seen that when there is when people are looking on a particular event in a very eagerly manner, then large part of that discounting, is generally done ahead of that event. So in this case, while we will wait for what actually comes out of that meeting, but my sense is basically the structural parameters in terms of the Chinese economy at this point in time aren't changing, much. We will have to wait whether the real estate sector kind of recovers. And one thing which is unlikely to kind of recover at all is basically the demographic profile, of China, which in my view is slowly and steadily going towards the Japan way, over a longer period of time, which I do feel that on a structural basis can kind of see growth, which can be pretty subdued.
Okay, all right. Got that. Vaibhav, hi, good afternoon. Good to have you on. So that's metals. Let's talk about IT as well. That's the other side of the market that's gotten a fair amount of attention and money, right, in the last couple of weeks and months, as has been a bit of a churn across portfolios. The season has just started, and maybe TCS was a bit of an outlier. But what's your stance? Have you been allocating more money here? What do you like? What are you staying away from?
See, Subi, I think in all our previous interactions also, right, in the last 2 quarters, we've always maintained that, IT is a sector which was kind of getting bottomed out, where incrementally we had seen commentary kind of changing. At the same time, we are seeing some amount of green shoots, from BFSI, while the generative AI, not posing an incremental threat. In fact, it was going to give you opportunities from a revenue accretion as well. Now, having said that, what we've seen in the last 2 quarters is basically the price is actually rallying by about 15 to 20% easily. At the end of it, it's kind of outperformed the Nifty as well, which is we are at a point where the expenses, the valuations are, slightly rich. But also on the consideration that, for the first 2 quarters of a financial year, you always see generally that the results are pretty good. And the subsequent 2 quarters are generally weak because then would be the season of furloughs as well. So we are at a point where we've already rallied. The commentary on the underlying business is unlikely to change in a big way. It is where we are turning, where we were very, very bullish on that sector to kind of neutralish, at this point in time. So we will have a stock-specific opportunity out there, but from an overall sectoral basis, we are not, very, very excited.
Hi, Vaibhav. Good afternoon, and good to see you win. What about the telecom space? Everyone thought in the middle that, Vodafone Idea is going to be the big unlocker. Well, the stock is half from the recent peak. Bharti Airtel, though, that's still holding steady. While the other play we have is Reliance Industries has been under some pressure. Among the three, how do you play the telecom theme?
See, and Nigel, I think from a telecom perspective, the government vision is very clear that they don't want two-player market in that sense, right? So we'll continue to see, three-player market or more from a telecom perspective. While that competition is kind of healthy, what we also need to understand from a larger opportunity perspective is that from business standpoint, I think there is a tremendous amount of opportunity going forward. Of course, these valuation bits and pieces will start to look expensive in between. But I think from a longer term perspective, at any decline, I think this is a sector where, to look at. And I would rather prefer to go in for a pure play telecom rather than a conglomerate in that sense. So that is how our preference, would be, while the sector view on overall long-term perspective remains bullish.
What about banks? What have you made so far of the kind of banking updates that we've got? There is also a lot of management churn taking place. How would you position yourself in the financial space and even in the non-lenders like wealth management, asset management?
I think we are, we are looking in, very, very optimistically on the financial services, which you mentioned about wealth managers, asset managers, and likes of those. We do think that they are in a structural bull run for a longer period of time as we see our demographic profile kind of play out in terms of their business tailwinds. Having said that, from a banking sector perspective, which actually garners the larger weightage in terms of the Nifty, we do think that from a profitability perspective, we may see kind of downgrade in terms of our estimates, both from a public and a private sector perspective. Having said that, our preference towards private sector would be there, purely because if you see from a last 3-year perspective, on an average, good private banks, which were trading close to about 3 times price to book multiples, are now sub 2. Whereas PSU banks have rallied from about 0.5, 0.6 times to from 1 to 1.1 time kind of price to book. So the valuation between them is compressed. And incrementally, when we see there is some amount of asset quality pressure coming out from personal loan segment, MFI segment, my sense is basically that, private banks is a segment we would want to look at. Having said that, we still do feel that on a banking perspective, as a sector's perspective, we would be neutralish. So there is play within the sector in a bank side, but financial services is something which we are bullish from a structural standpoint.
Thanks, Vaibhav, for joining in and giving us your take on the markets as well as individual stocks. Wishing you a good evening, and we look forward to chatting up with you in a couple of weeks or so. By the way, Prashant, just one point I wanted to make on Nalco. The reason that the stock is up close to around 5% is because the only play in the alumina vertical. you know, you have aluminium plays, whether you're looking at Hindalco or even Vedanta. But as we had the management, Mr. Patra, who spoke to us a couple of sessions ago, he said that alumina prices are at $600 per ton. And aluminium prices are roughly around $2,500 per ton. Normally, the ratio is around 16-17%, you know, the alumina to aluminium prices. But right now, it's around 23 to 24%, and they believe it will sustain. So because of the big move we are seeing on alumina, in the near term, we could see that Nalco could outperform some of its peers because the way alumina prices have moved up, there's a deficit globally which is supporting prices. That's why it's at around 22 to around 24% as a percentage of aluminium. That's about Nalco, explains why the stock is moving up. But Nimesh is with us. Nimesh, Friday afternoon, almost done with the week. What are you picking up in D-Street chatter?
Well, being a Friday, no complaints because the broader markets have done well. Yeah. So in a way, the portfolio should have been better for today. But from a flow perspective, the one feedback is at least the intensity of selling has lowered down clearly. And that's showing up in the numbers as well, right? What we saw last week, an average of 10,000 crores of selling, that has now come down to almost 4,000 crores and getting equally matched by the DIs. Look at the kind of SIP number we saw yesterday as well. So that momentum is clearly there from a domestic flow perspective, even from these levels. I guess from a sector point of view, Pharma stood out today. Actually, it got oversold yesterday on the back of that US news, and there were confirmations that it's not a big impact for the Indian companies, hence we have seen a bit of a pullback there. And even technology has been relatively outperforming. And within technology, the feedback is, if you look at the TCS numbers, what stood out for a lot of analysts was the fact that the BFSI vertical did well, right? And in that sense, the persistence, the L&T, Mindtrees and emphasis, they are the ones who should do well. And that's the reason why you're seeing a bit of outperformance on those names today. But I guess from a market point of view, the big event to watch will be the China meeting over the weekend, and that stimulus announcement is going to be quite significant. The way I read is, if it's a very large stimulus, positive for metals, but negative overall from a flow perspective for India. But if the stimulus is quite small, then you'll see a bit of sell-off in the metal names, but the flow will move back to India. So that's the way one should approach markets on Monday. But clearly, that's a big trigger to watch out for. But from a flow perspective, as I said, you know, the intensity has clearly been lowered in the last couple of days, matched by DI buying.
All right, so we'll wait by over the weekend. All eyes will be on China, but individual stocks, what are you picking up?
Also, in terms of individual names, the first stock is Electra Greentrek. After a long time, some bit of interest is back in that particular name. The stock is buzzing in trade. The volumes are on the higher side. I understand some HNI investors are quite active buyers as well. And also, the street is anticipating some new order wins for the company very soon. But, you know, for Electra Greentrek, apart from order win, I think the execution, which is expected from the third quarter, that's going to be a big trigger for the stock from here on. So that's the first stock. The second name is Gujarat Ambuja Exports. Been flat for the last many months now. I understand one of the leading PMS was an active seller in the last couple of weeks. That's largely getting over now, and some domestic mutual funds have bought as well in the last few days. So that's Gujarat Ambuja Exports. The third name is DLF. The mid-cap real estate have done well today, but DLF is on the negative side, largely in back of sell flows. So expect high delivery volumes, and on the sell side from larger FIs in DLF. And the last is Crompton Consumer. So the stock is under pressure today, but again, I understand the flows are quite strong. There is buying interest from some long-only funds in Crompton Consumers, and expect high delivery volumes on the buy side in today's market today.
Okay, Nimesh, thank you very much for that. We'll get into a break. We'll come back and get you a few BTST calls. Last day of the week, so we'll prep you up for the last 15 minutes.
से टाटा कंपनी के वो सर्वे सर्वा थे, और आज मैं यही कहूँगा कि उनको देखकर लोगों में ऊर्जा आती थी, प्रेरणा आती थी, और वो हमारे महाराष्ट्र और हमारे भारत देश का अभिमान है, स्वाभिमान है। उन्हें हमारे सरकार ने उद्योग रत्न पुरस्कार, उनको कई पुरस्कार मिले, पद्मश्री, पद्म विभूषण, और जो भी पुरस्कार उन्हें मिले, उनको देने से उस पुरस्कार की ऊंचाई बढ़ गई। ऐसे उनका कर्तृत्व था। मैं उनको महाराष्ट्र सरकार की ओर से और महाराष्ट्र की तमाम 12.5 करोड़ जनता की ओर से भावभीनी श्रद्धांजलि अर्पित करता हूँ। उनका आदर्श लेकर आगे बढ़ना, उनके आदर्शों पे चलना, यही उनके लिए सच्ची श्रद्धांजलि साबित हो सकती है।
रतन टाटा जी ये एक बहुत ही सफल उद्योगपति तो थे ही, लेकिन उससे भी बड़े व्यक्ति के रूप में हम उनको देखते हैं, क्योंकि जिस प्रकार से उन्होंने देश के लिए और समाज के लिए काम किया है, उन्होंने केवल सफल उद्योग नहीं खड़े किए, एक विश्वासार्हता खड़ी की, एक ऐसा ब्रांड खड़ा किया जिसने हमारे देश को एक ग्लोबल इमेज दी, और उसके साथ साथ अपनी संपत्ति को टाटा ट्रस्ट में विलीन करते हुए उन्होंने इस विश्वस्त व्यवस्था से, ट्रस्ट से जिस प्रकार के फिलेंथ्रोपिक काम उन्होंने किए हैं, चाहे वो शिक्षा के क्षेत्र में हो, चिकित्सा के क्षेत्र में हो, रिसर्च के क्षेत्र में हो, बुनियादी क्षेत्र में हो, समाज और देश के उपयोगी जो कार्य उन्होंने टाटा ट्रस्ट के माध्यम से किए हैं, मैं ऐसा मानता हूं कि जितने महत्वपूर्ण उनके उद्योग है उतने महत्वपूर्ण ये कार्य भी है। इसीलिए एक बहुत बड़े मन का व्यक्ति आज हमारे बीच से चला गया है, देश के लिए ये बहुत बड़ा नुकसान है।
Welcome back. So looking at about a 30-point cut on the Nifty as we are winding down with the mid-cap index still retailing some green. Mitesh is with us. Mitesh, so before we say goodbye for the weekend, final thoughts on the week, the day, and of course the final ideas as well.
Yeah. So I think, a couple of names come on the track. RBL Bank along with Bandhan is, I think, seeing good traction. So BTST can be attempted with a very tight stop at 202.5. And look for a target of 208, 209 for Monday. And the bigger one, the larger bank, State Bank of India, is also trying to recover. That's a BTST with a stop at 794 for targets of 810.
Much for that. Trent is likely going to be the top Nifty gainer for the day with a 2.5% rally after Noel Tata was appointed as the chairman of Tata Trust. Remember, he's the chairman of Trent. So Trent, in fact, is, I think, the best performing stock for the week also with a 12% gain. And plus, there was that entry into lab-grown diamonds, beauty, personal care. So lots of news flow for Trent this week. But talking about the September life insurance data, now that's shown a 14% increase in premiums. Yash joins in to give us a lowdown on that data. Yash.
Rima, it's been a strong month for life insurance companies, that is the month of September. And with closing September on a high note, the life insurance companies have ended Q2 also on a very strong note. If I speak about the industry in the month of September has grown its premium by about 14%. For the first half, that means the industry has grown at a premium growth of about 19%. Private life insurance companies have played an equally strong role. September premium growing at 16%, first half growing at 12%, September total annualized premium equivalent or APE growing at 27%, retail APE growing at 28%. Now let's speak about the individual listed companies. HDFC Life for the month of September, it was a strong growth, but over a modest base which it had. So the total premium that grew at 9%. First half premium has grown at 12%. Total APE in the month of September has grown at 23%. Retail APE growing at 25%. ICICI Prudential Life Insurance, it's a strong growth, but one needs to be mindful of the fact that it had a favorable base. So total premium growing at 21%, first half premium growing at 17%, total annualized premium equivalent growing at 34%. Retail APE, that has seen a growth of 33%. Max Life Insurance, that's been a very strong growth story over the last few months. It has seen a strong growth in the month of September over a strong base which it was facing. Total premium growing at 29%, first half premium growing at 19%, total APE seeing a growth of 38%, retail APE also seeing a growth of 38%. SBI Life Insurance had a strong base to grow on, hence the growth has become weak in the last few months. Total premium growing at just about 5%, first half premium seeing a contraction of 3%, total AP is flat for the month of September, retail AP has grown by 9%. LIC, it's a strong growth in the month of September for LIC, but over a weak base or over a favorable base. Total premium has grown at 12%, first half premium growing at 25%, total AP has grown at 19%, and importantly, retail AP for LIC in the month of September has grown at 48%.
Okay, all right. Yash, thanks very much for that. We will take a break on that note, come back on the other side with some final ideas for the market.
ग्लोबल इकोनॉमी का फ्यूचर भारत से जुड़ा हुआ है। भारत की ये आर्थिक प्रगति नए अवसरों को लेकर आ रही है। आज महाराष्ट्र को 10 मेडिकल कॉलेज की सौगात मिल रही है। नागपुर एयरपोर्ट के आधुनिकीकरण और विस्तार का काम, शिरडी एयरपोर्ट के लिए एक टर्मिनल बिल्डिंग का निर्माण, आज इंफ्रास्ट्रक्चर से जुड़े इन दो अहम प्रोजेक्ट्स का शिलान्यास भी हुआ है। मैं इन सभी विकास कार्यों के लिए महाराष्ट्र के लोगों को बहुत बहुत बधाई देता हूं।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinion.
Welcome back. Gurmeet Chadha, Managing Partner, CIO at Complete Circle, is now with us on the show. Gurmeet, wanted to get your quick thoughts on Sudarshan Chemicals. Made a big acquisition, spending more than 1,000 crore rupees to acquire a global company. Stock has skyrocketed 15%.
Yeah, the market impressed with the capital allocation they have done, and it's one of the few chemical companies which have actually not done that badly in the bad cycle. There is also others. So, for example, SRF has done big capex in the last 2 years. Deepak Nitrite, for example, has done a lot of backward integration. So maybe in a quarter from now, if China's stimulus comes through, inventory restocking has happened, this could be some bit of a counter-cyclical trade.
By the way, Huback Colorant, the other stock that Vivek was telling us, had moved up 7%, but now is down nearly 5%. So there's been a sudden sharp downturn in Huback Colorant. That stock will also come up for you on your screen. So Bandhan Bank in one day has suddenly re-rated close to about 11-12% post the appointment. Is there more juice left in Bandhan Bank?
I think a big overhang gone. I think that's why market was rejoicing. And we saw that with Federal Bank when Mr. Manian was appointed. It moved up from 150, 60 levels to 180, 190. Leadership makes a big difference. We've seen that with ICICI Bank. We are positioned on Federal Bank, RBL Bank, and some of the PSU banks. PSU banks in particular, Bank of Baroda, very good quarterly update. Advances grew almost 20% YOY, 6% quarter on quarter. Deposits grew almost 5% quarter on quarter. And the mix has improved. Plus, there will be a lot of treasury gains, with 10-year yield dropping 20-30 basis points this quarter, and trades at about 0.8 book. So selectively getting positioned in some select PSU banks as well.
Look at BSC, there's the other name. Just a quick word though on Sudarshan, as you were talking about earlier. I noticed that Sudarshan has added about 1,400, at 20% higher, it added about 1,400 crores in market cap. And they're paying 1,200 crores for the acquisition, right?
And their market cap now is 8,000 crore rupees after adding on 1,400 crore.
Yeah. But the circuit is broken. It was up 20 now, it's up 14-15% or so. So on your screen. So, Gurmeet, any thoughts on BSC? It's a big move. It was tentative at the beginning when we started, but it's gone 4,500 plus now.
I mean, gravity-defying move. I think both BSC and Trent, for example, I think we probably missed out. We booked our gains a little earlier, but it's got to do with the weekly contracts. NSE actually had 4 weekly expiries. BSC had 2. So it's a bit of a relative trade happening there. And so continue to be constructive there. We are building on CDSL, CAMS, a couple of broking names also if we get a little more dips. This story is very structural, Prashant. We are already at 24,500 on the SIP book as well. I think this is a buy it, fill it, shut it kind of a capital market play in general.
Gurmeet, we'll have to leave the conversation here. Thank you for joining in. Counting down to the close. Very, very flat on the Nifty and the Sensex. In fact, this whole week, Monday was a down day. Tuesday, we recovered all the Monday losses. And Wednesday, Thursday, Friday, markets have largely been sideways. And by the close of trade, I think for the week, the Nifty would have been on the flattish side. I think it's the mid-cap index which would have given you a return on a week-to-date basis. So week-to-date, the Nifty is indeed just down close to about 0.2%. The Nifty Bank came under pressure today, so that was down nearly 0.7%. Metals had a good day. Hindalco, JSW Steel higher. All eyes on the China stimulus tomorrow. There is a press briefing by the Finance Ministry. Trent goes home as the top Nifty gainer for the day and the week. This is the week when Ratan Tata also, there was a sad demise, and Noel Tata today was announced as the chairperson of Tata Trust. So Trent got a bit of a fillip. TCS disappointed the street in terms of its numbers. The stock ended as the top Nifty loser, 2% lower on TCS, but the rest of the IT pack, which report numbers later next week, with HCL Tech leading from the front, and even the rupee depreciation to 84 against the dollar, also on the sidelines, would have aided the IT stocks. The mid-cap index closes with a gain of nearly about 0.5%. The advanced decline ratio mildly in favor of the gaining side. Well, with that, it's a wrap on Closing Bell. Thank you very much for watching, but don't go anywhere. Editors Roundtable comes up next.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming
Hello and welcome to Editors Roundtable. The Sensex and the Nifty ended in the red for the week. The mid-caps outperformed large caps by rising a little over 1% on Editors Roundtable. Today, we will take a look at the key expectations from earnings in the second quarter. We also do a deep dive into the key triggers for the two Tata companies, Trent and Titan. Apart from this, we will bring you an analysis on all the major expectations from the upcoming Ministry of Finance meet in China. I'm Surabhi Upadhyay, and with me are Nimesh, Prashant and Nigel. So folks, quiet day in terms of price action for the markets. Nifty's not changed much, but a huge week in terms of news from one of the biggest business conglomerates, one of the biggest business houses and families in the country.
Absolutely, and I think we've talked about this. I mean, it just, one day you're there, one day you're not there, and but the outpouring and the love and the sort of tributes which came through, and I was talking with Anuj, I think, the other day, I was saying, well, I don't think any other business leader will get this kind of the tributes which poured in, more than his business acumen and what he did for the group, which I think is tremendous, just as a human being. And I think more of the commentary and the tributes were focused on this particular aspect.
It's more about human aspect, the philanthropy of that man, right? That's something which stood out for a lot of people, that the way the group and he himself was so much into philanthropy and inspired so many young and new generation entrepreneurs to go into that field of being a bit entrepreneur, being a bit philanthropy as well. So I think that was a big hallmark of that particular man, that he actually taught India Inc. and a lot of corporates to look at philanthropy in a big way.
Well, society over profitability, that's something that he stood for as well. And he was very, very keen to take India to the globe. And, he marked India's ascension into the globe. And in certain ways, that ascension over, even over Britain. So business, well, a lot of debate with regard to the moves that were made, but the vision was clear. Take India to the globe and society over any kind of profitability. Human capital was something that he really preserved.
No, absolutely. And I'd say that, I mean, in personal experiences, while we talk about businesses and business leaders all the time, but a lot of friends and family, I've never seen before people talking about a business icon in such an emotional way. And we saw those scenes, the outpouring on the streets of the city as well. Exceptional person, a legend, and a life very well lived. And by the end of the week, we had the announcement also coming in, and now we know that it is Mr. Noel Tata who takes on the baton. And it was very interesting, like Shireen was pointing out, that this was, the trustees felt that this is what Mr. Ratan Tata would have wanted. You know, pick it up and move on, move ahead, and sort of keep the business going.
You know, I'll tell you, Surabhi, just to pick up on Nigel's point, just to go back to Mr. Tata, the point that he took India global.
Yeah.
I remember when the Chorus acquisition was made. I remember being sort of on air when it happened. You know, now because, you know, so many Indian companies do foreign acquisitions all the time. It's not a big deal. But back in 2003, 4, 5, I mean, it was a big deal, and it was billions of dollars, and it was a iconic brand. I mean, so it was a different time and place, and so in that sense, absolutely, he is the one who really opened the gates.
Absolutely. You know, unleash the animal spirit, so to speak. The phrase was coined later, but I think that was the moment when those animal spirits of India, its ambition, were actually, you know, out there. So we'll, of course, talk about this. We'll talk about two Tata Group companies as well. Nigel's looked at a very interesting analysis between two of the major constituents on the Nifty. But before we get to that, just a quick summary of what the week was like on the street. So very quiet, like I said. Not too much changing on the indices. And if you thought that there'll be a big rebound in the Indian market this week, well, the bulls had to be disappointed. And three key reasons behind that. Number one, the China question remains unanswered. And we're walking into another weekend of uncertainty, not knowing if we'll indeed get this big bazooka stimulus. And Prashant will talk about that as we go forward. Number two, the uncertainty around earnings. The season is just about kicking off, and this is the first time in many, many quarters that we're going in with very subdued expectations. So are earnings really slowing down? Are more downgrades coming? That's another big question for the market as we sort of got through the week. And the third point is that oil prices are still very volatile. No one knows what Israel is going to be up to next, because by the time we were ending the week, Brent had again moved back to 79 to the dollar. So if you look at the tally, the Nifty is down about 0.2%. Mid caps and small caps have done much better. They're up about, a little over 1% each. In terms of sectors, defensives like pharma and IT, that's where the money was going. And, FMCG was surprisingly down, a big loser this week, down about 2% on the FMCG index. Metals, the China trade was sort of unwinding, so to speak, so lots of selling on metal counters, energy, commodities, so to speak. And PSUs, PSU banks, overall PSUs, as well as the Nifty Bank itself, by the way, didn't really fight for the bull's cause. So that, in a nutshell, is a summary of the week.
Well, let's actually throw it to our guest who's now joining us, right? We have Harish Bihani, Senior Fund Manager at Kotak Mutual Fund, now joining us. Harish, good to have you with us here. Thank you very much for your time. Just the overall sense first, Harish, is this largely still a risk-on kind of an environment? Because there were doubts which were seeded in the minds of many, not this week, but the previous week, when there was a lot of FI selling. When you get a week worth of $5 billion of selling, you start to doubt whether this is it. This is the one which will now finally lead us into a period of consolidation, sideways move. The globe, though, incrementally at the margin looks pretty solid, and no particular problems here in India as well, except maybe valuations. So just wanted to start there. Go on, Harish.
Sure. Hi, Prashant. So I agree with you that, given the current macro construct, we are in a long-term business upcycle. There's no question about that. Within that, there's an intermittent slowdown today. And to think about this, just reflect back on the past. If you look at the period post-COVID, what happened is that the private sector capex picked up. You had the public sector capex, which also picked up significantly post-COVID. Exports also picked up because of all the global supply chain issues, and overseas companies were building up inventory. So exports also picked up in a significant way. And the top 15 to 20% of India consumed significantly post-COVID. There was a revenge consumption that happened. So if you think about the public sector capex, the consumption and the exports, in the first 6 months of this particular year, these parts have slowed down. Now, is this a permanent slowdown or an intermittent slowdown? To us, looks like an intermittent slowdown. We should see an uptick, given especially in the second half. And with that, given how earnings will shape up incrementally, so first half, especially second quarter, let's not expect a significant earnings uptick. Even the upgrade to downgrade ratio, there'll be more downgrade versus an upgrade. Not a cause of worry, given that consumption, exports, public sector capex should pick up in the second half, and private sector capex, as we all understand, is on a long-term uptrend, and that should continue to move up. In that, there's this big part, another big part which I missed, is the entire real estate capex. The real estate capex picked up significantly post-COVID. That has once again kind of taken a breather in the first half of this particular year. But given the pipeline of launches, given the pipeline of land acquisition that will happen in the second half, once again, you'll start seeing an earnings uptick. So no cause of worry, more of an intermittent slowdown.
All right, well, Harish, we'll come back to you, but the market, we'll have to also look at earnings, right? Because we're going into it in full flow now. TCS reported, and it's been a bit of a disappointment. And it's not as if the earnings season is expectations are high. Actually, it's a low expectation quarter. Nimesh, you've looked at all the preview notes.
Yes, Prashant. So it's a low expected quarter, but it's going to be a multi-quarter low in terms of earnings in quarter two. So that's the headline. In terms of revenue growth or maybe the net income growth, it's just going to be 2% YOY. Most of the brokerages have cut the EPS estimates for FY25 and FY26 by 4% and 3.5%. So that's a consensus from a brokerage point of view. I guess apart from the earnings, the festive season demand and the commentary around that would be very critical for a lot of sectors and companies in quarter two. So that's the overall picture. Now coming to the individual sectors, first is autos. A strong growth, revenue growth of 5% and EBITDA margins to improve by 60 basis points. So autos could be a sweet spot as far as earnings are concerned. Banks, that's going to be a big sector, right? Expectedly, muted PAT growth, even there is going to be a NIM decline of 10 to 20 basis points, but looks like it's priced in. For NBFCs, again, the disbursement and margins are going to be under pressure, but within the financials, it's going to be the MFIs which are going to have a big impact, and that's what need to be seen as to how MFIs report in quarter two. Within the consumer apparels, the leader has been Trent, and looks like that momentum is going to continue. Street is anticipating a 56% top line growth YOY for Trent even in quarter two. So that's a stock to watch from an earning perspective. Within the consumer staples, the street is anticipating a bit of uptick in the value growth across most companies. Even there's going to be and that's going to be largely led by pricing. But in that, watch out for Pidilite. That's likely to outperform all the other peers within the consumer staple names. The other big sector is going to be oil and gas. A lot of stocks have been buzzing around that, but from an earnings point of view, ONGC is expected to be weak. Oil India, you'll see a 4 to 5% increase in terms of volumes, but it's the downstream companies which are going to see an EBITDA impact or down of 40 to 50% on a YOY because of high base. So that's going to be having an impact on the OMCs. The other big sector is going to be specialty chemicals. Every quarter the hope is that there will be a revival, but even in quarter two the expectation is going to be quite muted. The demand is just not yet picked up, but the key in the specialty chemicals would be whether there is a further guidance cut by the companies for FY25. We already seen few companies like Aarti cutting down the guidance for full year. So that's guidance in the specialty chemicals is going to be the key. I was looking at a Citi report and they put out some interesting names which are going to be having a positive and negative surprises. According to the Citi note, in terms of positive surprises, watch out for Maruti, a very good number. The mix is going to have an impact on the margins positively. Trent we spoke about. Bank of Baroda within the PSUs, again against the consensus, Bob is expected to report very strong quarter this time around. HDFC AMC is a stock to watch within the financial stock. So again, is expected to have a very strong quarter in Q2 for HDFC AMC. And within the consumption names, Britannia is something which Citi expects will surprise positively as far as Q2 is concerned. In terms of negative surprises in quarter two, individual names, Apollo Tyres is something which Citi believes high cost pressures are going to have an impact on the margins for Apollo Tyres. Titan is likely to disappoint within the consumption names there. Honasa is another name which Citi believes can disappoint because the trade channels lead to is indicating that the demand has been quite weak there. And the last is Sri Cement. Within the cement names, overall cement is expected to be weak, but Sri Cement expect a weaker EBITDA per ton on as far as volumes and price weaknesses. So these are the few surprises, both positive and negative. But the headline number,
right?
I haven't taken.
Because Infi last quarter, if you remember, was the big positive surprise.
Yeah.
And stock moved up 7-8%. And this
But
time,
you know,
Rima
again,
was telling us.
I didn't took IT simply because we've done extensively. Rima spoke about it last week. And for Infosys, apart from earnings, it's the guidance up.
So Rima was telling us that analysts are expecting them to up their guidance.
Exactly.
That's
a hope.
supposed to be better than TCS.
And the strength in the counter is actually visible. It's just 1% away from 52-week high, and also the valuation gap at TCS has totally narrowed. You know, so the screen is telling you that the street is sensing something. Now they'll have to deliver.
There's a build-up, exactly. In fact, speaking of expectation versus delivery, Harish, come in on this. We haven't seen a quarter of a single-digit earnings growth in a while now. But to be fair, I mean, to argue, the market's also cooled off. I mean, from the high of 26,200, now we're at sub 25,000. So is this already priced in? Or if the earnings are as pedestrian as, mid-single digit, does the market have to correct more to match that reality?
Right. So as stated that this will be an intermittent slowdown, there will be concerns which will emerge because of this slowdown that we will see in the second quarter of this particular fiscal year. But please recall that the third quarter is where there's a festive season, there's this wedding season where consumption should ideally pick up. Third quarter and fourth quarter is typically where government capex is higher. On average, 60% of the capex or the incremental sales for a lot of government-led companies comes in the second half of a particular fiscal year. So a lot of things will, and real estate is another significant part of capex that should start seeing an uptick in the second half of this particular year. So for a buyer of long-term equity like us, a second quarter which should be okayish, but where the downgrades will be higher versus an upgrades, should ideally give us an opportunity waiting for such a quarter.
So you would buy the dip in that sense?
We have our long list of names and we are hoping that those stocks correct because of intermittent slowdown, and we'll certainly be buyers in those specific names.
Speaking of stocks, one of the names that Nimesh mentioned, which will probably disappoint, is Titan. And I know that we've got Nigel who's been looking at the differential between the way Titan is performing and the way Trent is just breaking through the, all kinds of ceilings, right?
Well, that's right. I want to focus on the biggest winner and the biggest loser from the Nifty pack in this week itself. So let's go across and let's tell you. Well, the street seems that Titan had got into saris. Well, that was diversification. But Trent getting into lab-grown diamonds, they fear that there is cannibalization that could take place out there. Just looking at the screen, it appears the street would have preferred actually that Titan went the Senco way and launched lab-grown diamonds under the Titan brand itself. So they went ahead, they've launched the brand name, which is known as POM, in the West Side stores, and that was the big headline for the week. The bigger positive those for the industry, because suddenly you have a big conglomerate coming in there, throwing its hat in there, and also creating awareness about lab-grown diamonds. To give you a few details about the industry first, global size of the diamond industry is close to around $80 billion. Out of that, you have lab-grown that's close to around 20% of the effective market. In India, lab-grown diamonds are growing at around 15 to around 20%. You'll say, what about pricing? The price difference between a lab-grown diamond as well as a natural diamond could be anything between 60 to around 80%, I understand. So a lab-grown diamond is far cheaper in comparison to a natural diamond. But there are some perceived risk. I'm terming it as perceived risk because there are a couple of things that are not very, very clear. One factor was lab-grown diamonds, well, they corrected by close to 50% from the peak. So everyone was getting a little bit nervous. But natural diamonds also corrected close to around 30% from the recent peak. The other big question is, being Indian, you want to know what is the resale value. But maybe the counter argument is those that are buying diamonds are not really interested in the resale value. So there are a couple of question marks with regard to that. But those are perceived risks. However, we had a voice that joined us on the channel from Limelight, Pooja Madhavan. She said that price correction, well, it was not at the retail level. It was at the wholesale level. She also went on to clarify that actually there was not lack of demand. There was rationalization of profits, and that's why lab-grown prices had fallen down. But let's go to both these two stocks and what Kotak had to say. Kotak says with regard to Trent that they have the potential to pioneer the broad-based adoption of lab-grown jewelry here in India. So that could be a big driver out there. And they're saying that they can see accelerated growth in the next 1 to around 2 years. They also go on to make an interesting point. It has the potential to be the Zudio of the lab-grown jewelry market. So that's why Kotak is fairly positive with regard to this foray into lab-grown diamonds. On Titan, well, they were cautious and they continue to reinforce that cautious stance. But they're given a direct and indirect effect. On the direct side, they said that in fact it could pose a bit of a risk to a couple of their brands. If you look at Carrot Lane, Mia, as well as some of their solitaires. So it could pose a risk to their studded part of their business, which is close to around 33% of their mix. So a third of the studded business could see some bit of a direct risk. The indirect risk could be the buyers could be in a state of flux. Should we be postponing our buying? That could be one factor which will weigh on diamonds. And also the other couple of factors is, we didn't have them correcting their diamond prices as much as the industry, and competition is heating up as well. Finally, just want to pull out a couple of points with regard to the promoter holding. Well, the promoter holding in Titan is close to around 53%. But Tamil Nadu Industrial Development Corporation, they hold a larger chunk in comparison to the Tata Group. While in Trent, the Tata Group in the last few years, they went ahead, they issued some shares to themselves, and they increased their holding from around 33 to around 37%. On the chairmanship, well, on Trent, you have the chairman coming in from the Tata Group itself, while on Titan, it's not from the core Tata stable, so to call it. And also for, a bit of history, on Titan, the current RBI governor was at one point of time the chairman as well of Titan. So that's the big headline over there. Trent moving into lab-grown diamonds. Some would say that, in fact, a bit of cannibalization for Titan, while others would say, well, it's diversification. They like it. Well, Harish, I wanted your view on this. Titan, there is, as it is, a big competition aspect that's playing out of them. But lab-grown diamonds, as a segment, it seems, there's a lot of interest. How do you view it?
Sure, Nigel. So, look, Nigel, without getting into specifics of either a Titan or a Trent, in general, how a market thinks about such changes is that if you look at any stock, if the range of outcome is widening, there's a disruption risk, and the outlook is deteriorating, on average, the multiple will shrink. And vice versa, if you look at some other businesses where the range of outcome is narrow, range of outcome could be in terms of earnings, the outlook is improving, the earnings looks fine, and there are option values, new option values, which is getting created. Market loves such stocks. So this is what is happening as we speak in some of these names, not necessarily in these two stocks, but in many, many other names across the market.
Nigel, personally, I want to do two things. I want to walk into a West Side store, and there is one in Fort. I don't know if they have those diamonds. Diamond. I don't know how much they cost.
No, I'll tell you how much they cost. I've done a lot of research on this. There's a little bit of silver that they mix with there. So it's between around 20 to around 29,000 approximately. Well, if you go to any other normal store,
which is for a 1 carat stone, right?
Yeah, it'll be close to around 65 to around 80,000. Why is that? Because, they use a higher amount of silver. This is all the research that I've done.
So it's cheaper in West Side?
It's cheaper
Lab-grown diamonds are cheaper in West Side.
In POME. P-O-M-E. Yeah.
And the other place I want to go to is a Zudio store, which I've not been to. And so Shilpa, our colleague, was telling us that the closest from where we are sitting is the Phoenix Market City in Kurla. And she said, you walk in, the mall is empty, but Zudio is packed.
Yeah.
I mean, the mall is empty, but the store is packed. So, I mean, it's...
No, they've managed to grow both the sides because, West Side is one brand, Zudio is the other. But they've managed to position to cater to all segments in a beautiful way. And the numbers are really speaking a story for themselves. Okay, on that note, we have to take a very, very quick break. Come back on the other side and all eyes will be on China over the weekend. Will that bazooka stimulus get delivered or not? We discuss this after the break.
In itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV.
Okay, welcome back. You're with us here on Editors Roundtable. Let's actually look ahead now. We've been talking about, of course, what's happened this week and some of the big movers in terms of stocks. Markets are once again, so on Friday, the metals index went up sharply in an otherwise, sideways kind of market. And the reason is that the markets are fixating on what will come out of China. Now, the last time markets fixated on China, they got disappointed, big time, right? I mean, out of those holidays in China, there was that NDRC meeting, press conference, and nothing came. Stocks fell, and that was a big disappointment. So the question is, will something come tomorrow? And the short answer in that sense is, if you are expecting a big headline number, bazooka number, which is what will excite markets, I think that perhaps one has to be a little careful about, because as we understand it, the Ministry of Finance, which is holding this press conference tomorrow, that is on Saturday, cannot announce a number, an expansion to the fiscal deficit, without another sort of organization, which is the NPC, and that meeting is only late October, later this month. So at best, what they can do tomorrow is essentially provide a guidance. Now, they may actually provide the guidance in such a way, because the authorities are also very aware that they don't want to let the markets to fizzle off completely and go into the dumps once again. So it may be that they provide a guidance which is enough for markets. We'll see. We'll have to see on Monday morning. But in any case, I think that'll be the big story, at least on Monday morning for the first couple of hours, depending on what comes out of China in that sense. Harish, I don't know if you want to weigh in here. I don't know if you're a fan of metals and commodities in general, but you do. But if you are, weigh in. Harish, are you there?
Sorry, Prashant, I missed you.
Sorry, no, metals and commodities on the back of this China thing tomorrow. I don't know if you have exposure or where you are in terms of views on the sector, but please weigh in.
Okay, so Prashant, what will happen is that in terms of any bazooka that has been talked about, if something comes through, there is a technical change that will happen. The emerging market index has a certain weightage, China weightage, that could move up. That's already moved up and could move up, which could lead to passive and some active flows moving to the market, which is what you saw last week too. Some of the changes which happened in India was purely technical in nature. So how we think about this change is whether this change is more technical in nature, or there are second order or third order impacts of this particular change or any other change